हमारा गेमिंग कंसोल कहाँ है यार?
मेरी पॉकेट में।
हमारा नया टीवी कहाँ है?
मेरी पॉकेट में।
हमारी वेकेशन कहाँ है?
मेरी पॉकेट में।
ये पॉकेट कहाँ है?
इजी पैसा सेविंग पॉकेट। अपने सेविंग गोल सेट करना है इजी। इंस्टॉलमेंट्स ट्रैक करो।
इजी नहीं यार,
क्या हुआ?
टाइमली पेमेंट्स पर रिवॉर्ड्स भी मिलेगा।
मेरी सेविंग्स मेरी पॉकेट में।
हेलो यार, वो कुछ हम पैसे चाहिए।
इसने भी मना कर दिया तो सिंपल, फौरी और इज्जत के साथ मिलेगा लोन। उधार मांगना मुश्किल है, इजी कैश से इंस्टेंट लोन लेना इजी है। इजी पैसा, लिव इजी।
पाकिस्तान की 2/3 ख़वातीन पढ़ी लिखी नहीं हैं और अपना निकाहनामा समझ नहीं सकती। मुस्तकबिल के इस अहम फैसले को समझना इजी पैसा ने मुमकिन कर दिया।
सुन तो जरा सखी कही जो हवा ने कही, रही जो सुनी अनसुनी अनकही।
सुन तो सही। इजी पैसा ऑडियो निकाहनामा। अभी इजी पैसा ऐप डाउनलोड करें या हेल्पलाइन पर मिस कॉल दें और सुने ऑडियो निकाहनामा 7 मुख्तलिफ ज़बानों में।
हक महर इसम टू टाइप्स शिक नंबर 7 गवाहानी और फाजत पारा कानूनी तौर हर जंजात तफसीलत दाखिल करावींदा है।
इजी पैसा ऑडियो निकाहनामा से मुस्तकबिल के फैसले समझना होंगे इजी। सुन तो सही।
थैंक यू।
आया है फिर से
खैर मुबारक।
दिन ये मुबारक है।
आदाब।
अस्सलाम वालेकुम।
Take a chill pill.
डब्बे में डब्बा, डब्बे में केक, मेरे मामू लाखों में एक।
ईद मुबारक, खैर मुबारक हो।
ईदी मिल गई ना? मिल गई।
आदाब। दाई करो कुछ ऐसा, भेज दो ना ईदी पैसा।
ईद मुबारक। ईदी
पूरा पाकिस्तान भेज रहा है और मिल रही है सबको ईदी पैसा से ईदी। ईदी पैसा, आपकी ईदी आपको मुबारक।
मामा, मेरी बीवी, मेरी अम्मी।
अभी तक तो मेरी बेगम संभालती थी और अब जब से बहू आई है दोनों मिलकर चलाते हैं।
घर चला लेती है तो बैंक अकाउंट क्यों नहीं? आए इस रवैये को बदलें क्योंकि जैज कैश है ना। डाउनलोड नाउ।
Are you ready for the revolution?
Embark on a journey with us. We're not just pioneers of Pakistan's fintech industry, we're the heartbeat of innovation. We are innovative.
Picture this, a redefined ATM experience that transcends the ordinary.
Our tech wizards have wielded their magic, achieving the seemingly impossible, the birth of iEngage.
iEngage has it all. Exciting UI, virtual teller, new transactions, contextual marketing, and even smartphone integration.
It's an award
award-winning game changer for ATMs.
Innovative isn't just a company, it's an award-winning engine driving the future. With pride, we have sold the highest number of self-service devices to over 35 banks for the past 5 consecutive years.
Our support system spans a whopping 796,000 square kilometers.
Nearly 10 times bigger than the UAE.
Imagine an agile team of engineers deploying 978 ATMs in just 25 working days and setting a record with 70 ATMs in a single day.
This journey didn't start yesterday. It began in 1987. Shaping our growth, not just rapid, but holistic. Experience the innovation. Join the revolution.
हमारा गेमिंग कंसोल कहाँ है यार?
मेरी पॉकेट में।
हमारा नया टीवी कहाँ है?
मेरी पॉकेट में।
हमारी वेकेशन कहाँ है?
मेरी पॉकेट में।
ये पॉकेट कहाँ है?
इजी पैसा सेविंग पॉकेट। अपने सेविंग गोल सेट करना है इजी। इंस्टॉलमेंट्स ट्रैक करो।
इजी नहीं यार,
क्या हुआ?
टाइमली पेमेंट्स पर रिवॉर्ड्स भी मिलेंगे।
मेरी सेविंग्स मेरी पॉकेट में।
हेलो यार, वो कुछ हम पैसे चाहिए। इसने भी मना कर दिया तो सिंपल, फौरी और इज्जत के साथ मिलेगा लोन। उधार मांगना मुश्किल है, इजी कैश से इंस्टेंट लोन लेना इजी है। इजी पैसा, लिव इजी।
मामा, मेरी बीवी, मेरी अम्मी।
अभी तक तो मेरी बेगम संभालती थी, और अब जब से बहू आई है दोनों मिलकर चलाते हैं।
घर चला लेती है तो बैंक अकाउंट क्यों नहीं? आए इस रवैये को बदलें, क्योंकि जैज कैश है ना। डाउनलोड नाउ।
पाकिस्तान की 2/3 ख़वातीन पढ़ी लिखी नहीं हैं और अपना निकाहनामा समझ नहीं सकती। मुस्तकबिल के इस अहम फैसले को समझना इजी पैसा ने मुमकिन कर दिया।
सुन तो जरा सखी, कही जो हवा ने कही, रही जो सुनी अनसुनी अनकही।
सुन तो सही। इजी पैसा ऑडियो निकाहनामा। अभी इजी पैसा ऐप डाउनलोड करें या हेल्पलाइन पर मिस कॉल दें और सुने ऑडियो निकाहनामा 7 मुख्तलिफ ज़बानों में।
हक में है इसम स्टीरियोटाइप्स शेक नंबर 7 पे हार गवाहानी और फाजत पारा कानूनी तौर खर्चन जात तफसीलत दाखिल करावींदा है।
इजी पैसा ऑडियो निकाहनामा से मुस्तकबिल के फैसले समझना होंगे इजी। सुन तो सही।
Are you ready for the revolution?
Embark on a journey with us. We're not just pioneers of Pakistan's fintech industry, we're the heartbeat of innovation. We are innovative.
Picture this, a redefined ATM experience that transcends the ordinary.
Our tech wizards have wielded their magic, achieving the seemingly impossible, the birth of iEngage.
iEngage has it all. Exciting UI, virtual teller, new transactions, contextual marketing, and even smartphone integration.
It's an award-winning game changer for ATMs.
Innovative isn't just a company, it's an award-winning engine driving the future. With pride, we have sold the highest number of self-service devices to over 35 banks for the past 5 consecutive years.
Our support system spans a whopping 796,000 square kilometers.
Nearly 10 times bigger than the UAE.
Imagine an agile team of engineers deploying 978 ATMs in just 25 working days and setting a record with 70 ATMs in a single day.
This journey didn't start yesterday. It began in 1987. Shaping our growth, not just rapid, but holistic. Experience the innovation. Join the revolution.
Adab. Thank you.
खैर मुबारक आदाब
Take a chill pill.
डब्बे में डब्बा डब्बे में केक मेरे मामू लाखों में एक
ईद मुबारक, खैर मुबारक हो।
ईदी मिल गई ना? मिल गई।
आदाब भाई करो कुछ ऐसा भेज दो ना ईदी पैसा
ईद मुबारक। ईदी
पूरा पाकिस्तान भेज रहा है और मिल रही है सबको ईदी पैसा से ईदी पैसा आपकी ईदी आपको मुबारक
गेमिंग कंसोल कहाँ है यार?
मेरी पॉकेट में।
हमारा नया टीवी कहाँ है?
मेरी पॉकेट में।
हमारी वेकेशन कहाँ है?
मेरी पॉकेट में।
ये पॉकेट कहाँ है?
इजी पैसा सेविंग्स पॉकेट। अपने सेविंग गोल सेट करना है इजी। इंस्टॉलमेंट्स ट्रैक करो।
इजी नहीं यार,
क्या हुआ?
टाइमली पेमेंट्स पर रिवॉर्ड्स भी मिलेंगे।
मेरी सेविंग्स मेरी पॉकेट में।
हेलो यार, वो कुछ हम पैसे चाहिए, इसने भी मना कर दिया तो। सिंपल, फौरी और इज्जत के साथ मिलेगा लोन। उधार मांगना मुश्किल है, इजी कैश से इंस्टेंट लोन लेना इजी है। इजी पैसा, लिव इजी।
मामा, मेरी बीवी, मेरी अम्मी।
अभी तक तो मेरी बेगम संभालती थी, और अब जब से बहू आई है दोनों मिलकर चलाते हैं।
घर चला लेती है तो बैंक अकाउंट क्यों नहीं? आए इस रवैये को बदलें, क्योंकि जैज कैश है ना। डाउनलोड नाउ।
पाकिस्तान की 2/3 खवातीन पढ़ी लिखी नहीं हैं और अपना निकाहनामा समझ नहीं सकती। मुस्तकबिल के इस अहम फैसले को समझना इजी पैसा ने मुमकिन कर दिया।
सुन तो जरा सखी, कही जो हवा ने कही, रही जो सुनी अनसुनी अनकही।
सुन तो सही। इजी पैसा ऑडियो निकाहनामा। अभी इजी पैसा ऐप डाउनलोड करें या हेल्पलाइन पर मिस कॉल दें और सुने ऑडियो निकाहनामा 7 मुख्तलिफ ज़बानों में।
हक महर ism two types शेख नंबर 7 गवाहानी और फाजत पारा कानूनी तौर खर्चन जात तफसीलत दाखिल करा वेंदा आहिन।
इजी पैसा ऑडियो निकाहनामा से मुस्तकबिल के फैसले समझना होंगे इजी। सुन तो सही।
Are you ready for the revolution?
Embark on a journey with us. We're not just pioneers of Pakistan's fintech industry, we're the heartbeat of innovation. We are innovative.
Picture this, a redefined
Assalamu alaikum, ladies and gentlemen. If I could please request you to start settling down, we'll be ready to start in about 5 minutes. Ladies and gentlemen, if I could please request you to start settling down, find your seats. We'll begin in about 5 minutes. Thank you. Bismillah ar-Rahman ar-Rahim. If I could please request all of you to find your seats, we are ready to start. Bismillah ar-Rahman ar-Rahim. Ladies and gentlemen, welcome to the 5th Digital Banking and Payments Summit, Digibap 2024, organized by Terabiz in partnership with Dukan. My name is Rabia Gharib, and I'll be your master of ceremonies for today. The theme chosen for this year's edition is Digital Supply Chain Finance Solutions, which is both relevant and very important. We are honestly honored to have you with us today. We begin our event with a recitation from the Holy Quran, followed by the national anthem.
Bismillahir Rahmanir Rahim. قل هو الله أحد الله الصمد لم يلد ولم يولد ولم يكن له كفوا أحد.
Thank you, and please be seated. Before we begin, I would like to extend my sincere thanks to our sponsors, partners, and supporters who made this event possible at such a short notice. A big thank you to Bank of Punjab, Euronet, Easy Pesa, Jazz Cash, Adelphi, JS Bank, National Bank, Innovative, Al Baraka Bank, JBS, Hisab Kitab, and Pak Oman, as well as other partners and supporters. Now, it is my pleasure to introduce an old friend, Mr. Hamza Wasi Hashmi, the CEO of Terabiz and the organizer of this event, to elude us with his opening remarks. Hamza?
Thanks a lot. Bismillah ar-Rahman ar-Rahim. Respected Chief Guest, Mr. Salimullah, Deputy Governor, State Bank of Pakistan. Esteemed speakers, panelists, and guests, all delegates, all sponsors and partners. I welcome you all to this 5th Digibap Summit. And I'm joined by a very dear friend of mine who is a partner of me for this particular edition of Digibap, Monis Rahman, who gave me this idea of organizing such an event. So, Monis, I would like to acknowledge your efforts. Thanks. So, very briefly about Terabiz, we have been organizing corporate events mainly executive education programs, conferences in Pakistan and in UAE. In UAE for the last 8 years, in Pakistan for the last 17 years now. And we have been through all times, and mashallah, despite all the gloom and doom scenario that has been that is constantly being painted, I, being an eternal optimist, have faith in Pakistan, and mashallah, every year Terrapis has made progress, barring those 2 years that when Corona devastated the entire almost the world. But we then evolved, and we also, it hit upon us that digital is the way forward, and there is no survival besides that. We awakened up to that reality quite late, but I think we have caught up, we have learned our lessons, and now we find that we had been talking about digital technology, but the way it has dawned upon us, the reality, even as a small outfit like Terrapis, the big banks and insurance companies and corporates and fintechs are here, definitely you realize the importance more. But going forward, there is no, I believe, a digital or a traditional way. It's all about living and making strategies in a world that is a digital world, pretty much. And Pakistan is not far too behind other countries. We go abroad, we see lots of things, and we see that our state bank, the regulator, the SECP are quite progressive and obviously facilitating. We have innovators, we have fintech entrepreneurs, we have progressive bankers who are providing cutting-edge solutions and services. So this conference is about a theme which is driven by, essentially, by State Bank of Pakistan and Ministry of Finance initiative, which is being implemented by Pakistan Bank Association under the great leadership of my mentor, Mr. Zafar Masood, and his able team. So we realized that banks, as a consumer, myself, we all had been talking about banks giving loans at exorbitant rates to the government and making profits and all that. But I think this conference will enlighten us that the SME sector, the agri sector, the rural sector, is given paramount importance by not only the Ministry of Finance and the State Bank of Pakistan, but also by the Bank Association, by the bankers. And in no small way, we have been supported by Pakistan Bank Association, and for that, I would like to give a big round of applause and acknowledge them to Zafar Saab and the Pakistan Bank Association. Actually, it was, and the idea was to hold a focused workshop, but then, वो कहते हैं ना, हम सफ़र मिलते गए, कारवां बनता गया, तो फिर ये चीज़ आपके सामने आ जा गई. So I would especially like to, welcome and acknowledge and thanks all those delegates and speakers who have traveled from different parts of Pakistan, and one or two of them have come from abroad to attend this conference particularly. And so I'm grateful to all of you. For example, Mr. Mudassir Akil is based in South Africa, and he heads the bank tech division of Africa's largest fintech, MTN network. And he is no stranger to Pakistan, so we were lucky that he prolonged his stay in Pakistan, and he's with us. Thank you, Mudassir Bhai, for being with us. His session will be after the lunch. We're so honored to have so many CEOs and bank presidents and executives. The chief executive of National Bank, Mr. Rahmat Ali Hasni, is here. Mr. Nasir Salim from HBL will be joining us. From Mashriq Bank, we have Mr. Humayun Sajjad, Syed Amir Ali from Mizan Bank, and we have from Islamabad the chief of HBL Microfinance Bank, Mr. Amir Khan. So they will all be enlightening you, and particularly we have support from JS, and Mr. Atif Malik is here, who also is heading the task force by PBA, and he will be also sharing his views here. I think Arabia has taken names of all our partners, and I and my team would be playing, recognizing you all over the day, and so thank you for that. This topic, I wrote something about it, but I think since the entire day we will have the deliberations upon it, so I'll rather skip. And in the end, I just once again thank my dear friend Monis for giving me, encouraging me to do this idea, and the Pakistan Bank Association. And with this, I take your leave, and I hope that this conference is a topical one, it's timely one, it's relevant, and will be useful for all the delegates and attendees, despite your stature, your experiences. I think as informed and as learned, as experienced the lineup of speakers we have, I think we equally have a distinguished audience today, a very well-informed audience. So we have created some space for interaction and Q&As. So we'll encourage you to do that in the hall where the time is allotted by the moderator, and during the break times as well. So tea will remain available outside. We'll break for lunch. Anyone who wishes to have some wants to refuel himself or herself may go outside anytime and get refreshment and all that. With this, I take your leave. Thank you very much. Thanks for being here.
Thank you, Hamza. We now move on to our opening speech, where we will have the opportunity to learn about the banking industry's perspective on strategic measures for enhancing digital supply chain finance and SME growth. Please join me in welcoming Mr. Zafar Masood, Chairman of the Pakistan Bankers Association and President and CEO of the Bank of Punjab.
क्या हाल है मोनिस? वो रहमत हस्नी साहब का आपने नाम लिया था, नज़र नहीं आ रहा है, उनका स्टाफ भी नीचे था सर, नज़र ही नहीं आ रहे हैं ना आप। ये नेशनल बैंक नज़र ना आए तो बड़ा प्रॉब्लम हो जाता है सर। लेडीज एंड जेंटलमैन, वी गो बैक अ लॉन्ग वे। सो सारे दोस्त ही यहाँ बैठे हुए हैं, मैं थोड़ा सा फ्रैंकली बात करूँगा उसमें। मसला ये है कि जो इन्होंने आज कॉन्फ्रेंस का डायलैक्ट रखा हुआ वो अंग्रेज़ी है, थोड़ा उर्दू में खुल के बात हो जाती है, बट इसीलिए मैंने शुरू में ज़रा रहमत साहब का पूछ लिया, क्योंकि वो नीचे काफ़ी रश था, नेशनल बैंक के काफ़ी लोग खड़े हुए थे इनके प्रोटोकॉल के, तो ये मुझे अंदाज़ा था कि ये आ गए हैं या आने वाले होंगे। जब उसे नाम लिया तो मैंने कहा मुझे नज़र नहीं आया। वेरी डिफ़िकल्ट जॉब, आई एम टेलिंग यू फ्रॉम माई ओन एक्सपीरियंस, डीलिंग विद द बैंक्स एंड गेटिंग देम टू गेट द वर्क डन वॉलंटरली विदाउट एनी कलर ऑफ मनी इज़ नॉट ईजी। सो नजीब इज़ डूइंग दैट। गाया साहब और उनके साथ नजीब के साथ जो है वो बहुत अच्छा काम कर रहे हैं। आतिफ भी यहाँ मौजूद हैं। So ladies and gentlemen, good morning and welcome to you all. So banking sector in Pakistan is navigating a cautiously optimistic approach, bolstered by expected improvement in economic growth and credit appetite due to inevitable IMF support and anticipated policy rate cut. The sector, well, यहाँ पर मुझे वो मुनीर साहब सामने बैठे हैं तो मेरे जहन में एकदम से कुछ शेर व शायरी भी आ जाती है। वो कहते हैं ना, पेविस्ता रहे शजर से उम्मीदें बाहर रख। सो व्हेन रेट कट की बात आई तो मैंने सोचा कि ज़रा थोड़ा सा इसको लाइटर मूड में भी ले लें। द सेक्टर रिकॉर्डेड a 32% growth in net assets fueled by robust financial health. However, I must admit that I am not happy and in fact somewhat embarrassed to report that the outstanding SME financing merely grew by 0.4%, even though they represent 40% of Pakistan's GDP. There are multiple reasons for the lack of growth in SME financing, but access to credit seems to be the big one. Banks estimated to lend less than 2% of total SME. I know somebody can dispute that, because the stated number is 4.5 million, but that number is pretty old. That's 2005 or 2009 number. That, in our opinion, that number has gone up substantially up, if not more than doubled. So that's why I think that we are merely servicing 2% of the total SME, highlighting an urgent need for more tailor-made products using technology and employing tools like digital scorecards based on proxy data. And in this context, I just have had a discussion with Farooq on this. Najib, yourselves, and Atif, you, and we will also drag in Nazir and Yaya in this as well. And we will have a meeting with with Munir Saab and Farooq to see how we can capitalize on the, the gold data that they are sitting on in Jazz and how that can be helped in boosting their financial services side and also helping the entire industry at the same time. The readiness to adopt digital financial services in Pakistan is mixed. Financial literacy and ability to send or receive a text message are the lowest indicators, while basic numeracy and availability of necessary ID are the highest. Gender gaps exist across all indicators with significant disparity in financial literacy and SIM ownership. Mobile money wallets, however, increased from 9% in 2020 to 19% in 2022, with the urban areas seeing sharper increases from 11% to 26%, especially offering an opportunity for SMEs to take the advantage of this development of embracing digitization. The good news, ladies and gentlemen, is that the digital adoption profoundly enhanced financial inclusion in Pakistan by introducing path-breaking initiatives like State Bank of Pakistan's Asan mobile account or AMA, by providing an interoperable USSD channel and for branchless banking, needing no smartphones or internet. The AMA scheme has onboarded over 5.5 million wallets, 44% of which belongs to women alone. AMA has recently been appreciated by World Economic Forum, which is extremely heartening and encouraging, particularly in the context of the subject of today's conference. कोई भी हमारे बारे में अगर इंटरनेशनल गुड न्यूज़ आती है तो बड़ा दिल बड़ा हो जाता है. तो मैंने गुजारिश की थी हमज़ा से कि अगर हम वो it's less than 1 minute का क्लिप अगर वो शो कर सकें वर्ल्ड इकोनॉमिक फोरम का.
ये मेरे पास क्लाइंट आई थी, उसने मुझे पेमेंट देनी थी तो उसके पास कैश नहीं था. तो उसने कहा आप अपना अकाउंट नंबर दे दो. मैंने कहा नहीं, मैं इतना टाइम नहीं होता कि मैं बैंकों में जाऊं और लंबी लाइनों में खड़ी हूं. तो मैंने कहा नहीं, आप मुझे कैश दे देना. तो उसने कहा नहीं, इसकी आपको ज़रूरत नहीं, अब तो आसान अकाउंट आ गया है. बहुत आसान हो गया अब तो मेरे लिए. पहले मुझे सोचना पड़ता था मैं पोलर बंद करूंगी, घर से बाहर जाऊंगी. अब मुझे ये सब कुछ नहीं करना पड़ता. अब इजीली सारे काम मेरे हो जाते.
जैसा कि हमारी विलेज की औरतों के लिए बैंक का जाना बिल्कुल गैर जरूरी.
Furthermore, SBP's licensing and regulatory framework for digital banks, introduced in 2022, facilitates the establishment of exclusive digital banks like Mashriq, which is representing in this conference today, which are expected to offer tailor-made financial products and services that cater to the unique requirement of various customer segments, including SMEs and individual in remote areas. वैसे तो हम बैंकर्स जो हैं वो कोई मौका हाथ से जाने नहीं देते. शुक्रिया अदा करने का स्टेट बैंक का, तो हम तो हैशटैग चलाने को भी तैयार हैं, शुक्रिया स्टेट बैंक ऑफ पाकिस्तान. बट जेन्युइनली ऑन दिस टू थिंग्स, शुक्रिया स्टेट बैंक ऑफ पाकिस्तान, एंड सिंस सलीम साहब इज रिप्रेजेंटिंग स्टेट बैंक, शुक्रिया सलीम साहब. Overall, digital assumption is dismantling barriers to financial inclusion in Pakistan. This metamorphosis brings more people into formal financial system and drive economic growth, poses an excellent opportunity for digital supply chain finance, or DSSF, as you know this conference has briefed it, to streamline and enhance financial transactions within supply chain, offering substantial benefits to SMEs. Recognizing this need and potential, the State Bank of Pakistan in June 2024 mandated banks to develop, implement DSCF solutions within 6 months, emphasizing the need for increased SMEs access to digital and financial payments. Salim sir, तुसी दौड़ा लवाती है ना बैंका दी वास्ते, but that was much needed really. Thank you very much. Partnership between banks, fintechs, and other technology providers can expedite the rollout of DSCF offering, making them accessible to SMEs relatively quickly. And this conference has just come at the right time in this particular context as well. So Monas, your initiative and Hamza's initiative is most appreciated. SME in emerging markets, particularly in Asia and Latin America, face longer cash conversion intervals than those in advanced economies, necessitating substantial working capital demands. Several developed and developing countries have made significant strides in digital supply chain financing through proactive banking initiatives and regulatory frameworks. These initiatives considerably benefited in enhancing Tier 2 and Tier 3 SMEs, which were earlier confined to large corporations and their Tier 1 suppliers. We've seen that in Pakistan too, by the way. As you know, there was a pilot which was launched a few years back at the State Bank also in the sugar industry. But that never permeated down to Tier 2 and Tier 3. So with these kind of initiatives, that could go down to Tier 2, Tier 3 as well. A few examples from across the globe. In China, GD.com and Alibaba have provided over $100 billion in financing to SMEs through their digital SCF platforms and reduced financing costs by up to 30%. The Reserve Bank of India introduced the Trade Receivables Discounting System, TREDS, a platform that facilitates financing M and SMEs trade receivables from corporate buyers. Since its initiation in 2017, platforms like TREDS, RXIL, and M1 Exchange have collectively discounted invoices worth over $6 billion in India. In Singapore, Monetary Authority of Singapore, or MAS, has been instrumental in fostering a conducive environment for digital SCF. The Financial Sector Technology and Innovation Scheme introduced by MAS has allocated over Singapore dollar 225 million to support financial innovation, including digital SCF. Yoko in South Africa, launched only in November 2022, provides general working capital lines to over 150,000 merchants, with a significant portion of repayments being automated through electronic sales only. The National Banking Securities Commission in Mexico has facilitated the integration of fintech solution into traditional banking. There was something more to discuss here as well, but this clock is hounding me, so I will skip some part of it and talk about more important aspects. Even in Mexico, over $1 billion US working capital financing was extended to SME. The similar thing happened in Germany also. I'm skipping that too. But Pakistan, ladies and gentlemen, stand at a unique crossroads with substantial opportunities and challenges in enhancing digital SCF and SME growth. One of Pakistan's unique strengths is its high smartphone penetration and the widespread use of wallet mobile wallets, which can provide micro loans based on transaction histories and digital invoicing, reducing the dependency on traditional banking infrastructure and expanding financial inclusion, which I earlier alluded to when I referred to Farokh. And we can tie up with our partners like MasterCard and Euromoney. Gaya Saab is also here. See how we can make it more automated. This has been really a revolutionary offering in Kenya by M-Pesa. I am pleased to report to you. अच्छा ये मेरा टाइम ख़त्म हो गया मगर मैं स्ट्रेच कर रहा हूँ 5 मिनट और सलीम साहब आपकी इजाज़त से I am pleased to report to you that under the leadership of Deputy Governor Salimullah Saab, we as the PBA with SBP Power Division and its Energy Efficient Solution Implementing Entity NICA are currently working on introducing end-to-end digital financing solution for replacement of energy efficient fans and at source recovery of loan repayments through electricity bills. This will be a pioneering structure which will be used subsequently for solar panel financing. Nofal is sitting here, he is already working on it, and other much needed energy efficient propositions. The finance minister recently mandated PBA to work with SBP to enhance financial inclusion in agriculture and SME sectors, specifically leveraging technology and existing digital platforms. While there are a number of initiatives to be pursued, 49 in total, by the way, by the SBP Steering Committee and the 3 dedicated task forces of priority sectors, that is SME, agriculture and digital, the top 2 most impactful initiatives cutting across all 3 priority sectors are, number 1 is the development of SME Environment and Performance Index, which was necessitated as the last Census of Economic Establishment was done in 2005, and SMEDA's SME baseline survey was conducted in 2005 by the economic establishments, and SMEDA in 2009 based on sample size of merely 1,300 respondents. The proposed SME index will consider not only the business environment, but also capture actual performance figures of SMEs. This data will then be used to develop a digital scorecard for the entire industry to help tap into funding SMEs primarily operating in informal sector. The setup of similar performance index for agriculture sector will immediately follow this. The second one is the setting up of a private equity fund for investment in fintech startups to develop applications and use cases basically to migrate cash-based transactions to digital ones and help reduce currency in circulation, which currently stands in the north of whopping 8.5 trillion rupees, driving financial inclusion and economic growth. We have the successful examples of Zarzarat, Sprint, which, Monas was also a beneficiary of, and Salim Saab patronized it by attending the Singapore FinTech Festival. And Google Cloud startup competitions are a reference in this space. This Saturday, there is an event about Google's cloud startup, result announcement as well. To enhance digital supply chain finance and SME growth in Pakistan, a multifaceted approach combining regulatory support, technological adoption, cyber security, hygiene and awareness, and I want to highlight and emphasize on this, cyber security, hygiene and awareness, and strategic partnerships is absolutely essential. A regulatory push jointly from SBP and SECP mandating large corporations going beyond the realm of banking and government agencies to participate in digital SCF ecosystem by ensuring their payables are processed through digital platforms like China, where e-commerce giants like Alibaba have created extensive digital ecosystem to support their supply chain. Investment in digital infrastructure is critical. The government, in collaboration with private sector through my favorite, the private-public partnership mode, should prioritize expanding internet access and improving digital literacy amongst SMEs. This will ensure that even the smallest businesses can participate in digital economy, as seen in the successful models of Singapore and Mexico. Implementing a robust regulatory framework, encouraging and incentivizing innovation while protecting shareholders is crucial while developing innovative SCF solutions. SBP's recent directive vis-à-vis digital SCF solution to be launched within 6 months highlight the urgency and importance of this transformation. Learning from India's success, its goods and services tax network platform, Pakistan could implement a centralized program for invoice registration and tax compliance, facilitating easier access to SCF for SMEs by providing verifiable data on business transactions. The high degree of informal economy activity in Pakistan necessitates innovative approaches to bring unregistered SMEs into the formal financial system. Incentives for formal registration, such as easier access to credit and lower transaction costs, can encourage compliance. We must agitate to the government to consider Nadra as a utility rather than a business entity with the objective of making profits. Unlike as in the case of UPI in India, which only covers its cost for the larger good of digital advocacy and economic prosperity. Collaboration with fintechs and leveraging big data analytics, financial institutions can assess the credit worthiness of SMEs better, particularly in informal businesses, providing a pathway to formalization and growth for the country. Thank you very much for your attention.
ज़फ़र साहब बहुत बहुत शुक्रिया और चूँकि आपने ये उर्दू का सिलसिला शुरू किया है मैंने कहा मैं भी थोड़ा सा कोशिश कर लूँ. But next we have our the chief guest address, and we are privileged to have with us the Deputy Governor of State Bank of Pakistan, Mr. Salimullah. He is in charge of financial inclusion, digital financial services, information technology, and innovation at the State Bank of Pakistan. Mr. Salimullah will share SVP's vision for enhancing digital supply chain finance. Ladies and gentlemen, please join me in welcoming Mr. Salimullah.
Bismillahirrahmanirrahim. Assalamu alaikum and a very good morning, Zafar Saab, Hasni Saab, Murray Saab, Beg Saab, Asif Shah Saab, Atif Saab, Najeeb Saab, Atif, and so many other colleagues, friends sitting here. It's a real pleasure, and I'm saying with the core of my heart, it's a real pleasure to be here. And let me congratulate Hamza and Moniz, and also Zafar Saab for taking this initiative. And this is being held at a very, very pertinent time that we as the regulator and the industry is pushing towards tapping this opportunity that is available in the form of improvements in the digital technologies. SME, we all have been recognizing and saying, have been the most critical segments of our economy, contributing, as Zafar said, about 40% in the GDP, over 25% in the export earnings, over 80% in non-agricultural employment, and one of the major sources of employment creation in the country. But unfortunately, this has been the least important sector for the bankers. And the number shows that still we are extending less than 5% of the funding to the SMEs. And that 5% is from an overall financing that is being extended by the banking system. And you would be surprised, not surprised, but you would know that overall pie is also very small. And that pie is less than 11% of our GDP. The total credit to GDP ratio in Pakistan is less than 11%. That tells a story that not only the SMEs, but the industry overall, the real sector overall, has not been benefited by the banking system. So we must see that. So about a month back, we were having a celebration or a seminar on account of the MSME Day, probably on 27th of June, where Hasnisa was there and some other colleagues were there. So still, we could see that we have been having all these discussions with respect to the very, very low contribution of private sector or the banks in the SMEs growth. So, why I gave the reference of that event, that in that event I also said that it's our collective failure, that we have not been able to extend sufficient funding to the SMEs and to the real sector as a whole. So we will have to accept that failure, and me as the central banker also accept that failure. This is the failure on the part of the central bank as well, that we could not push the industry and could not make sure that the industry is developing its portfolio. But we have to transform this failure into a success. To me, there is no option but to succeed. And we'll have to develop a very robust, competitive, customer-friendly, SME-friendly financial system in the country. And how can we do that? There are some very positive initiatives. One led by Atif, the task force under the leadership of very able Zafar Saab, that they have developed very, very pertinent recommendations to increase the flow of funding to the SME sector. And a number of those recommendations pertain to the government, and we have already requested the government to initiate working on these recommendations and implementing those recommendations, and that include the SME census, that include the revised definition of SMEs, and that includes development of some sort of credit coverage mechanism for the banks while they would be lending to the SMEs. And another development that even happened before the establishment of the task force, you would have seen the SVP strategic plan. And in that strategic plan, which is a 5-year plan that will be culminating in 2028, we have envisioned that we will at least be doubling the existing size of outstanding SMEs in the country. The existing size is around 540 billion rupees. So we will be doubling that, inshallah, with the collaboration and partnership of the industry. We will be doubling that to 1,100 billion rupees when we will be completing the strategic plan. And this I'm talking about the outstanding levels, not the disbursements. Disbursements, round the clock chalti rehti hai na? There are lines available. At times you would see the disbursements are much higher than the outstanding levels, but we are talking about the outstanding levels. And then we have envisioned that we will be having at least 4 times increase in the outstanding borrowers. Currently, they are hovering around 170 to 180,000 SMEs. They are having access. And we have plans that, inshallah, we will be increasing it to around 750,000 SME clients by that year end. And for that to achieve, what is the strategy? Kya karna hai uske liye? One thing that I emphasized in my earlier discussion as well, that first and foremost thing is that having that belief that SME is a real profitable business line, I can have sustained access to cash flows and profits while I will be developing my SME portfolio. So that is the first thing, and that we have required in our letters, in our communication to the banks. They have already submitted their plans, and that primarily focuses on that this is the business line, and share with us your plans, your strategies, that how you're going to develop that business line so that it could ensure sustained stream of revenues for the banks. ये जो ब्लिप्स आई है ना आपके पास पिछले 2 साल में tons of profit banks have made, ये सब ऐसे नहीं रहना. It's a temporary phase. The interest rates were very high and the government funding needs were very, very large. So that's why the banks have been able to make tons of money. But still, to make sure that you continue earning tons of money, you'll have to invest in the real sector. And for the real sector, it is the priority sectors like SMEs, like agriculture, like IT, and for which Zafar Saab is leading those task forces which are developing those recommendations. We will also be transforming ourselves to make sure that the regulatory framework is really conducive. It's not that just a lip service that यहाँ आके तकरीरें कर दी हैं उसके बाद जाके वही आपकी जो पुरानी डगर है उसी पर चलना है. तो it's not that, ऐसे तो नहीं चलेगा. So we have to admit that the regulatory framework should also be conducive and supportive. And one thing let me emphasize here very specifically and explicitly. We will have to move away from this subsidy culture. We'll have to develop this sector on real commercial lines, on commercial basis. ये जो clutches of subsidy है, it has not enabled us to develop this sector in the last 70-75 years. If it would have worked, we would not have been sitting at 170,000 borrowers out of more than 6 million SMEs operating in the country. We would not have been having the outstanding levels which are less than 4% of the total financing. So that subsidy culture is not a solution, that is clear. But one thing that we admit, and we have collaborated and partnered with the banks to request the government that yes, there is a need for risk coverage. There should be risk coverage available to the banks so that they should feel more comfortable in lending to the SMEs. So Alhamdulillah, that recommendation has also been accepted, and a risk coverage facility for which budgetary allocation has also been made. We are just waiting for the formal notification. It was done by the ECC, and I believe that it would also have been ratified by the cabinet as well. So that risk coverage facility is also coming, and that is across the board. It's not specific. Any fresh loan given to the SMEs from July onwards, 1st July onwards, 20% coverage in case of the smaller enterprises and 10% first loss coverage in the case of medium enterprises. It has been agreed, and allocation for the current year has been made, and also the scheme that we had sent to the government, it has also been approved. So we will be notifying that very soon, inshallah. There are numerous other things, but let me come to here. The slide is that time is up. So one of the most critical aspects of this strategy is the leveraging technology. If we can leverage the technology, only then we can meet these ambitious numbers that I have just discussed. So leveraging technology so that we can leverage the technology to reduce the transaction cost for the SMEs, to make things simpler, efficient, convenient for the SMEs, and to make things simpler and convenient for the banks as well, because they also have the transaction cost. So that will, among others, the conducive regulatory framework, the risk coverage, the engagement with the banks, among others, one of the most prominent initiative would be that how can we leverage the technology? Because without leveraging the technology, this goal cannot be achieved. And this event is very, very pertinent about this. And Zafar Saab has given numerous examples across the globe that how the leveraging of technology helped in improving the SME's access to the financial services. We also have a not very a large number, but still we have number of good stories, success stories. One success story is sitting just Mr. Munis Nahman, who is one of the organizers of this event. Because the kind of platform the people have developed, Dukaan, which is something that is providing that hope that yes, we can, inshallah. And then one initiative that we conceived well before the RAS, I will be coming to the RAS in a moment. Way back in 2019, we announced a challenge fund. Come up, and that was a challenge fund whereby we invited proposals from the industry that come up with a solution that how can we leverage the technology to improve the funding to the SMEs, to tap the supply chain financing sector. And out of that challenge fund, one institution that won that challenge fund was Hubble, and they came up with a platform, Visakh. That is also a success story. Then there are others as well, Cash Now and some others which are working that are providing, I think, state-of-the-art solutions, particularly for the digitization of the supply chain. And supply chain, as per one of the studies done by IFC, it is valuing around $18 to $20 billion. And if we can tap, say, 50 to 60% of that supply chain in the next 5 years, that will enable us to achieve our target. So that supply chain, to me, is a real low-hanging fruit. And we must collaborate and partner so that we could tap and we could have our hands on this low-hanging fruit. And for that purpose, as Zafar Saab said, that we have been evaluating various options, and then after consulting PBA and the industry, we came up with that instructions that let's have a digital supply chain financing solution within 6 months. And number of banks, about 5, 6, have already initiated the digital supply chain financing. And the response is pretty good. The default, they are funding to the new to the bank customers. And still, the default is just one in last 2 years. And these are the one who had never accessed the banking services. And that gives you a lot of hope and confidence that these platforms, inshallah, would work. And there are numerous banks which have already started developing those platforms. And the flexibility is that you can develop your own mechanism. That is your call. Or you can partner with like initiatives like Dukaan, like Visakh, like Cash Now, and numerous others. That is your call. That how you can tap that very segment. Then Zafar Saab also highlighted, my apologies, I have taken a bit more time. Digital banks, Humayun is sitting here, so 5 digital banks we have given in principle approval, and they are in the process of developing their infrastructures. They are also expected to come up with very innovative products that will enable us to push our digitization efforts. And that will help not only in addressing the SME finance development issues, but it would also address the issue of currency in circulation. If we can bring down the currency in circulation, which is right now 35% of the deposit base. So in the next 5 years, if we can bring it down to 25% of the deposit base, so that will add about 2 to 2.5 trillions of liquidity in the banking system. And that again would enable the banking system to extend these or to use this liquidity for funding the real sector, the SMEs, the agriculture, the industries, etc. And lastly, let me come towards, I'm sorry, another point, EMIs. It would not be fair if I don't discuss the EMIs. Although they have taken some time, but now they are also taking the pace, and they are developing and offering the digital wallets, which are also, I think they would also be contributing in our overall digitization efforts. And this partnership, this collaboration will have to be promoted. We'll have to promote those synergies so that it's not necessarily that I would be doing each and everything by myself. I should tap the strengths and opportunities that are available with my partners and with the stakeholders. Now, lastly, with respect to RAST, to me, this is one of the most effective, most impactful interventions that have been made. And that is going to transform the overall digital landscape in the country, and the vision of developing a digital ecosystem that will be, this RAS will be the pivot of that digital financial ecosystem. You know, we have about 37 million RAS IDs. We started in 2021, over 37 million RAS IDs. We are processing over 2 million transactions every day, valuing about 60 billion rupees. We have so far processed about 15 trillion rupees of these transactions. And you know, the first trillion, it took us about 360 plus days in completing the first trillion. And the last trillion, it took us just 21 days. So it is keeping the pace. We started the initiative of P2M, which is a very, very, I think, game changer. As when I met Monis in Singapore, so he said the game changer, I fully agree with him, it's a game changer, inshallah. We initiated P2M in September 2023, and by now we have over 220,000 merchants which have been onboarded on RAST. And that would sort of, to me, it's a pretty good achievement, because it's not that far that when we have initiated. And the initiatives like OneLink, if someone is sitting from here, that they initiated that OneGo, and that OneGo is aggregating the aggregators. And that is also providing the aggregators, the relatively smaller aggregators, they are working at the ground level and onboarding the customers, having the due diligence, CDDs, all these things. And then hooking them and plugging them with the RAST through OneLink. So that is also a big, big hope. We are also evaluating the proposals with respect to our open banking initiative. And this RAST platform has made it more and more easier. We are evaluating the proposals, say, for example, utility companies. Through this open banking platform, they would not be needing any intermediaries. They would just be using that platform and having all their bill collections, etc. So there are numerous initiatives which are going on, which are in line with our vision of developing a digital ecosystem, and that would require collaboration, that would require partnership amongst the regulators, State Bank and SCCP, amongst the industry players, PBA, and let me say this, gives me a lot of comfort and confidence that the current leadership is taking a very proactive sort of a stance towards helping and supporting not only the industry but also the regulator so that we could achieve our common goals. I'm really grateful and thankful to all of you for listening to me. I don't know whether I was making sense or not, but my thanks and gratitude and congratulations to Hamza, to Monis, to Zafar Saab, and to all the colleagues for establishing this thing, for organizing this event. Thank you very much.
बहुत बहुत शुक्रिया सलीमुल्लाह साहब. Since we have the opportunity to have such an eminent crowd of central bank figures also, as well as commercial banking. We have the opportunity to ask both our speakers some questions. We have time for maybe 2 or 3 questions, if we could circulate the mics around. If you have a question, please just raise your hand, we'll send the mic. Please do identify yourself, and if I could request you to keep your questions brief so we can take, well, as many as time will allow. There's a question in the front here.
बड़ा खतरनाक सवाल आ रहा है ये शाह साहब आप बाद में पूछ लीजिएगा हमसे नहीं प्लीज माइक जी
First of all, congratulations to the organizers, Hamza, and thank you for excellent start, Salimullah Saab and Zafar Saab. So, मेरी request and सवाल यही है. I think obviously SMEs are too important, far too important for the economy. But I would suggest that, you know, in 21st centuries, SMEs should be the startups. So when we add the word new and young and ideas and technologies, you know, tech-enabled new SMEs with brilliant ideas will actually make them startups. So I would humbly submit to the State Bank and to the banking sector to take leadership of this risk-based SMEs and promote that creating that ecosystem will really transform Pakistan, really. Otherwise, we are left behind. So I just wanted to, you know, give this provocative idea. I know it's risky, and banks are risk averse, but I think that banks are also warehouses of risk. So we need to take, you know, the new world, you know, up front. So, and one suggestion is that, you know, we don't have in Pakistan any accelerator. We have incubation centers, no accelerators like Y Combinator, which has changed the world. So if, you know, most important people are sitting in this, I think, hall, and if you guys take the leadership of these few things, we can change Pakistan. Thank you.
There's a question right next to Ji sir.
Thank you. My questions to both the learned speakers, Salim Saab and Zafar Saab. And it is based on my practical experience and been dealing with the SMEs for a while from Federation of Pakistan Chamber of Commerce and Industry. So do you agree still the issue for the growth of SMEs and access to finance? There was time when it was similar prudential regulations for corporate sector and SMEs. We, through the State Bank of Pakistan, initiated a dialogue, and after some time, there was a separate regulation, prudential regulation was formed for the SMEs, which was based on cash flow lending by the banks. But actually, still the bank insists the collateralizations of the assets, which the SMEs don't have, because they are mostly on the rented space. And to me, it is one of the serious issues for the growth of SMEs in Pakistan. So kindly look at into either the banks to be advised that there is a guaranteed some percentage of every year, some amount to be kept or allocated for the SMEs financing, and that is to be on cash flow basis, not on collateral basis. Thank you so much.
Zafar Saab, Salimullah Saab, if you'd like to respond to both the comment and the question.
Thank you so much, Asad Saab and Beg Saab, for these very pertinent questions. One, first question with respect to the startups. You'd have listened to Zafar Saab's speech that one of the initiatives that is being taken by by BBA is establishing this sort of a private equity fund to help these startups. So you would see that not only in Pakistan but globally, there are special funds, there are special initiatives, there are special institutions which fund these startups. Normally, the banks are not having that sort of a infrastructure and orientation that they would be funding directly to the startups and to the venture capital funds, because the banks are dealing with the public money, and they have their own contribution is just 5-6%. 90-95% is the public money that the bank is managing. That public money has to be properly secured and the risks has to be covered. But that doesn't mean that we must not help and support the startups. The development of this, Zafar Sahab would be divulging on that. It's a very positive initiative. Then Farooq Sahab is sitting here, that we must promote non-banks, the private equities and venture capital funds, those funds attracting the investors having that risk appetite, so that if there are ups and there are downs, they will be able to tap the ups, and they should be able to absorb the losses, because the risk appetite is compatible with that very sector. One thing that I would like to conclude my comment on this is that this doesn't mean that banks should not increase their risk appetite. There is a need for the banks that they must increase their risk appetite, so that coming to the next question of Beg Sahab, that cash flow based lending could be ensured. This mindset that I will also only be giving the collateralized lendings, that obviously there will be collaterals as well, but there should be cash flow based lending based on a very positive initiative abhi jo Zafar Sahab ne baat ki with respect to that development of that social, environmental and performance index of the SMEs. And that on the basis of that, they will be able to develop a scorecard, which is a very, very positive development. And that will, inshallah, lead to that very area. And lastly, I just touched upon the risk coverage that we have already put in place for the SMEs. So that risk coverage should also give that comfort to the banks and improve their risk appetite, because first loss coverage is already available to them. Zafar, please.
जी शुक्रिया सलीम साहब। एक तो सलीम साहब ने शुरू में फरमाया था डिसअपॉइंटिंग, मैंने भी एम्फसाइज़ किया था ऑफ एफएसएमईज़। देखिए जो ट्रैवल ऑफ चेंज है वो शुरू होता है रिकग्निशन से। कम से कम हमने आज खड़े होके ये बात तो रिकग्नाइज़ की है कि देयर इज़ अ नीड टू रैम्प अप एंड मेक मोर एफर्ट्स विच वर लैकिंग इन द पास्ट। बात ये है बड़ी सिंपल सी कि वी रिक्वायर अ साइकिक चेंज। थोड़ा हमें जो है वो ज़्यादा अपने दिमाग को चेंज करना पड़ेगा और एक्सेप्ट करना पड़ेगा कि ये रिस्क हमें लेना है, जिस तरह फरमा रहे थे शाह साहब भी। और वो प्रॉब्लम ये है कि कुछ वो होता है बाय सेल्फ रियलाइजेशन, कुछ होता है वो जिस पे जब आपके सर के ऊपर पड़ जाती है तो कोई चॉइस नहीं होता। तो हमने वो दिन भी देखे हैं व्हेन आई वाज इन सिटी बैंक के वी यूज्ड टू रन रियली फॉर द बिजनेस अक्रॉस द सिटी, और बड़ा मुश्किल हो जाता था, इनोवेशन लेके आनी पड़ती थी। वो अभी गवर्नमेंट फाइनेंसिंग की वजह से बहुत बढ़ गई है, और जिस तरह सलीम साहब फरमा रहे थे कि रेट की वजह से भी बहुत बढ़ गई है। It's a matter of time, inshallah ta'ala, when it will come down, and then we have to put our act together. So might as well start now to be prepared for that kind of situation. And that's where, the industry is heading to. सलीम साहब ने उम्र बात ये की थी पार्टनरशिप्स की, मैं उसको रीइंफसाइज करना चाहूँगा। हम बैंकर्स की थोड़ी सी साइकी ये होती है कि हम we think that we can do everything and we would like to do everything ourselves. मेरी गुजारिश ही होगी कि आप थोड़ा सा ओपन माइंडेड होके हम लोगों को डिजिटल बैंक और टेलकोस के साथ अभी टाई अप करना पड़ेगा, जिस तरह सलीम साहब फरमा रहे थे। अदरवाइज आई एम टेलिंग यू दे विल गिव अस रन फॉर मनी, नॉट राइट अवे but in the due course of time. So might as well start working on them now to be part of that ride of growth that these businesses will face in future. That's why earlier मैंने हुमायूं का भी नाम लिया और फ़ारूक का भी 2 दफ़ा नाम लिया, बिकॉज मेरे ख्याल से वहाँ बहुत बड़ी अपॉर्चुनिटी है दोनों तरफ, एक तरफ डेटा की तरफ और दूसरी तरफ डिलीवरी की तरफ। शाह साहब, आपने जो बात की थी वो बिल्कुल दुरुस्त है, और वो इत्तेफाक से बेग साहब की बात से बिल्कुल वो कोलैबोरेट होती है। हमारी साइकोलॉजी आज भी जो है ना वो बैंकों की वो बहुत ज़्यादा कोलैटरल ड्रिवन है। अब वो आहिस्ता आहिस्ता शिफ्ट हो रही है बाय द वे विद द पैसेज ऑफ टाइम, बिकॉज वी हैव लर्नड इट द हार्ड वे। We learned it the hard way. Even lending against the government guarantee had warranted a restructuring that we are all lurking our wounds with right now. इत्तेफाक से आपके दोनों राइट और लेफ्ट पे दोनों वो हजरात बैठे हैं जो मेरे साथ मिलके उसको हम लोग बल्कि बीच में भी बैठे हुए कि हमें वहाँ पर भी ये रियलाइज़ करना चाहिए कि अगर कैश फ्लोज जो है वो हमें नज़र नहीं आ रहे हैं तो गालिबन हमें इतना एग्रेसिव होने की ज़रूरत नहीं है। आई थिंक वो एक साइकोलॉजिकल, जैसे मैंने कहा कि एक थोड़ा सा मेंटल चेंज की ज़रूरत है। वी हैव टू वर्क ऑन दिस एंड विद द पैसेज ऑफ टाइम, देखिए जब वो सर पे पड़ेगी आके तो खुद ही ठीक हो जाएगा। वी हैव ऑलरेडी बीन थ्रोन इन द डीप एंड। आपने एक्सेलरेटर्स की बात की, बहुत अच्छी बात है। मुनीर साहब और नजीब एंड माई सेल्फ वी आर वर्किंग ऑन सेटिंग अप अ प्राइवेट इक्विटी फंड, नॉट अ वेरी लार्ज वन बट टू बिगिन विद, एक स्टार्टिंग पॉइंट ज़रूर बन जाएगा। उसके अंदर हम लोग कोशिश ये कर रहे हैं कि हम किसी दरस व तदरीस की के इंस्टीट्यूशन के साथ टाइप कर लें। मैं नाम नहीं लेना चाहता जान के, क्योंकि अभी हमारा उनके साथ कोलैबोरेशन नहीं हुआ। अगर वो हो जाता है तो जो एक्सेलरेटर वाला पीस है वो NIC के थ्रू विल बी एबल टू ऑफर एंड टेक इट फॉरवर्ड। सो वो दैट्स वेरी मच ऑन द कार्ड्स एंड थैंक यू वेरी मच फॉर योर सजेशन ऑन दिस।
Is this good?
Just one. There's actually just one question. He's had his hand up for a while. But if I could request this to be the last question, I'm really, really sorry. I'll call on you at a later time. If we could just make it very brief, sir.
Yeah. My name is Faisal. I'm from Hugo Bank. I have a question from the panel that we're talking about unlocking open banking, right? So, but how are we seeing unlocking open banking without a clear direction about the data ownership? Because the ambiguity on data ownership is quite similar. So, any thoughts on that?
If I could request the panel, just a few brief thoughts, and then we move on.
You see, this data is owned by the consumers. It's the consumer's data. That should be very clear. And the consumer will allow that whether his or her data can be shared or not. It will not be the banks or the financial institutions who would be deciding that which data it is. It is the consumer, my data. I am the one who would be deciding that can it be shared by the bank or not. It is the consumer's ownership. Thank you very much.
जी वेरी ब्रीफली, बहुत अच्छा सवाल पूछा है। आपका नाम क्या है?
फैसल।
किस बैंक में आप? बहुत अच्छा सवाल पूछा है। देखिए सबसे बड़ा जो चैलेंज है ना इस वक्त वो डेटा एक्सेस ही है, एक्सेस टू द डेटा। और ये एक्सेस टू द डेटा जो है ना ये बहुत बड़ा। ज़रा थोड़ी सी तस्वीर बाद में इनकी बना लीजिएगा, मैं ज़रा इनसे आई कांटेक्ट करना चाह रहा हूँ भाई। भाई साहब, हाँ शुक्रिया। सो ये बहुत इम्पोर्टेंट बात आपने की है। मैंने इसीलिए अपने रिमार्क्स में ख़ास तौर से डेटा एक्सेस की बात की थी फॉर नादरा। सो नादरा पे डेटा का एक्सेस तो है बट वो महंगा बहुत है, ठीक है। जो लार्जर प्रॉब्लम है वो कोलैबोरेशन ऑफ द डेटा की है। सो डेटा बैंकों के पास भी है, डेटा टेलकोस के पास भी है, एंड आपको हैरत होगी, आई एम श्योर आपको पता भी होगा कि कितना कीमती डेटा जो है वो रिजाइड कर रहा है पावर कंपनीज के पास और वो सेंट्रलाइज्ड एजेंसी में मौजूद है। सो दिस होल्ड दिस डेटा बेस एंड देन ऑफ कोर्स नादरा का अपना डेटा है। अगर समहाउ हम इसको कोलैबोरेट कर सकें और एक डेटा एक्सचेंज बन सके, मैं रिक्वेस्ट करूंगा सलीम साहब से एंड विल वर्क विद सलीम साहब ऑन दिस कि हम डेटा एक्सचेंज के ऊपर भी काम करें एंड हाउ दैट डेटा कैन देन बी शेयर्ड। देखिए कस्टमर का नाम लेना ज़रूरी नहीं है। मैंने एक प्रोजेक्ट पे काम किया था बहुत बड़ा जिसमें हमने BISP का डेटा को एक्सेस करना था, वो भी बड़ा कीमती डेटा है बाय द वे। तो उसमें भी ये इतराज़ था उनको कि हम आपको डिटेल नहीं देंगे कस्टमर की। तो हमने कहा आप हमें सिर्फ इतनी एक्सेस ज़रूर दे दें कि हम हाँ और ना पता कर सकें कि इस क्रेडिट का क्या है, या उस क्रेडिट की एक हिस्ट्री टाइप का स्कोर कार्ड हम डेवलप कर लेंगे। ये बैठे हुए सलमान यहाँ पर इनके साथ मिलके कुछ ना कुछ ऐसे डेवलप कर लेंगे कि कोई मिडल ऑफ द रोड टाइप की चीज़ बन जाए। बट वो डेटा अगर हमें मिल जाता है ना तो डैट विल बी अ ट्रांसफॉर्मेशनल थिंग फॉर द एंटायर इंडस्ट्री। वो इस वक्त सबसे बड़ा चैलेंज है। आप ज़रा PTA से जाके कहें तो सही आपको टेलको डेटा दे दें। आई एम टेलिंग यू, वो जुए शीर से के मुतरादिफ है, उससे वहाँ से लेके आना, ये इट्स नॉट ईजी एट ऑल, इट्स अ वेरी डिफिकल्ट थिंग। बट वो हो गया तो इट विल बी अ पाथ ब्रेक इन रेवोल्यूशनरी। सलीम साहब ऑलरेडी इज़ वर्किंग ऑन टेक्सोनॉमी। हमने ऑफ़र किया है PBA ने कि हम के साथ काम करें क्लाइमेट के लिए। वी कैन वर्क सिमिलरली ऑन द डेटा साइड ऑल्सो। सलीम साहब विद यू।
Thank you very much, and thank you very much for the question. Zafar साहब, I think चाय तो इनके साथ बनती है, फैसल साहब के साथ बिल्कुल वो तो हम कर लेंगे. But thank you very much, Salim Saab and Zafar Saab, for your thoughts. As we wind up this inaugural session, I'd like to take the opportunity now to acknowledge our speakers, panelists, sponsors, and partners. And I request Salimullah Saab, Zafar Saab, if I could request Monis Rahman and Hamza Hashmi to join me on stage and help hand out the mementos. If I could request our conference partner, Mr. Monis Rahman, to receive from Dukan, to receive a memento, please. I'd also like to let you know that if you log on to the conference website, which is digibap.com, you'll be able to see a live stream of this event also throughout the day. Please do share it with your work colleagues and contacts so that they can also learn from the knowledge that is shared here. This is Monis Rahman, our conference partner from Dukan. Next is, we'd like to thank the CEO of Bank of Punjab, who is also our diamond sponsor, Zafar Saab. Nofal, may I request Mr. Nofal to join me on stage? Next, I'd like to invite our digital technology partner, the CEO of Euronet Pakistan, Mr. Kashif Gaya. Kashif Gaya. Next, I'd like to invite our gold partner, Easy Pesa, and the CEO of Telenor Microfinance Bank, Mr. Kashif. To help ease things along, I'm going to announce the names. If you can just kind of come a little closer to the stage, I think it'll go a little bit faster for me. Our next, I'd like to thank our gold partners, Jazz Cash, and if I could request the Chief Product Officer, Mr. Amir Aftab, to join us on stage. Thank you for the patience. Ladies and gentlemen, please put your hands together for the gold partner, Jazz Cash, and this is Mr. Ahmed Aftab. He's the Chief Product Officer. Next, I'd like to invite Mr. Salman Akhtar, who is the CEO of Adelphi, who is the gold partner for the conference. May I request Mr. Atif Malik, who's the Chief Operating Officer at JS Bank, who is also a gold partner for the conference. If I could request the President and CEO of the National Bank of Pakistan, Mr. Rahmat Ali Hasni, who is also the gold partner for the event. And representing our gold partner is Innovative Private Limited, and I would like to request the CEO, Mr. Naveed Ali Beg, to join me on stage. Next is our partners, Al Baraka Bank Pakistan Limited. I would like to invite the CEO of the bank, Mr. Mohammad Atif Hanif. If you could just kind of stay close by. Thank you, sir. Please join us on stage, Atif Saab. And Al Baraka Bank is the silver partner for this conference. Also silver partners for this conference are JBS and Hisab Kitab, and I would like to request Mr. Heather Wahab to join me on stage. While Heather Saab makes his way on stage, may I request a representative of Pak Oman, who is our tea sponsor, to make his way or her way towards the stage, please. So the representative from Pak Oman, who is also the tea sponsor. Is anyone here from Pak Oman? And equally important, the tea is also running throughout the day, so that is very, very good. Is there anyone here from Digital Symmetry Group? I don't know if Sarosh Saab is here. But our digital partners are Symmetry Group. And representing, of course, our international partner, Symphotex, I will request Hamza Hashmi to kindly receive the memento for Symphotex, who is also a sister concern of Terrabiz based out of Dubai. May I request all those who have received plaques, so all the sponsors, speakers who I've already announced, if you could kindly join us on stage for a group photograph.
So all the speakers who are available in the hall, may please join us on stage, because we have this opportunity to have a group photograph with the chief guests. So all the speakers, panelists, moderators, regardless of their session, please join us. And all the chief executives of the sponsor banks and institutions are also kindly join us on the stage, please. After that, we straight run into the chief executive panel.
So all speakers, panelists who are going to be speaking or being on a panel throughout the day, if we could request you to join us on stage, as well as all the sponsors and the chief executives of the sponsored banks. Hamza, sorry, we do have a memento for Zafar Saab and for Salimullah Saab. May I please request Hamza and the panel to present a memento to Zafar Saab, who is the chairman of the Pakistan Banks Association and president and CEO of Bank of Punjab. Okay. And also a memento for our chief guest, Mr. Salimullah. So as you can see, it's a pretty large panel and a lot of distinguished speakers. So we thank you for your patience and thank you all. We now move into our CEO panel. And in case you want, there's running tea and coffee right outside this hall in the Nargis Hall. All right. And may I please request the CEO panel to join me on stage? Could I request the President and CEO of National Bank of Pakistan, Mr. Rahmat Ali Hasni, the President and CEO of HPL, Mr. Mohammad Nasir Salim, the Deputy CEO of Mizan Bank, Syed Amir Ali, the CEO President of HPL Microfinance Bank, Mr. Mohammad Amir Khan, and the CEO of Mashriq Bank Pakistan Limited, Mr. Mohammad Hamayu Sajjad. If you can kindly join me on stage, we can kick off the CEO panel. Again, could I please request the CEO panel panelists to join us on stage? This discussion will be moderated by Syed Faraz Anwar, who is a partner at AF Ferguson. So if Faraz Saab could also join me on stage, please.
Ladies and gentlemen, we are about to resume our next session, the Chief Executive Panel. So may I request all of you to kindly take your seats. So if you could just quickly organize yourself, and then we begin our Chief Executive Panel, the much sought after session of the conference. Rahmat Saab, kindly take your seat, please. You're already there. Farad Bhai. Nasir Saab, please take your seat. Humayun and Amir Khan Saab may also please take your seats. So everyone in the hall, kindly please, if you are seated, then we can begin our next session in an organized way. So the honorable chief guest will stay for the CEO panel. So please be patient, and you'll have chance to interact with him. Sir Salimullah Saab, I request you to please take your seat. Unless you take your seat, the session may not begin. Zafar Masood Saab, kindly please also take your seat. We have to be organized. Yeah, Faraz Saab is here. Yeah. So Sharik Saab, Arshad Majid Saab, Kashif Saab. Okay, so we are beginning, and over to Mr. Farad Anwar, the moderator for the session from Ferguson's PwC Consulting, a great friend. And over to you, Farad Bhai. Thank you.
So thank you very much, Hamza, for a kind introduction for ourselves. And I think I see some number of people standing. So it's better that if you could please have a seat so that I'm able to start the proceedings of this important session, please. Amit, there is going to be a very long period of time available to you for having some relationship sessions. Okay, so should we initiate? Rabia, should we? Okay. All right, so the topic is very important. I mean, we're talking about agri and SME, which are the priority sectors of Pakistan. And before I start this session, it's important for us to have an idea of some of the numbers that are, I would say, please, if you could please have your seats. It's very difficult to start the session when with so much of distraction at the back and in the front. All right, so I would like to share a few of the important statistics. I think you've been hearing about these numbers from Zafar Saab's speech as well as Salimullah's speech. But just to make sure that we are able to have some comparisons run of the Pakistan's SME and agri financing intervention versus the similar numbers in the other countries. And when we talk about the other countries, we talk about countries such as India, Bangladesh, Vietnam, Philippines, and a couple of other countries. This is to give you a bit of an idea of the magnitude of the problem that we are facing with respect to such a marginal penetration in these priority sectors for such a long period of time, and to give you also a bit of an idea of such a large potential which is available for penetration by the banking industry or by the other industries in the country. So just to give you a bit of an idea about the most important indicator of the financing in the country, which is the private sector credit. So Pakistan is standing at about 11%. The countries that I just talked about are standing at about 25 to 30%. Our ADR is about 40%, which obviously is an indicator of the loans that we give out of the deposits that we take from the public. And the countries that I mentioned in my conversation are standing at anywhere between 65 to 85%. Then we move on to the other important indicator, which is a combination of the agri and SME sector credit in Pakistan as a percentage of total loans. So that is just 7%. So 15 years back or 20 years back, we were standing at about 19%, and now we are standing at about 7%. And this penetration level in the other countries is anywhere between 25 to 30%. So here we haven't really heard about any of the number which is getting into more than 10%. So let me share with you some more numbers. The value chain financing in the overall SME financing, not the total financing, but in the overall SME financing is just 1%. The female financing in the total SME financing is just 2%. So this goes to show the kind of potential and the space that is available for intervention by us combined, and this is where the opportunity really lies. So this is for the banks and for all the other different non-bank participants to really conceive some collaborative models to be able to create the right kind of impact in this sector. So with this, I would like to, obviously, the panelists who are sitting over here do not need any introduction. All of them represent organizations that are creating the impact or are in the process of creating the impact, not just in the SME value chain, but also in the digital supply chain financing. So with this, I would like to start the proceedings by asking my question to Nasser, who is representing as a CEO of HBL. The HBL has done a wonderful job in terms of extended credits to the SME and both the SME and agriculture sector. And I believe that's one of the largest and one of the most innovative agri lenders and SME lenders in Pakistan. So I'd like to ask a question from Nasser is, how do you see, Nasser, this opportunity in digital SME and agri financing? And we hear a lot of challenges around lack of data, undocumented sector, they dealing in cash, the collateralized lending in Pakistan is just 2%, uncollateralized lending in Pakistan is just about 2%. And most importantly, we also hear challenges about the lack of availability of data for alternate financing, and also challenges around the fact that only 10% of the overall SME financing is cash flow based and the remaining 90% is collateralized. So with these challenges, how did you navigate and how did you create the value proposition for value chain financing, and how did you achieve the success in these areas?
So thank you, Faraz, for this opportunity to share our learnings. So frankly, when you look at the SME sector, as Faraz said, we're the #1 bank in terms of SME lending. When we look at the agri sector, again, we are the #1 as far as direct farmer lending is concerned. So that's like the micro numbers for HBL, and then obviously HBL Microfinance has additional learnings and numbers. But when you look at the macro picture that Faraz painted and the conversations that have happened in the morning session, the clarity is that, you know, what we're talking about is being #1 in a very small space. Our key to success really may or may not be the full model for the future as we look to rapidly expand the opportunities in this space. So what were the advantages that we had? One was, you know, the 1,700 plus branches that we have all across Pakistan. So that gives us feet on the street. It gives us a pulse on the customer. So I think when we talk about, and this is a digital conference, but we should not forget at the end of the day, we're talking about human beings. We're talking about small sole proprietorships, small partnerships, and character becomes the first thing. We have looked at our existing customer base. Our strategy has always been expand the number of customers that we have at HBL. So when I look at the number of customers and compare against the next two larger banks, you know, we still exceed in terms of number of customers that we have, which is about 38 million customers on our books. The second piece is, and I've talked about this again and again, we have to look at this as a business proposition. We have to look at it as a segment, a profitable segment that we need to get into, which means we have about 800 people, you know, that are deployed in the origination as well as maintenance of these facilities. There is a segregation between identification, the initiation and booking, the life cycle management, and the collections management. You need to have the models in place, both in SME as well as the agri and the agri-related SMEs. The other element that we need to look at, which is going to be exceedingly important, and that is what the conference is about, is the supply chains, is looking at that flow, getting the data from it to make the sound credit decisions. And that's going to allow for expansion of this as an industry. All of us have a role to play in it. But until and unless we invest in this business and put that right structure in place, we will lose. So for example, Salimullah Sahab talked about, you know, cash flow lending collateralized. Out of our 100 billion, we've crossed 20 billion in terms of pure cash flow, non-collateralized lending, and our delinquency numbers are looking very, very healthy within our portfolio estimates. And that is based because, given our size, we have a lot of large corporates, we have a lot of large M's within the SMEs, we have the small segment, and we also have the micro segment. So I think for us, the opportunity is now, how do we leverage the combination of increased digitization? And we talked about, you know, incentives to get, you know, more digital so that that data can become available. But ultimately, I think we will need to get to a place where we also supplement it by incentivizing cash. Because as long as cash is the easiest option, we will continue to have a very obscure line of sight at the grassroots level. So we now have cash well embedded in the corporates, the elimination of that. We have the elimination of that relatively well embedded in the medium-sized enterprises. But on the small scale, we still have cash collections that go directly to the distributors. If that cash collection can go into that small entity's bank account versus the collection, and that becomes a digital transaction, I think the line of sight, the visibility into the small sector will significantly increase. Similarly, we've got a lot of wallets out there. I was sitting with Farooq, who's just moved over to Jazz, right? We have our own wallets as well under Connect. So what we are using these wallets today is primarily, for either recharge of prepaid cell phones or for transferring money. So we're using that as churn. How do we use that data that the telcos have and that large banks that have wallets, they already have that data. That's the next step that we're focusing on, that if we can also look at digitizing the micro segment, then we've got an ecosystem that really covers the entire industry. The other element for us is, from a country perspective, our direction over the next 5 years is to go from import-led GDP growth, to an export-led, value-added export-led GDP growth. In that transition, as we look at the small sector, as we look at all of these, we must prioritize, in addition to female entrepreneurship and others, the export-related downstream industries. And it could be as simple as somebody making buttons or somebody making tags, but ultimately they're going to get used in a made-up garment for export. So what is the value creation we can do? We need to stop sending low value added or no value added exports. We need to start to look at packaging. So when you look at examples of what some of the industries have done in the spices, and now that is packaged and exported, the value that you gain versus sending a bag of red chilies, is much more when you package it, in easy to use mixtures. So similarly, there's a lot of low value added or no value added that gets exported. How do we capture the value addition in Pakistan and take it forward? Lastly, when we start looking at industrialization, or rather re-industrialization of Pakistan, we must stop looking at this is what we're doing to fulfill local demand. Unless we see this factory or this industry being set up that is going to export a portion of what they are making, we are again running into an import-driven GDP growth for local consumption. So I think for us, from my perspective, there is no substitute for the knowledge of the individual borrower, the feet on the street, and the ability to keep a health check of your credit. But the more we digitize, the better data we get, the cost gets taken out of the acquisition and the maintenance and the life cycle. And thirdly is prioritizing the export industry, the value adds. Those would be the three big things, I think, for us, which is the way forward, as well as mobilizing the micro base, which then becomes a feeder for the small businesses.
Thank you very much, Nasir. I think I would tend to agree with you with respect to the use case for the wallets. Our study also shows that roughly 70% of the wallets are used for P2M and only 30% for P2P. It goes to show the kind of businesses deal with such wallets, the people also. So now I would move on to Rahmat, yourself. So you also one of the larger lenders in the SME and agri spaces in Pakistan. And also you have been able to take a lot of advantage of the feet on the street model that Nasir has just talked about. But despite all this, obviously we do see pockets of excellence, we do see pockets of penetration, but we talked about the overall penetration level in Pakistan is very low. So what do you think, which enablers would you suggest for adoption at an industry level and also for adoption by the regulator to really push this through, although we have been hearing a lot about some things happening at the PBA level and also at the regulator level, but from a banker's perspective, what suggestions would you like to make? And also, we did talk about the loss sharing and credit protection schemes being introduced over time, and the utility of those schemes, whether or not these have been helpful in accelerating the pace of adoption. So what are your views around these, Ramit?
Thank you, Faraz. It's tough to follow on Nasir's conversation, but let me try to give some perspective. I think if you look traditionally at the SME model and how banks approached it, and at National Bank also, we used to have a prerequisite to SME financing in the traditional sense, where we required businesses to have a relationship with the bank for X number of months to be able to assess cash flows and to be able to assess volumes of business and to establish a relationship on and the character assessments that were needed. I think the single most important part on that, or the impediment to that model's growth was the fact that SME borrowers, potential borrowers, it was they wouldn't open bank accounts that much. Cash being cash, it was more about cash deposit into bank accounts, and therefore that behavior and that assessments took a longer time. Now, so the introduction of the digital mechanisms, which are convenient, the P2Ms and the various other modes which enable small businesses to digitally transact with each other, that have come in the past some years, that have made it easier for those businesses where this adoption has taken place. But the fact that our currency in circulation to M2 ratio remains very high indicates that still there is a preference not to transact through the banking channel, but more through cash. I think the single major change that has to take place, and part of it has to do with the banks themselves, and part of it has to do with the SME businesses, is that the banking channel is a necessity, almost a utility. As Zafar, I think, mentioned for Nadra, that to be able to do business, you have to have a bank, and you have to have a banking access and banking channel, just to enable your business to grow faster than it would if it was purely driven by an equity-based mechanism. That understanding of businesses and the convenience of opening bank accounts and using banking channels to receive payments and to make payments, that will be the single biggest driver for the growth of SME loans. Because once that banking transactions take place, then almost the next step, or logical next step, is to make OD lines available to customers, etc. And the credit scorecards become very easy to put in place. And for that, I think really, and I do give credit, and I think HBL with Connect, ourselves trying through our own digital app, that is the real thrust of the digital app usage and the digital wallet usage that the banks are headed towards. It is to democratize and make digital banking an option for the Aam Aadmi. Then you have an ecosystem which promotes the lending part. The transactional part has to precede the lending part if you want to see a large growth in this area. I do think one important area, and I made this point before at another forum, is that really when we talk about 550 billion SME loans outstanding for the banking system, I think there needs to be a relook at how we as bankers define an SME versus how everyone else, aam fahm SME को define किया जाता है. And by this I mean that there are three essential criteria for an SME definition. One is the number of employees, the other is a turnover, and then from that, under state bank regulations, a certain percentage of the turnover is the loan amount that makes the loan an SME loan. And when you take all of that entire lending activity, that is 550 billion rupees. I personally, I mean, having the experience of looking at SME lending at National Bank, I really don't, I think there is a large, the significant need to take a relook at that definition itself. 200 million is the turnover per annum maximum for a medium enterprise and a certain number of employees, and a percentage of that becomes the maximum loan.
Yeah.
It is tough to look at that and apply it to the entire spectrum of SMEs that the banking sector is expected to cover. And I think, this definition was made maybe 5 years ago, 6 years ago, when perhaps the easiest way to look at it is the dollar was at a certain price. Today it's a different rate. So even if you're looking at exporting SMEs, a 200 million annual cap is actually pushing the bar downwards, or in other words, what used to be an SME yesterday may not be an SME anymore, simply because the amount that the turnover due to an export volume has risen. So I think there is a need to relook at that and approach it holistically.
Yeah.
But I do see the importance of digital taking this entire thing forward as an enabler. Perhaps they may, for the foreseeable future, not be an option, not be an alternative to some human being making a credit decision. But I think that, but to make that decision faster is what digital will do in the short term for the banking system. Thank you.
Yeah, thank you very much, Rahmat. I think both Nasir and yourself have been talking about the use of a model that involves physical interaction with the customer for an understanding of number A, the credit needs of the customer, and also the credit evaluation of the customer. I think this is a point worth discussing with Humayun, who is sitting over here and representing Mashriq. No, Humayun, I'm not coming on to you. I was just trying to give you a heads up. I would rather speak to Amir about the course of Islamic banking. I think probably there has been a lot of conversation about Amir Ali. I know, so I'm so thankful to you for Amir Khan and Amir Ali. So Amir, when I talk about Islamic, obviously, you would tend to agree that Amir is the one who is going to be representing the largest bank in Pakistan, right? So Amir, there's a lot of conversation about the demand side potential for SMEs and agri, both SMEs and agri in Pakistan with respect to Islamic. So there's no second thought about it. There's no second opinion about it. But if you look at the numbers, and if you look at the fact that on an overall basis, 3.7, 3.8% is SME versus the total financing. But when we talk about Islamic, it's about 1.6 to 1.8%, right? So this is an area worth exploring with you as to what is the reason behind the number not being so optimized versus the demand side potential that we have been hearing about? And also, do you anticipate any supply side challenges which need to be addressed so as to make sure that we are able to really crystallize this opportunity well?
Thank you for us. I think good afternoon to everyone. So all these points are very relevant. So let me try to pick each one by one. Let's pick one side first, which is the demand for financing in Pakistan. So if you look at the numbers, which is estimated in Pakistan, number of SMEs operating, they are roughly over 5 million SMEs operating in Pakistan. Those who are getting financing from commercial banks are roughly 175,000 only. The rest are going to other specialized entities like microfinance banks. So this is a very, very small fraction of SMEs who are actually borrowing from the commercial banks, roughly 3.3%. Now, there are definitely reasons behind it. One reason is that they want to have access to financing, but that is not available. And that is not available for multiple reasons. A, the ability of the commercial banks to service and understand their needs, and B, the absence of specialized financial institutions who can focus on SMEs. And we have seen this very clearly in case of microfinance bank, that the number of, I always look at the number of parties or the customers or the borrowers who are taking financing rather than the value, because when you look at the value, then probably government is the biggest borrower and it crowds out. So if you look at the stock of the government domestic borrowing, it's north of 43 trillion and it has gone up from 35 trillion last year. So there is an increment of over 8 trillion, which means 2 trillion every quarter, right? And if you look at the number which State Bank now is targeting for SME financing to grow is to grow it to 1.1 trillion from 550 billion. So an increase of 550 billion in a year's time. And in every year, there is a crowding out by the government of Pakistan by borrowing an additional 8 trillion rupees, right? So definitely, if you look at the large commercial banks, they have deposits available and they have the ability to use those deposits to actually fund different types of customers or borrowers, and SME is one segment. So I always look at SME in terms of number of borrowers or number of parties taking financing rather than the value, because you cannot compete on value with government of Pakistan, right? In terms of the funds being channelized there, they are completely being crowded out. The SMEs and even in some cases corporates, you talk about the ADR also. So definitely there is a competition of the total funding available and the demand which is coming in, and you know which is the easiest thing to do in Pakistan or anywhere in the world. Investing into government treasuries is the easiest thing to do anywhere in the world. So this is a tougher piece to do. So we have to do some more development work around it. And I like to highlight certain things which are important, and I wish we can jot these down. There are very good discussions going on, and I love Hamza to actually jot down all these good discussions and make a white paper out by the end of this conference, so that when this conference ends, there is an impact and there is something out there which we can look into and which can try to implement. So one thing is definitely, which Rahmat has already touched upon, is the definition of SMEs. This definition is there for quite some time. I think at a central bank level, there is a need to change it. Even just 2 years ago, when the dollar to PKR parity was half of it, what it is today, the same number was there for the revenue determination, for the financing limit determination. So the maximum one can lend it to a SME entity is 200 million rupees, a medium entity. So all these limits have to change now. And there is one interesting thing, when we talk about the cash flow based financing instead of a collateral based financing, so we have to keep in mind that for a very long time, the bankers are being trained to finance on the basis of collateral more than the cash flow. So there is a new orientation for bankers also. So definitely there is a need for a completely independent vertical, which banks have set up. Some of the banks have set these verticals very well. My bank has also set up that vertical. So that vertical has to be staffed by people who have a cash flow based financing mindset. And when we come to a cash flow based financing mindset, then this whole digital piece is very important from the supply side, which you call digital supply chain finance. So we have been trying to do SME financing for quite some time, but doing it in a human intensive manner. I think we have all tested, it has not yielded result to date. So we have been trying to do it for last 50 years and probably will continue to do it for next 50 years, but I think the results will still be not very encouraging. But with the help of digital supply chain finance, we have recently done an experiment whereby we enter into an arrangement with anchor corporates, and in a period of 18 months, we were able to disburse 28 billion rupees and we were able to execute 32,000 transactions. With 32,000 transactions is quite a large number, and all these transactions were executed, most of the disbursements were executed digitally in probably less than 5 seconds. What number I get is like 3 seconds. It's the time required to disburse funds into a customer's account. So with the help of digital supply chain finance, I think it is possible to convert our dream of helping the SMEs to rely on the organized financial institution. Actually, even today, SMEs are taking funds from different unorganized persons, but to help them to come to this platform, there is a need for a ecosystem. So now this ecosystem is being built. Now what is more important, that the banks should work together and connect with each other and help corporates to connect to each other. Because actually when you look at the supply chain finance, which is the topic of today's discussion, it is a vendor or a distributor which is working with an entity which is a manufacturer of a goods. So we have to connect the entire supply chain. There has to be a person who's actually making the finished product. There has to be a connection for financing those distributor and retailers who are selling those finished products. And there are multiple whole downstream industry in the form of various vendors which are making different components to that main manufacturer. So there is a need to link all of these. So there are corporates which are definitely using good ERPs. They have good linkages. They are generating invoices. They are generating purchase orders, sales orders. So it is important for banks to understand how actually when a corporate entity buys anything or sells anything, how does it work, and then we have to connect those anchor corporates into the bank system. So when I gave you the example of about these 32,000 transactions, so it was about connecting that anchor corporate and the distributors into that digital system. So once they are there, it's very simple to have a complete track of things, even if the funds are not in certain cases directly moving from one account to another account, where the retailer is depositing funds directly into a distributor account and distributor is actually selling the products on behalf of the anchor corporate. But because we know there is a sales invoice being generated between that anchor corporate and that distributor, so we know there is a transaction happening. Although some part of the transaction is not being completely settled in cash, and the cash is coming directly sometimes into a corporate account or a distributor's account. But when you are integrated into a supply chain finance ecosystem, even the need to assess credit on the basis of reviewing the bank account statements of an SME customer, which is a standard model for banks. When we determine a credit limit for a SME customer, we look at the bank account statement. But if you have a track record from an anchor corporate showing, because you know this, when you go into any company's journal ledger, there is subsidiary ledger. In subsidiary ledger, each distributor and each vendor has an accounts payable code and an accounts receivable code. So if you are working with a corporate, you can see how much sales are being churned out of that particular distributor, or how much goods are being or raw materials are being purchased from that particular vendor. So with the help of that anchor corporate, now you have real data. Earlier you only had a proxy data looking at the bank statement. So with the help of this digital supply chain finance, I think we can only make this dream come true. Otherwise we will continue to work around, and these workarounds will end into roadblocks.
Sure.
And will not grow. But few things which I like to add here from a regulatory perspective. So if these points are converted into an actionable item. So one thing which is important, to the best of my knowledge, there is a limit which is allowed to SMEs, which is 200 million. But simultaneously, when you do cash flow based financing, it is important that the contract enforcement should be strong in Pakistan. Unfortunately, on an overall basis, as per rule of law index, we rank 130 out of 140 countries.
Okay.
On a civil rule of law enforcement, we rank 128 out of 140 countries. So we are, I don't think we are in a good shape. But there is a separate judicial system for actually adjudicating smaller loan defaults, which is the banking court. The banking court were allowed to decide on loan defaults of up to 50 million. I think that has been increased to 100 million, but somebody can reconfirm that to me. So now there is need to have an alignment. If State Bank is saying 200 million and the banking court is saying 50 million or 100 million, I think both are not in sync. So at least to help SME sector, where we have 5.5 million SMEs, we say they give 80% of the non-farm labor employment, they contribute 40% of the Pakistan GDP. There have to be a sync between different regulatory authorities,
Sure.
that what courts are deciding, what banking regulations are saying, and then there is a need for bankers at the forum of PBA and this NIBAF or IBP, that they are judges in banking courts who need to be trained in banking.
Yeah.
As far as I know some of the judges, it is considered to be the worst posting to get into a banking court. So good judges don't want to get into a banking court because it's not something very exciting for them. We have to invest in the training of those judges so that when these new judges come in, they are trained. And I think banks have to step forward for that, the Institute of Bankers and the NIBAF, to train them so that it becomes an interesting assignment for them.
Sure.
And they understand what banks are doing. And once they sit down with bankers and those training sessions, they will get to know that generally I would say 99.99%, when a bank go for a recovery effort, it is completely professional and it is completely honest effort. There is no other intention in pursuing a defaulter in a banking court or in any other court. So we have to train them, the judges, we have to complete the ecosystem on the digital side, we have to align the financing limits, and plus SMIDA is an authority which is there. It used to do a super good job. It's still, I think, struggling. There's an again need for banks at the forum of PBA and SMIDA to collaborate.
Sure.
Because SMIDA is a government funded authority. So if we can engage them and give them some funds collectively to do certain studies to help SMEs out, unless and until there is a complete ecosystem, we will continue to struggle and we'll continue to hit roadblocks. So these are some things I think these are important to work on this. At the last point I want to also add, I know you are running out of time.
Quite short of time.
Yeah, quite of time. It's the focus of this sector, specifically focusing on those SMEs which are helping to grow our exports. If we look at the composition of Pakistan GDP, 86% of the GDP is from the consumption. So it's the C. It's very unfortunate. So every time we grow our GDP, we have a huge current account deficit. Because only the export is coming roughly 17%. So we should help those SMEs and help those corporates first who are contributing to exports rather than who are contributing to consumption. Because if we still continue to grow our GDP based on consumption, we will again get into a foreign currency default. Thank you.
That's a bit of an elaborative response, Amir. Thank you very much. And I'll beg to ask the organizers for 5 minutes more on our account, so that we are able to cover both the esteemed panelists who are yet to respond to their questions. Humayun, many congratulations to you, on securing the digital banking in principle approval. And now I know that you're heading towards the commercial launch. So first of all, many congratulations to us from your side, from our side to yourself. So now we see a lot of conversation about the expectations from the digital banks in both the SME, especially in the SME space, by the way, and considering the fact that we have got a very low financial inclusion in the SME space and the credit inclusion in the SME space. So one of the challenges which has been talked about the fact that there has been an expectation for a feet-on-street model or some interaction, physical interaction with the SMEs. So besides these, there could be few more challenges which digital banks may be facing when they set up their SME and agri-finance proposition. So how do you think those challenges, how do you feel that the digital banks would be able to address those challenges, and also what enablers do you think would be required by the digital banks from the regulator, especially for digital onboarding, for servicing, and for financing of the SMEs?
First of all, thank you for asking a fully loaded question. Over the weekend, I actually ordered some fruit from, I love going to this strip on the Zamzama, and there are a bunch of hawkers. One of them is Ejaz. I couldn't leave home. I just called the guy. He said, "Sir, bada fresh fruit aaya hua hai, chonsa special aaya hua hai." I said, "Okay, fair enough." I asked him to pack few, fresh fruit items, and then I sent driver to collect the fruit. And I asked, did the guy ask for money? He said no. So I then called the guy. I said, "How much is the total?" He said, I think something close to 4,000 something rupees. And he said, "I'm sending you the bill on WhatsApp." Mm-hmm. He sent me the bill. By the way, I love National Bank's digital app. And I just asked, should I do Easy Paisa Jazz Cash? He said, the same number available on either. I did the transaction, and after looking at the receipt, I shared it on WhatsApp. He said, "Thank you." And I was just looking at the receipt, and the receipt did not say Easy Paisa or Jazz Cash. So I was just wondering if he is aware if the money landed in Easy Paisa or Jazz Cash. So just a small thing that I realized while looking at the receipt. The other thing that I did over the weekend was to get my sofa fixed. Called this sofa guy from Gizri. He looked at the sofa. He said, "Ke ko 1.5 lakh rupees ka kharcha hai." I said, "Okay, fair enough. Kapda change karna hai sofa ka to." Then he said, "I need 40,000 rupees in cash." I said, "Why don't I transfer Easy Paisa Jazz Cash?" I don't know Easy Paisa Jazz. I don't even have WhatsApp. I said, "Fair enough." So I had to make an effort, go to ATM, got the cash, gave him the cash. Few days later, he called me and he said, "I'm at the cloth shop, and I just bought the cloth. Can you make 50-something thousand rupees payment to this guy?" I said, "I'll make it to you." He said, "No, here's the account number." And he actually gave me an IBAN. I had to make that transfer. It was a sofa something cloth shop. I made that payment to him. Few days later, he said, "I need 40,000 rupees more." I said, "Deliver me the work and get your money." He said, "No, sir, I'm in a dire situation. I have to pay my electricity bill." I said, "Okay, fair enough." But then I thought, he said, "I'm coming to collect 40,000 rupees cash." And I was like, "Oh my God, 40,000 rupees. Again, I have to, Mashreq doesn't have a ATM of its own, so I had to do 20,000 rupees transaction on the ATM. I said, "Okay, well, let me know what kind of." He said, I'm sharing the K-Electric bill with you. Why don't you make this payment?" And I paid for his electricity bill using, again, thanks to Rahmat, National Bank mobile application. But the point I'm trying to make is, I was just wondering, how is he going to reconcile all of this for his business? How is the hawker going to reconcile if the money is in the Easy Paisa or Jazz Cash? The third thing that I want to talk about is about ISO 20022. This is the latest message of ISO, which is an upgrade of empty messaging. All of us from a banking world know what the importance of empty messaging is, particularly for the trade transactions. SWIFT said 2025 is the deadline. All banks across the world must make sure to comply with ISO 20022. The important thing about ISO 20022, it is the faster payments underlying fundamental protocol. The other thing about this message is XML, extensive markup language, where it captures the details of transactions. Just imagine the hawker, once this ecosystem is ISO 20022 certified, will be able to reconcile how the transaction from a customer landed into an account. All of this is very important, but let me take a step back and give example of 3 markets here. US, SME market, 33.2 million SMEs in US today, making up 99.9% of the businesses in US. And these guys form 46% of the private workforce in US and contribute to 43% of the GDP of US SME market. And these guys contribute to 32% of the export contribution, which is close to $500 billion worth, $500 billion worth of export from US. And the private sector financing in US to SMEs is 46.4%. Let's talk about Indonesia, a bit of under and developing market. The population of Indonesia is 271 million, 66 million SMEs. 99% of the businesses in Indonesia is SME. The SME in Indonesia employs 97% of the private workforce and contributes to the 61% of the GDP of the country. These guys, it is a developing country, have 14% contribution to the exports of the country, 14%. And the private sector financing to SMEs in Indonesia is 19%. By the way, 98% of these SMEs are sole prop. Now let's talk about Pakistan. 241 million population, give and take. 5.3 million SMEs? Something is fundamentally wrong. 5.3 million SMEs? And out of these 5.3, they represent close to 95% of the businesses in Pakistan. 80% of the non-agri workforce work for these SMEs in Pakistan. The contribution of these SMEs is 40% to GDP, 32% to the export of Pakistan.
Yeah.
But the private sector financing to these SMEs is less than 6%. 93% of these SMEs are sole prop. The point I'm trying to make here, we have to take a step back as an industry and work on fundamentals. Fundamentals. I don't think these SMEs are looking for money. I don't think these SMEs are looking for any banking. If you look at the number of interventions the government of Pakistan, State Bank and banks have done in last 20, 30 years, it is immense, immense. And we keep on bringing these SMEs into the fold, trying to do a lot of things. However, look at the SMEs today. If a hawker can sell using social media, no bank gave him WhatsApp, no Easy Paisa, Jazz Cash gave him this sense of collecting money and then reconciling. We've been giving them accounts, we've been giving them banking. These guys are smart enough to know how to make use of whatever we as industry provide them. And we are trying to understand and we're trying to service them.
Yeah.
But to be honest, the change of pace, the digital revolution is far greater than what we can even imagine.
Yeah.
Far greater than what we can imagine. So what really needs to happen is we need to take a step back. I'm talking about what difference digital banks is going to create. I'm sure some of you guys can relate to Dabba AC in the old cars. It was always a box that you could not replace with the genuine AC in the car. You could always tell that this guy has a patch in the car. And that is exactly what is happening with the financial industry and banking industry in Pakistan, because we are not built for digital enterprises. We're not built for this time.
Yeah.
We were built 50 years ago. You tell me which core banking today in Pakistan can support ISO 20022. It's a change request to Oracle, to Temenos, to all of those core banking systems that were built for, I don't know,
Yeah,
so
our time is up.
just to conclude this, for us, the fundamental benefit of any new bank, it's not about digital bank, because they are being developed in 2025. It is all about clouds, cybersecurity, data fabric, automation, digital sales and marketing. Somebody selling on social media, I can tell you, even your mohalle wala dukandar, women from household can actually coordinate and get their stuff done through a lot of other channels.
Sure.
Are we going to teach them digital sales and social media and marketing and customer care? Anyway, so those fundamentals is on digital bank side because the fabric is built on what will last for another 20, 30 years. And that is the differentiating factor that these banks are going to bring in. And just to close,
Inshallah.
Mashriq has this benefit of serving SMEs as a dedicated platform. It's called NeoBiz and a combination of NeoPay. Just that we've done this in a developed market with 200 nations operating in a small UAE market. That's the benefit that we're trying to literally copy pasting UAE, Mashriq to Pakistan.
Sure.
In the hope that will be our contribution to Pakistan SME market.
Thank you very much.
you.
Thanks a lot, Humayun. So Amir, over to you now, finally. Now, obviously, we know the dynamics of the microfinance industry, Amir, and that industry is being talked about a lot these days with respect to the profitability constraints and also the kind of NPL which is reaching as high as like 8 to 9%. So obviously, in this case, how do you see digital playing a part in having a sustainable financing strategy for yourself as part of the industry? And also, which pockets of economy, which economic clusters do you see as providing propositions for sustainable growth? So if you could elaborate on this.
Thank you, Faraz. It says time's up over there, and I'm wondering what time's up over here, but reality of life is that we are serving the economic active segment. I have roughly of 500,000 customers. Each loan is cash flow assessed. We give that loan based on multiple factors, and we do it by meeting the customer and then re-verifying it through other. Now, if you look at our base of microfinance, which is 40 million people, collectively, as a microfinance, you have not been able to, I wouldn't say scratch the surface in terms of the opportunity. But we're serving the agri sector, we're serving the enterprise sector, we're serving the housing sector. With the 100 billion book that we have approximately as of December, 53 billion roughly is in the agri sector. Now, for me, climate change, one rain over here can impact Pakistan, but trust me, when it rains in Pakistan, it rains in Pakistan. I've seen floods of 2010, 2011, 2012, 2015, 2016, 2020, 22. Every year there's some activity going on. And this year we just had another impact from a crisis perspective called the wheat price concern which crept up. Those are realities of life. We as bankers sometimes look upon them as an event, but the actual farmer on the ground is actually facing it. You go to Badin and it's rained over there, the entire ground is underwater. So we have to support that customer. For sure, Pakistan's land is not going to go anywhere. The farmer will survive this thing. He may miss one crop cycle, two crop cycles, whatever, but then we need to take it forward. So the journey of the future, and I say is financing for the future, but it's actually financing now that we need to look upon for the future, because the future will only happen if you finance it now, is through digitalization. And it's just not the client journey which needs to be digitalized, and we've spent over 2 billion rupees on ensuring that the client's journey is thoroughly digitized. Every loan office that we have, which is over 2,000 people on the ground, on the feet on the street, each one of them has got a tablet. So it's not that we want the clients coming into the bank. We actually want to be in their house, at their place of residence, and the client journey needs to be complete within a very minimal time, but the rest of the time you deepen the relationship. You get to know the customer. You look at one product, can we sell them another product? We assess the customer. So that is something that needs a big digital structure in place. My challenge is 3G may be available in Karachi, Lahore, Islamabad, 4G is available, news of 5G. But if you go to rural Pakistan, then that's where the real population is. What 3G, what 4G is over there? If I set up an entire digital structure over there, which is totally, I use Oracle, I use this, I use that, tablets, everything. But if access to good piece of technology is not over there, the journey becomes a challenge. So we want to work with telcos to ensure that each and every part of Pakistan is thoroughly digitalized in the sense of giving the environment where the digitalized, as we are all going to be digitalized, the people sitting on the table on this side of the dais, we're going to be digital. But the client's impact has to also be digital. So I know time's up, so I won't take much to our time, but for rest assured on a couple of things that microfinance is a sector that is of Pakistan, the real Pakistan. We need to work towards it. Climate risk is a challenge that we need to recognize and work together to ensure that anyone that of us lends into this segment has certain solutions, but not just which the banks are doing, perhaps the government, also the central bank need to work upon doing so. I know I'm not going to speak much, but I think my time's up because that keeps flashing over there.
Yeah, flashing over there, and flashing for the last 5 minutes or so. So thank you very much, Amir. I don't think, Hamza, we've got any time for Q&A, right? So we'll leave the stage as it is, right? Hamza, thank you very much for your invitation. Thanks a lot, everyone.
If I could please request Hamza to present a plaque of appreciation to Mr. Rahmat Saab, who's taken off, Mohammad Nasir Salim, who's the President and CEO of HPL. Zafar Saab ko. Zafar Saab, agar aap please stage pe aa jaye. All right. So Rahmat Ali Hasni Saab, President and CEO of National Bank of Pakistan. Mohammad Nasir Salim, who's the President and CEO of HPL, please accept a little token of our appreciation. Rahmat Saab, if I could request you to stay on stage so we can have a group photograph also. Nasir Saab. Mr. Muhammad Amir Khan, who's the CEO and President of HPL Microfinance. And Mr. Muhammad Humayu Sajjad, who's the CEO of Mashriq Bank Pakistan Limited. And last but not least, Mr. Syed Faraz Anwar, who's a partner at AF Ferguson & Co. If I could request all the gentlemen to just arrange yourselves for a group photograph. And if I could request the audience, don't be shy, it's okay to applaud for them. There we go. Next, we have our interactive workshop on digital SME lending and retail payment. Our keynote facilitator for this workshop is Mr. Monis Rahman, co-founder and CEO of Dukaan E-Commerce. And joining him for our workshop co-facilitators are Dr. Imran Ashraf Usmani, who's the Vice Chairman of the Sharia Board at Mizan Bank, and Mr. Khurram Waraij, who is the Group Head Digital Lending of Telenor Microfinance Bank. So Monis, Dr. Usmani and Khurram Saab, if you can join us on stage, then we can kick off the session. You will handle it, okay. And just an announcement again, if you go to the conference website, digibap.com, you'll be able to see a live streaming of this event also.
If you could please start the slides, please. I'm going to start Karleen. Thank you. Assalamu alaikum. This is a very challenging spot because we are between you and lunch, and it's always the hardest spot. But I think it's time to roll up our sleeves a little bit. So if I could ask people to sit down, I think you'll enjoy what we have to talk about here. So first of all, I'd like to really thank Hamza Hashmi and the Terabis team. This event was an idea after we saw the circular of State Bank and realized how important it is to hold an event like this. But it's just been amazing how Hamza and the team have executed on this and assembled all of these amazing people in one room. So a round of applause for Hamza Hashmi and the Terabis team, please. I am very lucky to have on stage with me Khurram from EasyPesa. Many of you know him. These are, in terms of SME, supply chain loans and lending, probably one of the most experienced individuals in the country. Whoever's in the lending field knows of him and knows of the wonderful things he's doing. You'll learn a lot from him after I brief you on sort of the landscape and a tech infrastructure needed for this. And Dr. Imran Usmani, I think every one of us have heard of him and the wonderful work he's doing in Islamic finance. Most of us have engaged with him and his organization for advice. So with that, I'm going to begin. The topic at hand is digital SME and retail payment digitization. And this is a bit of a workshop, a bit of an overview. So let me just start. It's been very heartening to see the common themes have been reiterated over and over again. It makes my job a lot easier, although I seem a bit redundant because I'm going to repeat some information. But it's showing that there's a consensus of where things are going. So 170,000 of 4.5 million SMEs, and the numbers we're hearing, it's probably 6.5 million. It's larger, 3.5%, maybe 2%, whatever the number is, it's incredibly low. 40% of the GDP we've heard over and over again, 80% of the non-agricultural workforce, but this is not a unique problem to Pakistan. IFC estimates that 65 million SMEs, 40% of MSMEs in developing countries have unmet financing needs of $5.2 trillion every year. So it's not just Pakistan, it's all over the emerging world. Same issue. And just to highlight this a little bit, there are incredible analogies which I think you'll be hearing about as we go through the day in other geographies which are so analogous to what's happening in Pakistan, supply chain ecosystem, payment ecosystem, and the rush to implement supply chain financing. Just these markets alone, you're seeing about 170 million SMEs and the market size of almost $1 trillion just here alone. And there's a lot of analogies between these markets, but let's stick to what we're doing in Pakistan. I just want to illustrate that we're not unique in where we are right now in our ambitions. So, supply chain, what's a supply chain? I'm just going to go through this very quickly. I know everybody understands what supply chains are, but I want to highlight the complexities in supply chain and then systematically work through those and figure out how we can credit score and enable loans through the supply chain. Start at the top with the manufacturer, the supplier, the producer of goods. The producer of goods gets the products into the market via distributors. Often it's a master distributor, then a sub-distributor. These are hierarchical in nature. And the distributors have a very interesting offline workflow, which is fairly complex and very inefficient. Inside the distributor's shop, we see there's a warehouse, there's inventory, he has order bookers, they go on field routes. They have a salesman who goes and does a delivery, who does cash payments, their returns. This is all offline, it's happening on the back of a napkin. They're reconciling on some laptop inside a warehouse. One day later, the supply goes out, payment is often cash. There's a big burden in that cash. And then it finally goes to the retailer who waits for the order booker, who runs out of cash and therefore cannot buy anything else. So if you're not in with the retailer as a distributor early in the day, aapki sale nahi hogi. Ye sari cheezein isme hain, and this is a massive opportunity. It's complex, it's offline, it's disconnected, and it's undocumented. And I think as we heard in the last panel as well, Amr Ali Saab was talking about this, and he said that it needs an ecosystem. He's absolutely right. There has to be an ecosystem that's interconnected, otherwise we cannot score this undocumented transaction chain. So what types of loans are there in the supply chain? Well, you can go up and down the supply chain. You can give loans to the distributors. You can give loans to retailers. You can give loans to FMCGs. And there are various types of loans that we can give throughout the supply chain. I've just highlighted a few of them. I think you've heard of a lot of them. I'll just go through them quickly. You know, it's purchase order financing. Basically, you're providing funds to a supplier based on the downstream orders they have. This means you must know the volume of downstream orders. And again, we're talking about an undocumented economy. But if you have granularity into downstream orders, it's easier to give the supplier finance because you know how much money is going to come back in. Their inventory financing, I think we know about this. You basically give loans and you secure those loans against inventory. Again, it's securitized against inventory. There's receivable financing, invoice discounting, where there are loans against outstanding payments. We also know this quite well. It's common. And supplier financing, reverse factoring, which I find very interesting. This is, the loan is initiated by the buyer, the store, and the money is given to the supplier, but it's claimed back from the buyer again. And I'm going to speak more about this because this has worked really well for us in Pakistan. And I think it's very instructive. And of course, there's distributor financing, which is basically the largest loans that are going to distributors to buy supplies from the FMCGs and manufacturers. So this is a rough sort of a map of the kind of loans you can do in the ecosystem, but you'll see that all of these require data. They require reliable data because this is informal. And so when we talk about technology, what we're really talking about is building technology that allows us to track transactions throughout the ecosystem, starting from the consumer paying the retailer, paying the distributor paying the manufacturer, and not just paying them, but having visibility on what they're paying for, what is the basket that they're buying. And once you have a combination of these, I know it sounds like a holy grail, I've made it sound so simple, but it's such a complex problem to solve. Once you have these, it actually becomes fairly easy and low risk to score. Then the other problem is, well, these are small fragmented loans. How do we scale this? Human intervention, going out and meeting them on the field. So all of these are challenges that technology solves, and I'll be speaking a little bit about that. So, okay, so here are some learnings. For supply chain financing, for retailer lending, there are a couple of things that turn out to be more important than others that really move the needle. So I'll start with KYC and establishing a business owner. One of the biggest areas of fraud, surprisingly, is if you don't do your KYC properly and a loan is given to a retail merchant, but it turns out that the person you gave the loan to is not really the owner. It's his brother, or he's not even affiliated, and the field sales team has played a trick on you. So establishing identity of retail store merchants and ensuring that they represent those stores actually is one of the biggest things we can do. And I'll be speaking about how we can accomplish that, but that's critical. The next thing is proof of payment. So once transactions are going, you're using those transactions on retail merchant networks to figure out what is the buying capacity, what is the turnover, what is the margin that this retailer is able to produce. So a proof of payment, if you have a payment going through a digital channel, cash has moved. It's not just an invoice that you're examining. This is real money that's moving. The third is understanding the basket of goods. What's being bought? And for example, if you ask for a loan because you want to place a bet on a betting site, it's much higher risk than if you ask for a loan because you want to buy stock on which you make 15% and you turn it over every 3 days and you've been doing it for 3 years. It's a very low risk loan. So understanding what you're using the money for, what the money is being used, the consideration, and being able to, last point, finance specific SKUs based on data and based on history makes these loans far more reliable and less risk. If I can track what retailers are buying, how often, how frequently, for a period of time, I can finance just that basket. And the money that we talked about earlier is going directly to the supplier. It's not going into the hands of the retailer. And it's going for stock that he's been purchasing, she's been purchasing for a long time, and we've seen evidence that they're able to turn over that stock, and we understand the margin on it. So now it's just economics. You've done the KYC, the economics work. The retail merchant's always going to pay you back because they're making a multiple on the money that they get at the cost they get it. So this is the magic. It's not rocket science. Why do people repay you? Because it's in their self-interest. Because they get another loan and they buy more and they grow. And you're seeing about a 30% uplift once you put these loans down to the retail merchant network. So it's big. So everything everybody has said has been absolutely spot on. Now the key is, in order to do this, you need documentation. You need that trail going from top to bottom, which we don't have. So the lack of documentation up and down the supply chain makes it slow, difficult, and expensive because you have to verify everything manually. And this is why nobody gives them loans. The basket size is small, they're fragmented, it's not interesting, it's way too much work, and we still don't do a good job scoring because we don't have reliable data. So what do? Dukaan builds digital banking software and e-commerce infrastructure to connect retailers, distributors, and manufacturers to embedded financial services. And like was spoken on the other panel, I think Amr Ali Saab again spoke about this. The banking industry was invented ages ago. It almost seems absurd today to go drive a distance, take money out of my wallet, put it into a bank branch, drive away, and when I need that money, drive back again and grab that money and use it and pay a fee for it. So the banking ecosystem infrastructure was not built for embedded finance. And where banking services naturally belong are directly in the transaction flow, when you're ordering, when you're about to pay. That's where it naturally belongs. You don't want to switch an app and go someplace else and do 5 or 6 other things, because the other problem that's created is that the data is fragmented. My purchase data is happening on this app. I'm buying from here through an e-commerce app from Unilever or another manufacturer. The data isn't synced, therefore I cannot do the things that I just spoke to you about on the previous slide. So it has to be interconnected. The ecosystem has to be interconnected. And sort of that's what we do. So we create white label stacks that we provide to banks and other providers. We're really hitting a lot of scale with EasyPesa. The EasyPesa's team here, they've done an amazing job. A round of applause for them. The Karobar app that they launched is really scaling very, very fast on retail networks with distributors. Loans are flying. It's a frictionless experience. So if you want to learn a little bit about what was done, I think this is a great team to speak to over here in the front. So we spoke about various pieces of this supply chain, right? It seems like a very, I'm going to rotate over here a little bit. It seems like a very tough problem to solve. So the pieces of our chain, the pieces of our software stack, this is technology now. You know, it starts, I'm going to start at the bottom of this. It starts with the consumer. So today in Pakistan, State Bank has launched RAS, P2M, we've heard about it. I've got some sound boxes up there, QR codes, scan them, get instant voice notification, payments made, no need to open an app and wait for internet to spin. I'll speak about that in a bit. Money comes in, the retailer gets some money in a digital form. So now there's digital cash into a wallet. This is big, because one of the problems in lending is digitally collecting the cash and not having to physically go and get paper cash. Now with this cash in, not only can you digitally collect your loans, but the retailer is now able to pay the distributor through a digital channel. That was pillar number 2, evidence of payment. I know what he's bought. I know that the payment has been made. Those rails are laid. So that's where we start at the bottom. We can now score retailers based on their income from consumers through P2M, RAS, QR code transactions, which I think are going to be a game changer, as we spoke about earlier. Iske baad, where does that money land once you pay? It has to land into a banking app. So the retailer, when it's scanned, gets a banking app, but that banking app has to let him do more than just collect payments and pay the money onward. That retail app, this is the digital banking app for retail merchants. This is where he orders his supply. This is where he pays the merchant. This is where he gets credit based on the footprints that he's leaving in there. So this is a very important piece of our stack. And then you have the distribution management ERP. The distribution network of Pakistan I spoke about, it's fairly offline. It's very complex. They work on the back of envelopes and napkins, the order bookers, whoever knows how FMCGs work. And by the way, it works the exact same way in Africa. I was just in Ghana, same thing. Indonesia, same thing. So this is a common problem that we're talking about. So we have a distribution ERP that lets us digitize distribution operations, payment collections, inventory tracking, order booking, all real time. So now we have this data on a digital stack going all the way up to the distributor. And finally, you have the FMCG, which has accounts in commercial banks and large banks that are dealing with their distribution networks. And they have complex invoicing, demand notes, reconciliation, workflow management, and payment, which is happening through banking rails, but it's not being captured. Payment and what the payment was made for. Both of them have to be captured in order to score. And there's no reason why we cannot add that onto the banking rails. And that was the third piece of what I was speaking about. So this is our stack. It goes up and down the supply chain. And let me figure out how to go backwards here. That work? Yes, that works. So the top is a transactional banking portal. So our software stack stitches all of this together, interconnects them with a unified wallet, so you're able to track all the way up and down both income and expenses of everybody in the supply chain. All of this is live, by the way. This isn't just theory. This stuff works. So why do this? Well, we heard some amazing people on stage speak about all of the reasons to do this, and they make a lot of sense. But when you drill down to the supply chain, you'll see it makes a lot of sense for everybody in the supply chain. It makes sense for the bank. The banks get accounts across the supply chain from the retailer, from the distributor, FMCG. All those transactions are flowing through the bank's rails. It earns float, transaction fees. And once this data is flowing through banking rails, it's able to be credit scored, and you can lend against it. When you lend against it, it's far more profitable than the transaction fees that I think are currently being enjoyed. It's more than the float. And more importantly, banks have a center stage now in this new economy which is being created. And that's critical. FMCGs is very obvious. They get instant payments from distributors. It's a big pain point from FMCGs. The movement of cash, the delay in getting payments from distributors, all of this really adds up. It's a capital-intensive industry. So getting instant digital payments is a really big win. This is one of the reasons FMCGs are very eager to work with banks, and they say, help me solve this problem. That's where it starts. But not only that, but once this money is starting to flow through their rails, then you can give credit to their distributors. Another problem, because they're tying up capital with their distributors, or their distributors are locked in with their capital. They all want to get their capital out, and these loans are very reliable, and therefore they're not growing. So distributors, obviously, it's also, they're able to pay FMCGs through a digital channel. They're able to collect money from their retail merchants through a digital channel, which means they can pay faster upstream. It all flows upstream. And they're able to get the bank to finance basket purchases that are being credit scored by banks. So now a bank is picking up the burden of the financing. Retailers are getting loans. They're buying more from the distributor. Distributors are getting loans. They're buying more from the supplier. And the cash flow cycle just spins. And retailers, obviously, they get a one-stop app. Retailers, they have 5 or 6 apps. They do some things here. They do another thing there. But banks haven't captured their use cases and giving them good reasons to stick around. There isn't really a good reason to stick around with a bank as a retailer right now. Until they connect their supply chain, they give them lending, they allow them to pay their distributors, they allow them to earn extra money. And the moment you do that, the value proposition for the whole ecosystem is very strong. One of the other themes that we talked about has to be interconnected. We can interconnect to each other. We must interconnect to each other. We have great people here, and I think one of the things that we should all leave with is that this can only happen if everybody does this together and we interconnect our software stacks and we collaborate. The faster we do that, the cleaner the data, the more money everybody makes, and the faster these SMEs grow. So it's about collaboration. It's about integrating the ecosystem from top to bottom. So just a pictorial sort of representation of our intercept points here. This is a supply chain. You have a transactional portal that allows manufacturers to invoice and collect payments from distributors. You can credit score that. We've got a credit scoring engine there. We plug into LMSs. You can instantly start to give loans against the payments from distributors to FMCGs. Those are large quantum loans. One layer down, there's a distribution management system, so distributors can go online and they can now start getting orders directly through an online, offline app. Their operations are streamlined, and now, because they're on this stack, their retailers get loans, which is very valuable to them, and they get a digital payments upstream. The retail merchants, I think the real star of the whole show is this retail merchant banking app, which I think is very critical, that allows those retail merchants to expose a RAS P2M QR code, allows them to get cash in, allows them to pay up. This becomes a center spoke of the entire ecosystem. And then, of course, on the consumer side, the ability to pay through a digital channel. These are more details on sort of what each pieces of the stack does, but it's a very elaborate stack, and it's all interconnected. Now, if there's a distribution management system that's used by another manufacturer, you can integrate with that here. If there's a banking app that's used by them, you can integrate that here. The key is to integrate everything so you have visibility of the data up and down the supply chain, and you plug it into your credit scoring engine, and you're able to give instant loans, disperse them through a digital channel, free cost, do KYC through a digital channel, you've opened a bank account, do collections through a digital channel because those retail merchants are getting cash in through these, through QR codes, through these sort of sound boxes, which I know a lot of us are now working very hard to get into the network. Now, in order to do this, there's lots of software needed, right? So we spoke a bit about the transactional banking portal, the sort of things that this needs to do in order to solve the problem of credit scoring distributors so that they can get loans to buy from FMCGs. This is that transactional portal for the supply chain. So it's doing a lot of things here, but it plugs into the banking system seamlessly through APIs. This is the distribution ERP. Now, this is very complex. I think we spoke about all the offline pieces, and I've spent numerous hours with distributors in their warehouses and their storekeepers and their order bookers. So these are the essential pieces. The order booker, like you'll see there's a picture of an envelope on the left side. This is actually a real picture of an order booker after his routes, that he goes to the warehouse and says to the key punch operator, these are my orders. They enter it in some system. They don't even know if they have inventory at that point. So this stack integrates the inventory, key punch operator, cashier, storekeeper, delivery man. So everybody is now interconnected. We have very clean data, and we have data of payments from retailers, as well as the basket, what actually they're buying. So now you're able to credit score all of that as well. And then finally, this is a retail merchant super app. I think this is going to be the centerpiece if we want to crack this puzzle, and probably the hardest piece, because everybody's avoiding going down to the retail merchant level. They're small, they're informal, they're very hard work, small loan sizes. So having a digital app in which you are reliably capturing what they're doing, especially the relevant signals for your digital scoring, is essential. And that's what the retail super app does. It has a built-in pause, so they can tap on glass, they can process a Visa card or a MasterCard, it's built in. The caveat here is only 25% of retailers have the NFC needed to do this, but it comes out of the box, so they can now accept credit card payments. RAS QR comes naturally out of this. This is integrated to the rails of the bank. It can expose a RAS P2M QR. We can connect these sound boxes to it instantly because all of the software layers needed to manage these terminals and connect them and credit score them are already a part of the stack. So day one, you can plug in any sound box from any manufacturer you want, and you can start credit scoring that retailer just on incoming transactions. Once that money is in, the retailer can buy stock from the distributor. You can connect the distributor through this, through the other layers I mentioned. They can get digital loans. They can participate in committees. They can repay those loans. They can sell top-ups, bill payments, virtual goods, and they can do fund transfers. This is what retail merchants need. So we need to start thinking about them, their specific use cases, and integrating financial services embedded in the whole chain where we capture our data. And finally, this is the last piece of the stack, which I'll speak to you about. And let's see if I can make this work. So a lot of us are working on ROS P2M QR codes. We're working on how to put them up into retail. And it ends up, there's a really big stack around this. I'm going to just show you a transaction here. So this is an example of a soundbox here. So why is this interesting? Well, we already had the ROS P2M QR. Why it's interesting, this is a nuanced point. I just want everybody to appreciate this. This is an internet speaker. It costs about $12 after you get your duties and everything in, probably like $18, $20. Why is this important? Because this costs so much less than a POS machine, $300, $400. And the biggest thing, and last panel they spoke about this, is how do you reconcile your payments? You're paying somebody's Easy Pesa Jazz Cash wallet, it's probably somebody else, such a Agai payment, screenshot bhejo, it takes time to do it. As I'm working on my countertop, I'm the only employee, as I'm selling and dealing, I know you owe me 340 rupees, you pay it, awaz aa gayi mujhe. I move on. And this has been tremendously successful in China, it's been tremendously successful in India with UPI, and it's going to be tremendously successful in Pakistan. It's a nuanced case. It doesn't mean you have to have a soundbox, you can just scan a QR code. But these small nuances, like how long it takes a retailer to open up their phone, check if the transaction has come when he has a line of people waiting, this makes all the difference in usability. So the last part of our stack is this entire layer of a terminal management system, which you can manage your devices, retail IDs, map them back to the bank accounts, and have this MQTT server. I know I'm talking about a technical terminology, but you need this entire stack in order to have a unified acceptance from your devices and your QR codes. And why is that important? Because if it's not unified, if you buy soundboxes from one vendor and he says, use my TMS, my terminal management system from my Chinese vendor, and you buy another soundbox from somebody else and they give you another software, now you have to reconcile across all of these softwares, it defeats the purpose. So I think it's very critical for the financial institution to have centralized terminal management systems and MQTT servers that everything talks to. It gives you a central point to credit score those incoming transactions, which I think are going to be very low-hanging fruits for the entire industry. So these are the various components of the stack. They're stitched together. We've integrated about 9 manufacturers from China. So we said we shouldn't be reliant on just one. So we've customized firmware, it speaks Urdu, and you can customize an infinite number of these. It's not where you buy the soundbox from, it's a commodity product, it's how you connect it back into your sort of software platform. So this is the technology stack through which you're getting data, that you're credit scoring, you're creating your rules engine on it, and you are dynamically, instantly dispersing, credit scoring, KYCing, and collecting. This has never been possible in history before. All of these tools are live now, they're available in the market, and it's just a matter of us and our imaginations to scale this, because we can really make a dent in the GDP of the country. So I'm going to just leave you with a quick video. If I could ask you to just play a video. And then I'm going to ask Khurram to come and talk to us about more of the technical aspects of once you have this data and this technology stack, or something like this, how you use that data to actually give scoring. And Dr. Osmani at the end is going to basically tell us how to ensure that this is Islamically compliant. So I think it's going to be quite interesting. If we could just play the video, please, then I'll hand it over to Khurram. There we go.
भुगतान बॉक्स पर 1250 रुपए मौसूल हुए।
Thank you very much. It's been a pleasure speaking to you. I will hand you over to Khurram Saab, and I think we'll learn a lot.
Assalamu alaikum and good afternoon, everyone. Thanks, Munas. I hope everyone can hear me loud and clear. So I think most of the people have discussed about the potential of SMEs in Pakistan, so I will not go into details. I would just like to share our learnings because we launched Easy Paisa Karobar app earlier this year, which is now scaling up very nicely. So just to share the thought process, basically we at Easy Paisa believe that in the SME sector, retailer or a merchant is actually a very integral part of the ecosystem. And those merchants and retailers actually comprise the most significant part of SMEs. So what we realized actually was that from a perspective of the retailer, there are actually three main challenges which they face while taking a loan. Number one, there is no formal product available in the market, or if there is available, there is a significant lack of knowledge, number one. Number two, it's also challenging for them in exchanging their business information because at times they don't have time in order to share that data. And number three is the credit innovation from the retailer side, right? Because there are no product as such available for the retail side. Similarly, from the financial institution perspective like Easy Paisa and Telenor Bank, from our perspective, the business KYC is actually a missing leg because most of the retail outlets in Pakistan are actually not registered SMEs. So these are normally owned by the retailer individually and different people actually serve them. And number two is the lack of availability of the data, right? So in order to solve all of these problems, we did three main things. Number one, we partnered up with Dukaan earlier this year, so that retailer should have a front end where it's a kind of a one-stop solution for them, number one. Number two, we partnered up with different FMCGs and distributors because, I mean, FMCGs and distributors do have knowledge कि कौन सा दुकानदार क्या चीज़ खरीद रहा है and what's the frequency. So that partnership is actually helping us out in terms of serving the missing data leg. And third is the credit innovation. So we have also set up a cloud-based high-tech technical solution, which is now live in the market. So these are the three things that we do. And then when it comes to, by the way, do we have my slide? Because there was one slide on the credit scoring. Otherwise, I can verbalize. That's okay, right? मैं वैसे verbalize कर देता हूँ, right? So जब product हमने launch कर दी market में with the name of Easy Paisa Dukaan, then comes the most important part, which is the credit score. कि किस merchant को हमने कितने पैसे देने हैं. उसमें what we have seen in the last 1 year, there are three main important aspects which we should keep in mind. Number one, how to link the business KYC with the individual KYC when it comes to merchant lending. Because जिस तरह मैंने पहले explain किया कि अगर एक दुकानदार है, एक वो चला रहा है, तो उसका business is not registered in his name, right? कभी उसका भाई होगा, कभी उसका कोई दोस्त होगा. So the most important aspect is to get individual and business KYC and to link those. This is the missing leg which actually takes most of our time, number one. Number two, to establish कि ये बंदा इस business में कितने अर्से से है. So generally, as a rule of thumb, we take minimum 6 months of business activity of that retailer. And number 3 is actually the volume of the purchases that he does from his merchant and ticket size or उसकी frequency कितनी है. So I think अगर आप KYC ठीक कर लेना तो more than half of the problem is solved, right? और उसके बाद we focus on कि उसकी frequency कितनी है purchase करने की from the distributor and then ticket size and all those things. So if you can get sort of these 2 things, then retail space में फिलहाल there is no sophisticated algorithm involved, unlike consumer loans, जिसमें हम we do follow a very sophisticated data science built algorithms. Retail side पे KYC is half of the problem if you can solve it, and then these 3 KPIs in terms of volume of business, उसकी frequency क्या है और उसका ticket size क्या है. These 3 things can actually serve 90% of the problem, and you can actually allocate a credit score to that merchant. And then moving on, this is my last slide on the, if you can move on, right? So in terms of key metrics, normal जो हमारा lending का business है, इसमें we do talk about NPLs and disbursements and PAR and all those things. However, in this case, engagement is very, very important because RF की line खोलना is an easier part. What we focus on कि किस frequency से वो retailer हमसे engaged है. And then the other part is the market penetration, right? If we have a target of around 10,000 merchants, how quickly we are moving, right? So at this stage, where the industry is and where EasyPaisa is, the NPL and disbursements is the secondary KPI. The primary KPI is how much market share or how much penetration have we done so far. So this is by and large all from my side. Bottom line is it's not a very complicated business, right? The only thing is I would like to reiterate, to establish the connection between consumer and business KYC, number 1. And then if you have a simple 3-4 KPIs of their turnovers and volumes, I think your lending the CN 90% is sorted out. So this is all from my side. So over to Imran Saab in case he wants to add anything.
Dr. Imran Usmani will just be here in 1 minute. So maybe we should use this time while he's rejoining us on stage. If there are any questions, we can have those answered right now by Khurram on his slides and presentation. So I'll open up the floor if anybody has a question. This is a great time. Ji, please, Asif.
In terms of the financing cost?
So it's 0.1% per day. So APR is 36%. Yes. Sorry?
So the question was, what is the markup rate and what are the defaults that are being seen?
So APR is 36%. Default abhi nahi hai because हमने ये business शुरू किया around 6 months ago. So I mean, still it's too early to comment on the default. लेकिन what we have seen is कि अगर आप इसको score कर दें with respect to the KYC and the 3 KPIs, I would say it's around 5%. Right. But still, I mean, it's not more than 6-month-old vertical. So I mean, the PAR and the NPL is too early to comment on this.
Any other questions? Yes, we have one someplace, sorry. In the back, right there.
Yeah, my name is Bilal Ahmed and I'm from Premier. We are a distributor. Pakistan is one of the largest distribution house. We have almost 40 plus principals working with us. Question number 1, are there any, for example, supermarkets working with you as SMEs, for example, for the loan and lending? Because we as distributor are already financing them free of cost. If you talk about 0.1% per day, that makes about 3% for the month. Right now, they are taking this lending leverage free of cost from your distributor. So why will they shift towards you and taking the lending and financing from you? Number 1. Number 2, we are already, for example, this is overburdening our finances and our cash flows because it's like hitting us and we are giving advance to the company already. But we are not like supporting this to the industry. So what is taking us like, for example, in terms of lost sales, if they don't have the cash, for example, or if their lending is like, for example, if they are like finished with their lending limit what they have given us, it goes into the, for example, lost sales. Because we are financing their inventory, we are financing our inventory as well. So how like Dukaan or Easy Paisa will like cope up with the situation?
Right. So first to add, ये जो हमारा पहला project था, the M2D का merchant to distributor lending, this is our first project. In terms of the roadmap, we have also launched this service जिसमें हम target करेंगे to the online markets. So there are quite a few online players who are working with us, but only for the payment leg, not for the lending leg, right? So जो आपने explain किया ना, this is exactly the reason कि I mean you guys will obviously have a limit to fund your partners, right? So इसमें players like us comes into place, जिसमें अगर हम KYC करके रख लें और उसकी credit scoring करके रख लें, so I mean we do have this part of the roadmap, and yes, we are talking to quite a few online wholesalers for this lending products that we have.
They are taking like free of cost financing, and from you it will be like 3% from their profitability.
Yes.
So how will you convince them to like take out from their profit and give it to you?
देखिए, as long as they will get free funds from you, obviously वो opt नहीं करेंगे, right? लेकिन end of the day, as I said earlier, free funding will have a limit to it, right? You can't fulfill their unlimited needs in terms of lending, right? उसी वक्त वो हमारे पास आएंगे when they know कि it's robust, it's state of the art, और वो instantly लेंगे. लेकिन I mean as long as they are getting free of cost, obviously no one would like to pay for it.
This is Javed Idi here. First of all, thank you very much for the wonderful presentation, Monis. ज़बरदस्त, आप काफ़ी अरसे से ये काम कर रहे हैं, मैं देख रहा हूँ, जहाँ दुकान आपने पहले dukaanstore.com से शुरू की थी, and now it's complete creation, ideation, from then creation and to the reality. So congratulations on it. Secondly, Hamza Saab, thank you very much for inviting us, and it is a wonderful session. All industry experts are here. I'm sorry, I'm just trying to say these words, very important. मेरा जो सवाल है वो थोड़ा सा इससे कुछ रिलेट है जो अभी रिटेलर ने किया है. वो बड़ी सही बात उसने कही कि आप वैल्यू ऐड क्या करेंगे, नॉट ओनली टू यू बट एज ए इंडस्ट्री. अभी एक सेशन हुआ था, आमिर साहब ने और हुसैनी साहब ने और सब ने डिजिटल की बातें की. हम डिजिटल पे तो सब बात करते हैं, बट जो मेजर प्रॉब्लम है वो ये है कि डॉक्यूमेंटेशन ऑफ ट्रांजैक्शंस. वी हैव अ पैरेलल इकोनॉमी गोइंग ऑन, देयर इज़ नो टू क्वेश्चन अबाउट इट. हाउ विल यू मेक श्योर कि हम उसको करें? नंबर 2, हमारे यहाँ कोई डेटा प्रोटेक्शन लॉ नहीं है इस चीज़ पे. उन चीज़ों के लिए जो फंडामेंटल्स जिसको हम कहते हैं, जो हुमायूं भी कह रहे थे, हाउ विल यू हैंडल इट? सेकेंडली, इसके ऊपर टैक्स रिजीम क्या कहती है? बिकॉज सबसे बड़ा डर लोगों को क्रेडिट कार्ड को यूज़ करने में भी यही था कि जी ये हम जो है ना क्रेडिट कार्ड पे ट्रांजैक्शन इसलिए नहीं करते कि टैक्स नेट में आ जाएंगे. फिर वो एक टाइम लगा उनको समझाने में, टैक्स नेट में नहीं आएंगे आप, इस चीज़ से कोई नहीं आते, आपके कैश फ्लो पे होता है. But reality of life is that every retailer has a multiple books, and how can, under these circumstances, you can support multiple books? Now you have to support 3 books. One book he is already managing, the other book which he is managing himself, and now there is a need of a 3rd book which you are talking about. So I'm also in this field and I'm trying to crack this कि इसको करें तो कैसे solve करें, what incentive उनको मिलेगा. जैसे आपने कहा कि जी रिटेलर मेरे जब उसको फ्री मिल रहा है तो आपके पास क्यों आएगा? आपके पास इसलिए आएगा कि आप इसको ऐसी चीज़ देंगे जो स्टिकी करेगी और जो उसकी फैब्रिक में डे टू डे में उसको ट्रस्ट वर्दी बना देगी. जैसे वेदर देखने के लिए हम अपना फ़ोन देखते हैं, कहीं और बात नहीं करते, हमें पता चल जाता है कि वेदर क्या है. So something like this has to happen. It takes time definitely, but these 2 things which जो आप कहते हैं कि जी परसेंटेज ऑफ द टैक्सेस, सेल्स, प्रोविजनल टैक्स, एक आपका कस्टमर जो है वो बलूचिस्तान में है, एक इस्लामाबाद में है, एक पंजाब का उसका है, और कराची में एक अलग, सिंध में अलग है, उसके रीजनल टैक्स अलग है, उसको डबल टैक्सेशन का भी मसला होता है. एक ट्रांजेक्शन होने के बाद वो कहाँ से पे करेगा? सो हैव यू थॉट ऑन दिस? बिकॉज मेरे लिए ये अभी तक आई एम इन अ बैंकिंग फॉर द 30+ years, बट इट्स माइंड बॉगलिंग कि हाउ टू सॉल्व दिस पजल.
Javed Saab, great insights, great questions, as always. So first, want to talk about documentation issue, staying part of the informal economy and not jumping into the formal economy, which is an obstacle to adoption of all of these great things we're talking about. And I think this is the first question. Often we don't try because we think this is going to be the bottleneck, though no point in doing it. Now it turns out, if you go to a retail store today, and we all go to our neighborhood stores, just go to your neighborhood store, ask him if you can pay him with Jazz Cash or Easy Pesa. I'm willing to bet 95% chance वो कहेगा हाँ ठीक है मेरा ये account number मुझे दे दो. He's already documented. He's already getting transactions into a banking channel, banking rails. And I mean, if we talk to our friends at Easy Pesa and Jazz Cash, they can run a filter on their consumer wallets and tell you how many are actually using it for business transfer purposes. So we're seeing that very quickly. Yes, there's a resistance to joining the formal economy, but because the convenience that this new digital economy affords, the convenience of paying online without having to go to the bank branch, take cash, hand it to somebody else, is adding considerable value, and it's convincing people, okay, it might be worth joining the formal economy. You put credit into that. Now they're able to get credit and they're able to buy more. They're able to actually grow their business by joining the formal economy. And I think one thing as well, India's a great example, other countries, the benefit of joining the digital economy, once you get this whole ecosystem interconnected, is a multiplier on the amount you would lose on having to pay taxes. So I think ye hawa chal rahi hai. The boats are also already sailing that way, whether they like it or not. The noose is getting tighter. More and more people are joining. In my view, it's a matter of time. Will it ever be 100%? Maybe not. Will it be 50, 60, 80%? Probably. I think that's where it's going. Especially now you have this ROS P2M QR, which has made it incredibly easy for any merchant to now collect cash in a digital channel. So you're absolutely right. But I think if you look at the way the wind is blowing and the way more and more retail merchants are joining the formal economy, I think there's something to be very hopeful about.
Ji, thank you very much. There is no two question about it. It's a wave, we have to go through this, and crests and troughs aayenge. I just want to share the real life example of these type of things. I decided to buy some gadgets, which includes electrical testing equipments, some pressure pump and all these things. So I went into the wholesale market, which is into the Kori garden. And I got money with me, but I said, okay, I'm going to try this time to pay via digital. I went to the smaller shop. He accepted the digital. I'm very happy. Jazz Cash, Easy Pesa, something like this. Then I went into the top-notch importer, those who got the right fluke equipment and all these, which are of the quality from Japan and all these things. Went there and they said, yes, we can accept. And I was really surprised. Okay, we can accept the digital. But what they have given me, he has given me 3 different numbers and said, कि ये Easy Pesa है, इस पे दे दे, ये Jazz Cash है, इस पे दे दे, और ये है, इस पे दे दे. Means actual transaction, which is supposed to be documented and become a credit facilitation service for us, has gone. Because Absolutely. I've spent 50,000 rupees on 2 shops, and 3 transactions which I've done are of Muhammadin, ABC, CDE. Means these are the accounts which they keep to run their parallel economy. Correct. And they carry out these transactions. So when it comes to the consolidation and realization, like you said, SKU of a specific merchandise, we हमें काम कर रहे हैं, आप बहुत अच्छा कर रहे हैं, मैं मान रहा हूँ. But इस एरिया को आप जरूर देखें, ये एक ऐसा एरिया है जहाँ पे pilferage इतनी हाई लेवल की है कि आप डॉक्यूमेंट कर ही नहीं कर पा रहे हैं. And then the result will be again, all your efforts might not go into the vain because we are a different nation in this.
So even if 25% of these merchants join the economy and they take loans, the number is massive. It's a huge, huge number. And as I was saying, I think it's going to increase over time. Aapki jo baat hai, it's interesting. I won't go into too many details, but if I'm seeing 3 transactions, I'm going to credit score them on just 1. So usko jo loan milega, it will be a much smaller loan than he deserves because he split up his transactions. So I think you're absolutely right. These are real fundamental issues. But when we go into the field, and I think the Easy Pesa team is here, and Shehzad Saab is here. He's going to be speaking on a panel next. He can tell you the experience of the conversations they have directly with the retail merchants. They're doing this, 1 merchant at a time, payments, loans, de rahe. So I think in the next panel, we should actually ask that question of Shehzad Saab and get some real field-based information. With that, I would like to invite Dr. Usmani to speak to us on the Islamic aspects of how to finance your supply chains. Usmani Saab.
Please open the presentation. Bismillahir Rahmanir Rahim. Nahmaduhu wa nusalli ala Rasulihil Kareem. Amma ba'd. It's really very good and an honor for me to be here and listening to all the speakers, distinguished speakers. So my part is to provide you that what is the Sharia compliant solution for any supply chain financing. So inshallah I will go through that if time will permit me, inshallah. Before that, I would like to mention one thing, that day before yesterday we had a very good seminar in Federation House, and there were so many businessmen, and you know that these are from the supply chain side, either from FMCG or from the supplier or from the vendors or different types of people. And all of them were unanimous that we have to get rid of riba, and we should try to avoid that all transactions should be Sharia compliant. So if we see that the whole economy, whether it is a financial included or not, so the depositors who deposit their amount, so they are the basically supply chain people, either merchant, vendor, or distributor, or FMCG company, and then maybe corporates. So corporates which are being used by the all money, or maybe 50% of the money, is 0.01%, something like that. But the remaining depositors, they are not getting as such benefit in our country to get benefit of their own wealth, which are being deposited into the banking sector. So why they are giving to these deposits to Islamic banks, and their growing rate and their growth rate is so high? Because they want to avoid riba, and they want to interest-based financing, interest-free financing. Here I would like to mention that what is the Islamic finance? In simple word, I would say that the Islamic finance is doing trade but not doing interest. What is interest? Interest is mentioned here that it has been defined as kullu qardin jara naf'an fahuwa riba. That any loan that derives or that requires any profit out of that is riba. So there are so many Quranic verses and ahadith about the eating riba, or any person who is causing the eating riba has been cursed, and anyone who is witnessing or who has been involved in documentation or assisting in the interest-based transaction. And I think by all of these people who have discussed today, you have known that what is supply chain. So supply chain starts from consumer or from the end user it goes to the higher to the corporates, where that particular product has been produced. So there is a very big chain, maybe starting from corporates, then FMCG companies, then different types of distributors, and then the vendors, and then merchants, and then consumers. So why they need the Islamic finance? Basically, as Brother Munis has mentioned, that in each sector sometimes require financing for their short-term working capital. So this is the requirement of the short-term working capital finance for their requirements, and Islamic banking basically provides them some products to cover that. As we have mentioned that these are in supply chain, we have distributors, we have vendors, we have retailers, we have suppliers. So in Islamic finance, we will do the supplier financing, we will provide the merchant financing, we will do the distribution of FMCG companies financing, or invoice financing or receivable financing, which is called factoring or discounting, or working capital finance or running finance. So what are the products? As I mentioned to you that only lending money out of extra premium is not allowed, but doing different types of businesses like doing murabaha, musawama, which are Arabic terms, but easily we can say that buy and sell with profit, with deferred profit, or we can do tijara, which is a product of the Islamic banks, where we use the wakalatul istismar, the investment agency contract, in which we enable to the borrower to buy on behalf of the financial institution and then sells to the end user, and then he will return the money with the profit, because the principal is bank, and whatever he makes, basically it is made for the bank or financial institution. So then the agent will be given a particular agency fee, and the remaining, for example, if banks say that I would like to have around 20% or 25% out of your all proceeds, so then the remaining amount have been given to as incentive to them as per the repayment days. So this is how that running finance also has been done through this tijara model, and invoice financing and receivable financing is also being used. It is you have heard about that Abhi they are using the earned financing product. So basically this is a particular charge card product with the wakala or collection agency agreement with that. So this is also permissible according to Sharia. So it is very much similar to that. It's a working capital financing is also allowed through different modes like murabaha, musawama, etc. As I mentioned to you that it is like a triangle. In the upper side, this is the corporate, then they are supplier, and these suppliers provide the raw material to their corporates to manufacture or produce the goods, and then it will be again given to the suppliers or distributors to divide, and then vendors, and then the distributors, and ultimately go to the end users. So the whole chain is called supply chain, and it is very, very important that once we finance them as per the Sharia ruling, so it will basically bring the fair distribution of economy as per the Sharia. Because in Sharia, this is very much important that your money, your all wealth should not be concentrated in few hands. So nowadays, although all Islamic banks are doing Islamically halal, but as we are in the stages, so we are not providing that the all money given back to these supply chain people easily. And I think after coming these digital era, it is easier to give them through digital financing to these people, unless otherwise it was very much difficult because having much resources for that or more expensive transactions. One is you have heard about BNPL. BNPL is a simple buy now, pay later. So it is being done through different modes like Musawama or Murabaha. The difference in between Musawama and Murabaha is that in Musawama, the cost price is not mentioned. For example, like KISPay is providing the mobile phone within 6 months, and they don't have any profit out of that. It is called 0% because they earn from the commission from the KISPay. And then, for example, if it is a larger than or longer than 6 months, so they may have some profit. So they have a commission plus profit. So it is therefore it is being used Musawama, that because the cost price they do not want to mention, just sell price they want to mention, which comprises of the commission as well as profit. So as I mentioned to you that sometimes BNPL is being used through Murabaha. Murabaha is very simple, that you have to tell the cost price and the selling price, which is the paid by the customer on deferred payment basis. So this is the process flow. I think I should not go to that one, process flow, that how, because it is very much important that in the Islamic transactions, that everything should be in a process. You cannot do something which could be done later on earlier, because if you do that, for example, if you sell a thing before you own, so it becomes a short sale, and it is not allowed by Islam. So therefore, it is necessary to follow a particular process. But it is easier even in the digital format, because we have the blockchain or a smart contract within these particular portal. So once you use that particular portal or platform, so everything will be done automatically. So the customer will sign or accept the smart contract, as well as he will do the all process as per the sequence made in the platform. Otherwise, usually in the manual banking, it was sometimes, it is an audit issue, that sometimes the signature may be after the transaction, or maybe of the later date or something like that. So it is easier there. As I mentioned to you about the Tijara, I mentioned that it is a Wakala-based contract in which there are two options or two variations in the transaction. One is that it is used for the running finance or working capital finance, whereby some inventory has been bought by the borrower, and remaining inventory he wants to get it financed by the financial institution. Or the other second variant is that the whole inventory he wants to purchase or to buy, he needs cash flow for that. So for these things, Tijara is being used, in which, for example, if the 100% inventory is being used to purchase on behalf of the financial institution, it is just simple Ijara, simple Tijara or simple Wakala. But if it is the 50% already has been purchased by the borrower, and 50% is being purchased by the inventory by the wakil or agent on behalf of the financial institution, so it becomes musharaka. So we use sometimes musharaka or diminishing musharaka also in that particular type of transaction. So that was the process flow, and I think we should, because of the shortage of time, we should leave that. There is one illustration, as I mentioned to you, that, for example, if you have purchased a thing, uh, there was a, on July 1, distributor availed Tijara financing by selling its stock against a price of 20,000. Distributor get amount of working finance for working finance needs. Distributor agreed to sell these goods to end users as an agent of the bank. As an agent, distributor is required to sell these goods and collect proceeds from market. Now, basically, as I mentioned to you, that the remaining amount is being returned to him as per the incentive of the, and it is calculated as per days. So the formula is that financing amount multiplied by bank's profit rate is divided by 365 days, basically is the value of the incentive of per day. So if he, whenever he defers per day, so that amount he will lose that. Alhamdulillah, as Brother Amir also has mentioned, that we have done, Alhamdulillah, distributor through the Mizan Bank, 270 distributors available financing via digital platform, 31,952 transactions disbursed, and 29,975 transactions settled, 27.5 billion disbursed, and 25.8 settled successfully, Alhamdulillah. So FinTech partners, Hubble, an in-house team was with us in that type of transaction. Last but not the least, that sometimes these supply chain people, they need a fixed asset financing. So it is very easy that simply as you do for consumer financing for car ijara or house financing or diminishing musharaka or other like leasing, so you can use all these modes of financing for that and to cover for long-term financing for their basically fixed asset financing. This is my presentation. Thank you very much. Jazakumullahu ta'ala. Thank you. Assalamu alaikum.
Bahut shukriya. May I request Hamza Hashmi to be on stage, also to be joined by the CEO of Habib Metro, Khurram Shahzad Khan Sahab. All right. And Rahmat Hasni Sahab, if you could kindly join us on stage. And Sayyid Amir Ali from Mizan Bank, if you could kindly join us on stage and help us thank our panel. So Monis, thank you very much for the session. And if I could request a memento to be given to Dr. Imran Ashraf Usmani, who's the Vice Chairman of the Sharia Board at Mizan Bank. And also Mr. Mohammed Khurram Varaich, who's the Group Head Digital Lending at Telenor Microfinance Bank. And just if all the gentlemen could just join for the photograph while I announce that we can now break for lunch, but our time to come back and into the hall would be about 2:15. So that we can begin our next session. We do have a couple of people joining in online, and we'd like to resume the session as quickly and promptly as possible. So enjoy your lunch, and namaz is also, a venue for namaz is also available. So we'll see you in about 45 minutes. Thank you. Those who are standing in the back, if I could kindly request you to take your seats, we are ready for our next session. If I could request both our speakers for the session, Mr. Mudassir Akil and Monis Rahman, to join me on stage. Mudassir Akil is the Group Executive Bank Tech for MTN FinTech Africa. And we're very, very fortunate that he's extended his stay to make sure that we can have this session. And Monis Rahman is, of course, one of the partners of the conference and also the CEO of Dukaan. So Mudassir and Monis, I will hand it over to you. Ladies and gentlemen, please put your hands together. And this is our fireside chat on mobile money, e-commerce, digital lending, and payments.
Assalamu alaikum. Welcome back. I'm back. And it is my pleasure. So prior to getting started, if people could please sit down, zara aage ki taraf aa jayein. We are in for a real treat. And it's a very rare treat, and I think this is probably one of the only places that we have access to the sort of information you're going to hear about. So again, if I could ask you to please have a seat, baith jayein please, and we'll start the session. Very honored to have with us today Mudassir Akil. Mudassir is well known to most of us in the industry. One of the few people who's been involved in this industry, the digital banking, digital economy, from its inception, has been a key player in many of the milestones of the industry, from launching the first smartphone wallet, the SimSim wallet, when he was CEO of Finca Bank. Then he moved on to EasyPesa, and we've seen the wonderful things that have happened in EasyPesa. It's a fantastic team. They're here today. And a lot of the groundwork for the profitability that we're seeing today, I think, was laid during the time you were there, Mudassir. So well done again. And most recently, Mudassir has moved outside of Pakistan to Africa at MTN, where he's doing some amazing stuff. And those who don't know about MTN, you'll hear a little bit about it, but it's a massive scale and it's a massive sort of market across Africa. So thank you very much for being here, Mudassir. It's a real treat to have you here. So the first question is, why did you leave us in Pakistan after all of the great things you did here, and now you're in Africa? What are you doing in Africa?
Thank you, Monis. Okay. Thank you, Monis. Real pleasure to be back in Karachi almost after a year, and what I'm doing in Africa. So I'm working for a fintech which is backed by an MNO called MTN. MTN is the largest telco in Africa with presence in 16 markets with close to 300 million subscribers. Wow. So you can, just to put things in perspective, 1 out of every 4th African uses MTN. So on the back of it, they also launched fintech business about a decade ago, which has now become the largest fintech in Africa. Also, MTN Fintech has roughly 70 million MAUs across 16 markets. My responsibility is to manage their lending business. So it's been a very rewarding experience. You know, Africa is a very diverse continent, unlike what we think that it's all homogeneous, which is not. And you know, regulatory landscape is quite interesting. Obviously, economic differences, geographic differences, etc. So I'm learning, and it's a large-scale operation. We disburse on an annual basis close to $2 billion in loans, about 100,000 loans a day. Wow. So it's a factory. It just runs at a very massive scale, the market is growing very, very rapidly. Just incredible things are happening in terms of you know, the penetration of financial services and lending included, just like in Pakistan.
So, you've mentioned 16 countries across Africa, and those of us who've had a chance to go to Africa realize it's a continent and not a country, and it's very diverse. There's a regulator in each of those locations. We have a hard enough time complying to one regulator in one country, and you've built this platform across 16 countries. So, I mean, what would be very interesting to understand is, it's a massive scale you're operating at across the continent. What are the similarities and the differences between what you're seeing across Africa, and I know it's not one brushstroke, as compared to, you're an expert on the local ecosystem, so what are the analogies and sort of lessons we can learn across both geographies?
Yeah, so lots of very interesting things. So, first of all, I can just briefly touch upon the operating model. So, because you said, how do we manage the regulators? So, it's actually a great example of how banking sector and the fintech have joined hands, right? So, all of these loans are being given using partner banks' balance sheets and their funding, right? So, we are essentially using our wallet platform and tech for credit scoring purposes. So we provide data, and then we collaborate with multiple lending fintechs also, depending on the market. And then there's always a banking partner, and we have a whole menu, whole list of banking partners in every market.
If I can just stop you there, I know there's a lot more to talk about here, but this is a very interesting point that is a bit of a deviation from what we've seen here, where you'll have one bank or financial wallet provider that is doing both the acquisition through the wallet as well as the lending, so it's sort of one. And the model in Africa that's working is you sort of create a marketplace of lenders. And that seems very interesting in terms of an evolution for the local ecosystem. So, if you could just highlight a little bit more about that, how do you plug in more than one lender into one core platform and make a marketplace?
Yeah, that's exactly is the model. It's a marketplace model. It's a one-to-many architecture. And the multiple banks partner and they place their competing loan products in the marketplace. And then people can actually choose that, which loan pricing is very transparently available, the loan tenors are available, and then, but I mean, obviously the credit goes to the ecosystem which has been built painstakingly by people who have come before me, obviously, and the MTN FinTech folks. But then equally to the foresight of banking sector in Africa, where they are actually very actively looking at fintechs as partners, not as competitors, which I think is a very important point that Pakistani industry needs to internalize, that there is a lot of complementing skill sets and assets on both sides that you can create a much bigger value together. And that's happening, I think, much more successfully, in my view, in Africa compared to Pakistan.
Do you see that happening in Pakistan, where banks will collaborate with other partners that have already acquired merchants and share loan books, so that, like split apart the work in a marketplace manner? Do you think this can happen in Pakistan?
I think we will see that more now, in my view, in the coming years. It has not happened successfully. I mean, I've tried my best in the last few years, and there's a lot of I think closed-mindedness, and it's part of the journey, right? It's the maturity of the business models, etc. But a lot of our digital people in banks think that they can be a bank. A bank is a complex institution. It's highly regulated. And it's impossible for it to innovate inside the bank at the same speed the way fintechs can create new products, right? So that's the first thing that they have to understand, is that they have balance sheet, they have access to low-cost funding, they have a very powerful license that they can leverage and then, sort of like use the innovation which is being done outside in win-win partnerships. So I think that mindset has been lacking, because a lot of time people want to say this, I want to have it all under my control. It has to be my app, it has to be my IP. And I think the world has moved on. Partnership ecosystems are really how the marketplaces are being built. And I'm sure they will now come to this realization soon.
So this is also a very interesting point you made, and we've been hearing this throughout the day. Salim Saab also spoke about this, how it's important for everybody to partner and integrate in order to make this succeed. Very wise words, but we've actually seen it play out in Africa, and that's exactly how it played out, and that's you know, how they grew. Now, another analogy between what is happening in most countries in Africa and Pakistan is the lending is happening on mainly on data because of documentation, which is poor. And when you give loans on data and your credit scoring segment, you tend to have a higher risk because of the lack of documentation. The numbers work in the end. But the pricing of those loans often ends up being more than what we're used to seeing by commercial banks. And so the question is, what is exploitive? What is too much in the context of loans to this undocumented market? Where do you draw the line and say this is exploitive, it's too expensive, ye loan nahi dena chahiye?
Yeah, so Monis, this is a very, very important question. The question we get in our space get all the time. But before I answer that, I just wanted to highlight your previous question was important about similarities and dissimilarities, right? So I want to, the reason why I wanted to come here and speak is to identify that how, you know, similar developing markets are. And then, so there are a lot of things that are happening in Africa which are identical to which are happening in Pakistan. And what are some of the things that they have done better than us? And then obviously they can learn a lot from us also. It's vice versa. But so, for instance, if you look at, is it a massive cash economy in majority of African countries? Yes. Do they have a balance of payment crisis? Yes. Do they have a low taxation base? Absolutely. Is SME credit a challenge? Yes, it is. Regulatory environment actually in Pakistan, in my opinion, is superior to majority of the 16 markets that I've seen. I think only maybe 2 or 3 handful of countries can compete with the maturity of our regulatory ecosystem that we have here. But then at the same time, when we see the usage of digital financial services, majority of the African markets in sub-Saharan Africa, the smartphone penetration is at best equal to Pakistan, but majority of the time lower. And then so the entire ecosystem is, when you look at the infrastructure, is actually not really more developed by any stretch of imagination compared to Pakistan. But when you look at penetration and usage among the masses and at the base of the pyramid, it's actually much more prevalent. So I think I feel people have done more with less over there, right? So I think that's a big takeaway. And I think a big part of that goes back to, you know, this collaborative work which has happened between MNOs, between banks, between fintechs. And I think that's really the secret sauce, if you ask, which I think is still a little bit lacking in Pakistan. So yeah.
So the economics of these loans, back to what is exploitive pricing?
So I think this is very important to understand. So first of all, let me just share with you let me give some Pakistani numbers to the audience so that they understand what's happening in Pakistan. Because the beauty of, you know, digital transactions, that they scale in a stealth mode. And you don't even realize that, you know, what a sea change is already happening around you, but it's happening. So it's happening, for instance, for digital loans in Pakistan as we speak. So on today's run rate, if you take the 2 largest digital lenders in Pakistan, which is JazzCash and EasyPaisa, because I'm privy to some, you know, internal numbers, I won't break out numbers by any individual player, but on today's run rate, we are looking at annualized loan disbursements of close to 200 billion rupees in Pakistan today, right? That's about $750 million in small digital loans which is being disbursed. Now, you look at this number and you look at the entire consumption finance happening in Pakistan, consumer finance, and you will see that, you know, and this number is not really anywhere near the saturation point. So I was doing an interesting analysis on the African market, and what we were trying to do, and we were saying, take the average loan size of a digital loan, which typically varies depending on the sub-Saharan Africa market between $5 to typically $30, and you divide it by the average per capita GDP of that country, right? and you see where you rank. So we saw that there are 3 or 4 countries who are really high, and then there are a whole bunch which are low, and the baseline is about 1.5% of the per capita GDP, right? And we said, okay, so 1.5 is the bare minimum that, you know, one should expect that, you know, a country with all the right pieces in place in the digital ecosystem should be doing.
And these are the average loan size you're talking about. This is how you size the loan.
Exactly, right? So the average loan size in Pakistan is about 4,000 rupees when it comes to a digital loan, right? So we are giving now more than 3 million such loans a month in Pakistan. On an annual run rate, like I said, about 200 billion rupees a year. When I apply this GDP calculation, we are already at close to 1.5% threshold of our per capita GDP, which is about $1,700. And for instance, in Rwanda, they're already above 3%, you know, on the same metric. So Pakistan can easily double this number. There is enough space here. The other thing that I just want to quickly touch on before I get to the unit economics and pricing and, you know, challenge some myths over there, that what we found out, so for instance, I went to Ghana to understand that, you know, I saw that average ticket sizes are slightly larger. So, you know, how this money is being used and how these people can afford a larger loan. And what we found out that almost 1/3 of the borrowers in Ghana are actually taking these digital loans for business, not really for personal use. So because the small MSME financing is not available and it's not really, you know, digitalized, so people were actually, and these loans are scaling very nicely, were taking these loans to do very small businesses. So I spoke to a borrower. This woman was in a selling ladies' undergarments in a massive market, you know, of micro entrepreneurs, right? This is like a Itwar Bazaar in Pakistan kind of a market. And her entire inventory was on her head. And that she had bought from the loan that she takes from us. And we don't actually know that she's a small business user, except for when we look at the data and we can say that, you know, this is not really an individual user's usage behavior, and that's why I spoke to her, to find out what's going on. So I believe, so I'm quite certain that this is exactly what's happening in Pakistan, right? But Pakistan is slightly ahead in many ways because all of these loans are, because in Africa and many markets, these loans are not required to be reported to credit bureaus. Unlike Pakistan, where all of this data is being reported to credit bureaus, there is a treasure trove of this information which is available to everyone, all the banks who want to use their balance sheet, and if they want to lend to them, they can. They don't have to necessarily have GSM data or the wallet data. So there's a lot of good information which is available, which I think there are assets which can be utilized as one point. The second one on pricing is that the simplistic way to look at the pricing is that you say कि अच्छा ये 7 दिन का लोन है और इसकी pricing जो है वो 0.5% per day है, तो ये this is like 180% interest, so ये तो exploitation हो रही है, right? That's a banker's way to look at it. So or a person who actually does not need that kind of loan, that's how they would look at it. But if you look at the actual unit economics, how this business becomes sustainable, and this is why billions of dollars are being disbursed on less than 5% default, even in Pakistan and also in Africa. The default rate is actually below 5%. So typically on these kind of loans, we refer to them not as interest rate, but the total take rate, which is a combination of an access fee or a daily interest combined, right? So that typically ranges between 6 to 8%, right? And typically people take these loans for less than 14 days. So you are giving somebody credit for 7 to 14 days, and they will pay back, you know, anywhere between 6 to 8% interest plus fee for that time duration. Half of that revenue or take rate goes to cover loan default, right? So अगर आपने 100 रुपए दिए, 106 collect किए, तो हाफ जो था वो 3 रुपए रह गया. So 3 रुपए का मतलब है कि अब आप 3% default rate के ऊपर काम कर रहे हैं. You have to be super good. And the remaining 3% have to be now split between the partner bank, the lending fintech, and the MNO, right? So if they don't even make 1%, then why would they be in this business, right? It doesn't make any economic sense at all. So basically, this is how this business works. And on the other side, there is a user who is completely financially underserved, who has a short-term cash flow requirement, and this is a reasonable fee for them if they have to pay 5 or 6% to actually have this bridge loan available to them. That's essentially how it works, right? So I think everybody needs to first understand the target segment and their need profile and what's happening in their lives, the unit economics of making this business actually commercially sustainable, and then form an opinion that, okay, this is bad, this is haram, and I have a halal model for it, right? So unless you have it, otherwise you leave these people exactly how they've been for hundreds of years, which is unserved, with no dignified way, to be treated as actually truly, addressable market segment, which they actually are.
So you've said something that's very interesting, and I'm sure we're seeing it here. The nano loans, which are running, I think we calculated 5 million type nano loans that are being clocked in. I mean, it's really adding to the credit scoring data, first of all. But the second thing is, we suspect, in fact, we know that a significant portion of those are actually business loans. But because you're nano scoring them, they have much higher markup rates than you would expect of a productive loan where the risk is low. So because there's a lack of capital, businesses with high margins are taking these nano loans and repaying them and able to grow their business. But what we're doing is we're leaving out a very large segment of SMEs who may not have the kind of margins to be able to use a nano loan for their business. So that's where supply chain financing comes in, where it's a productive loan and you're scoring it against data. So when you look at Africa, nano loans have been wildly successful in Africa. They predate nano loans in Pakistan. They've done well. What are you thinking as lending head of MTN across Africa, 16 countries, on the supply chain side? How can you help businesses grow through lending beyond nano loans, which seem like it's a misfit for the use case?
I think that's the next frontier, right? And this is where a lot more work needs to happen, because the data on supply chain financing, on small businesses that you talked about, and you've got a great model in Dukaan that you have built, it's really lacking. And I have not seen a comparable model that has scaled anywhere so far in my experience in Africa, and I've heard some examples in Latin America, etc. But I think that's the silver bullet that we are looking for, at least when it comes to the supply chain for the retail merchant segment, for sure. And that's exactly why I gave you the Ghana example, where we don't have visibility that these are actually businesses, because their payments are not digitalized. We are not embedded in their supply chain. So we are now deducing from looking at their consumer wallet behavior that they're actually using it for business use. So I think that's where everybody needs to work, but and this is why this conference is so important for supply chain finance, because in the supply chain finance, the bank and the loan disappears, right? Because it becomes embedded finance, and you actually focus on solving the problem for your target segment, which is the retailer and the merchant. And then in that solution, credit is actually part of the solution, is embedded.
That's lovely. So you've seen a lot more than a lot of us. You've traveled throughout Africa with a clear lens. You've gone to these markets. Of course, you've seen everything in Pakistan. What are some future trends that you're seeing across both markets? Where are things going?
Yeah, so I think very similar trends as in Pakistan. So first of all, regulators are very keen to everywhere to introduce frictionless payments that we are seeing in RAST in Pakistan. So there are 40 countries right now in the world who are working on a similar real-time payment system like RAST.
Which we are saying is a game changer, by the way.
Which is absolutely a game changer.
For the local economy.
Unified QR, I think every single country in some way or fashion is working on a unified QR payment also. All the countries are focused on making P2P cheaper. So, person-to-person payments, they want to remove the friction from there also. Smartphone penetration is a priority. Access to broadband, mobile broadband is a priority in all of these markets. But having said that, all of these markets have problems also. So, I mean, a lot of time, we get into this doom and gloom kind of a mindset in Pakistan कि यहाँ कुछ नहीं change हो सकता जब तक government ये नहीं करेगी, right? मगर, I mean, in some of the cases, I've seen obviously great examples of some superb regulators and reform work happening in some countries like Rwanda, but then I've seen some mind-bogglingly nonsensical stuff happening also. For instance, in Ghana, there is a 1% e-levy on all digital transactions that has been imposed by the government to meet short-term revenue shortfall. I mean, we've seen similar kind of stuff in Pakistan recently. आप सबकी salaries पे जो नए tax लगे, so same stuff is happening here also. That doesn't make a lot of sense. But despite all of that, that's the amazing thing is that people are hungry to actually adopt digital financial services because it actually adds a meaningful value to their daily lives.
Yeah.
The same thing is happening. I mean, obviously, the core use case is digital payments, and then on the back of it, there's a whole ecosystem of startups and fintechs who are riding on top of this, new rails of creating new value, partnering with other fintechs and banks. And people are, hungry to adopt all of these services. So there's a sea change coming. And then when you hit the inflection point, as mashallah, I was speaking to Easy Paisa team today, and the numbers that they're sharing now, and I'm hearing from JazzCash colleagues also, they're also in, mashallah, doing very well, because I think both of the organizations have crossed the inflection point. So the marginal cost after that of growth in a digital infrastructure and platform is close to zero. And the speed is exponential, and that's when the amazing things start to happen. So I think in many of these economies this is happening. And in Pakistan also there is a tremendous amount of upside that everyone needs to embrace. And all the colleagues from commercial banks, I think they need to really get into a win-win mindset in terms of how aggressively they can partner with fintechs, because there's plenty for everyone here, in my opinion.
So I've got a bit of a story I just want to share on the back of what you said. We have a fruit seller, a lady who sells fruit to our houses. She goes and gets fruit wholesale, and we order and we pay her. And she was telling me that she takes a loan every month from JazzCash. And I was playing devil's advocate, and I said, "वो तो बहुत expensive है, वो महंगे आप क्यों लेती हैं वहाँ से?" And what she said really opened my eyes, because we can't relate to a lot of the cash flow problems. And she said, at the first of the month, I have to pay my mother 5,000 rupees, I have to pay my rent, I have to make all of these sort of payments. And my income is coming 1,000 rupees a day, 800, 1,200. So I take this loan every month, I pay it on time, I'm never late, and then I repay it from my sort of daily income. And I said, but the markup? She said, it doesn't matter, because I have access to the cash. I didn't have recourse after that. So there's definitely a productive sort of function here. So that's just one thing I wanted to put out there. The other thing was, we've been going to China and talking to manufacturers of these QR code sound boxes, which took off in India and China, but then we didn't see them anywhere else for a number of years. So we're talking to 9 manufacturers. All of them now, for the first time, are selling sound boxes internationally, because they used to sell only in China, huge sort of demand in China. They're doing it internationally because now they're seeing unified QR codes, to your point, appearing in various countries, and because the market's saturated in China, all of them are now starting to sell internationally. So another sort of a trend like you were indicating.
So I think last year was the first year when wallet payments actually exceeded card payments for the first time ever. Now, the chart is showing like it's just the curve is just going up massively, because the developing world, which is majority unbanked or underbanked, is all adopting digital payments, and QR is going to be the cheapest way to scale digital payments to all of the SMEs. The devices are very, very inexpensive. They actually accept, like any other POS machine, card also, QR also. It's all embedded. It's a beautiful user interface. It works for low-income people. It speaks. It's fantastic.
Mudassir, thank you so much for all of the insight you shared. Our time is up, but because we have you, with your, Hamza Bhai, please, your permission, I just want to take a question or two from the audience because it's a rare treat. So I'll open it up to 2 questions and then I think we'll have to move on. Asif Bhai.
To the government, so they don't feel like going to a riskier segment and make money from that. So why did it happen there? Why, I mean, the willingness, is it the willingness, or is it something that forced bank in those markets to come and join this revolution, and or they looked at the from opportunity side that this is a huge opportunity to capitalize on, and maybe it's a easy customer acquisition, maybe it's a quick deployment of funds to these segments and make money. And how is the market different in terms of lending to the government in those markets versus here? Because this here in Pakistan, lending to the government is the easiest, safest piece that, you know, instead of putting 5,000 field force on the ground and doing disbursement, collection, and all those challenges versus, you know, have 2 people in the treasury with 2 buttons, the money is disbursed, after some time, money comes back with a profit on it. So what is the reason there that it happened, it's not happening here?
It's a great question. I think so first, majority of the world is now experiencing very high interest rates, right? So the opportunity to place money in zero risk securities is everywhere. And majority of these countries, the governments are very aggressively borrowing from the market, so no difference. The quantum might be different, obviously. So honestly, if you ask me, I can't put my finger on it, but I think there is probably some lack of ambition, sometimes I feel, or collaborative mindset. The incentives to innovate are probably no different there than here. But a lot of these things, you know, are pushed top down. So, I think it's a leadership question mark, in my opinion, for the banking industry leadership also. Because yes, if you look at it strictly from a short-term perspective, you know, there's no problem and there is no incentive. But if you take a 5-10 year view and you look at, you know, where the trajectory is going, and now, you know, the regulator is really showing its intentions. It has given 5 digital banking licenses, and you look at what happened in Brazil in Nubank, how quickly it scaled, you know, and some of the other digital bank examples. You would want to do something. You need to have a point of view. I don't know how many of the current leaders have a point of view on this.
Great, thank you. Yes, in the back. I'm sorry.
I don't have enough information to really say that. So, I mean, I think it'll be not fair.
Roxana Nareja. I just have one question actually. This is something which we have been wondering a lot about, and you touched on this point about collaboration between the fintechs and the banks, and they should not consider each other the competitors. I mean, that is a thought process I think that we have been hearing, that is the way forward. But coming from the bank's perspective, though I'm with a digital bank, not with a conventional bank, but coming from the bank's perspective, what advantage a bank has to share its established infrastructure with the digital bank? Because they have worked towards establishing that footprint in the market, providing that infrastructure in the market. Now they have been pushed, or they have been encouraged by the regulator to share that environment with a digital bank, with a fintech, and obviously they are hesitant to do that. So please touch on this point, what advantage a bank can get from this collaboration, and what should be encouraging them in order to move forward. Thank you.
Great question. So Roxana, in short, innovation and scale, right? So you're getting access to innovation done by other people, and you can actually achieve scale, and you can leverage your balance sheet that you have much more rapidly if you join hands with, you know, it's like, you know, what if there was no Play Store, or if there was no Apple App Store, and Google and Apple decided that we will make all the apps ourselves to launch on our platform, right? So banks really need to think about that, our balance sheet and our license can be utilized as a platform, and we can actually really optimize that, our return on assets and how do we actually make more money in this business by joining hands with all of these people who are doing this wonderful new innovation. I think that's the mindset that I would think is the answer.
So we have a lot of hands up. I'm seeing it. We're out of time, and Hamza Bhai agreed to 2 questions, and I know we have to move on. There are people waiting. Mudassir is here. Feel free to reach out to him. Ladies and gentlemen, Mudassir Aqil.
Thank you. Thanks, Anas.
Hamza and Monis, we need your efforts to give a thank you memento to Mudassir. And Monis and Hamza were both right. This was quite a treat. So thank you very much for the knowledge and also for taking some questions. But like Monis said, Mudassir Saab is here. So please use that time to ask him whatever questions and follow-ups you need. Super, thank you. Next, we have our panel discussion on strategies for thriving in Pakistan's digital supply chains, inflation, credit dynamics, and digital imperatives. And may I please request our panel to make it on the stage, to make their way onto the stage. May I request Atif Salim Malik, who's the Chief Operating Officer of JS Bank, to come on stage. Mr. Salman Akhtar, who's the CEO of Techlogics and Adolphi. Shahzad Khan, who's the Group Executive Director of Telenor Microfinance Bank. Thank you, Monis. You will be our cheerleader forever. Sharik Mubin, who is the Chief Digital Officer of Mizan Bank. Mr. Amir Aftab, who is the Chief Product Officer of Jazz Cash. Mr. Imtiaz Jalil, Chief Financial Officer of Tapal Tea. And of course, no panel can work without a facilitator and a moderator. And this discussion will be moderated by Mr. Noman Lutfi, who's the Chief Supply Chain Officer of Ismail Industries. If I could just take a moment to let you know, there are feedback forms being floated around. Please do take some time to fill that out so that future conferences can also incorporate that feedback and make things better. Noman Saab, the panel is over to you, sir.
Assalamu alaikum, everybody. Can you hear me clear? So before moving to my topic of today's discussion of strategies for driving Pakistan digital supply chain with inflation, credit dynamics, and digital imperatives, I just want to build a little bit supply chain perspective in Pakistan, when it will start working and how this supply chain finance emerge with the passage of time. So I think it's a matter of, I think it's a supply chain phenomena start working in mid-90s or late 90s in Pakistan. And where the supply chain is scattered and it's integrated into one function under the umbrella where the main 4 pillars of supply chain is basically source, plan, make, and deliver. And when the supply chain start working together, it's almost, if you can safely say that it all depends on industries to industries, but it's 60 to 80% of supply chain cost as a percentage of turnover of the organization. And when it's combined, integrated, it gives the value of supply chain that there's the biggest money in the hands of supply chain. And then IT as a digital part, and IT and finance start working as a business partners for supply chain. So with this, I think the companies start to understand the leverage of having integrated supply chain. Not every company has complete integrated model. Still, some companies have divided models as well. But with the emergence, people start understanding the importance. And I think the supply chain savings and working on the cash by reducing the inventory is one of the biggest 2 things which is basically give a lot of benefits and to an organization. So having said that, supply chain finance provides an easy solution to the improved working capital for both buyers and suppliers. It especially boosts the prospects for small and mid-sized businesses that often don't have access to appropriate credit products from our traditional financial institutions. And then according to the latest research, the global supply chain finance market size was valued to USD $7,298 million in 2022, and it is expected to expand at a CAGR of 9.08%. And during the period forecast and reach to USD dollar of $12290 million by 2028. Again, in terms of the future, the World Supply Chain Finance report of global supply chain finance volumes increased by 21% between 2021 to 22. With interest rates expected to remain higher throughout the 2024, business will most likely continue relying on supply chain finance as an alternative to business loans and public or private funding. One of my colleagues share very good statistics, and that's the reason that we are here. That as per the Asian Development Bank, countries similar to Pakistan's size, supply chain finance is around 2.4% of their GDP. And that would translate to financing of rupees 2.5 trillion in Pakistan, which illustrates the opportunity. As a comparison, the entire lending by the banking system to public sector today is around 10 trillion, which includes corporates, personal and SMEs. Also giving that the audience is mostly bankers, 2.5 trillion of supply chain lending would conserve at transfer into rupees 60 billion additional income to the banks. So we will start from this note. We should start now the questions. The first question is with Mr. Sharif Mubin. Can you provide us a background on digital supply chain industry in Pakistan, and what role is banking sector playing in growth of digital supply chain financing? Can you just, there's a button at this side, we can click this one. Yeah, this one.
नहीं चल रहा ओके चल गया जी Assalamualaikum sir, to your question, the industry of digital supply chain finance, I think the industry has been around for a very long time, और फाइनेंसिंग तो हमेशा से होती रही है जब से भी ये सप्लाई चेन एग्जिस्ट करती है. पहले मैनुअल होती थी, अब ये डिजिटल तरीके से हो रहा है काम सारा. लेकिन the revolution has really come about when we have started to digitize this entire process of financing through the supply chain. हमारे पास अभी एक तरफ इंडस्ट्री के अंदर we have banks who have a lot of liquidity, and on the other hand we have obviously fintechs which are also trying to play their role, but they need liquidity, which obviously they can get from the banking partners if some collaboration can happen, and through this they can serve the entire supply chain, because the supply chain starts from obviously the suppliers and to the anchor, which is a corporate, and then goes down to distributors and then dealers, and eventually to the retailers. Banks usually like to stay around or hover around the corporate, and the reason for that is, they are number one. The reason is that they exist in a formal sector. It is a lot easier for banks to work with them because they already have the corporate relationships with them, and they have the clear visibility around their operations, and the risk assessment is easier. But as you go down, it becomes more difficult, and then that is the reason why banks hesitate, and so far they have been hesitant to go into the market down the line, where a lot of these fintechs have sort of found their sweet spot, because the banks have not been able to focus really on that side, and these fintechs have started their, they started the journey from this segment, and then they will go upwards. So this industry primarily will only be able to grow when banks and fintechs together can try and serve this entire ecosystem. Another issue that I see with with the banks is that banks, because they have a lot of liquidity, for example, Mizan Bank itself has 2 trillion rupees of deposit, over 2 trillion rupees of deposit, and they have to lend out at least 1 trillion rupees to the market to be able to maintain their ADR of 50%. Now, in order to do 1 trillion rupees of lending, it is very difficult for any bank to go down to the retail segment and try and build the book, because that can only happen with the big ticket lending. And big ticket lending obviously happens around the corporates only. So that is their natural inclination or sort of area where they go first. So with this, obviously, the industry has a lot of gaps. Banks will continue to stay around this corporate anchor side. They'll slowly and gradually they'll move downwards, which is started to happen now. For example, Mizan Bank's relationship with Hubble and Mizan Bank's relationship with other fintech partners are, allowing us to go down the line as well. And then we're also looking to partner with, fintechs like Dukaan, fintechs like other such fintechs, Finja, for example, which existed in the past. So we partnered with them as well. So this is how the industry is. I think digitization is helping grow this industry very, very rapidly. So we have high hopes, but interest rates are high. And as soon as we see the interest rates going down, and obviously the liquidity is required by everybody, so there's a natural demand for it. As soon as the interest rates start to go down, I think every player will come up and try and fill this gap, inshallah. So that is how I look at this industry at the moment.
Okay, thank you, Sharik. Yeah. We'll move into Mr. Atif Salim Saab. What sector does a supply chain network include? Suppliers, manufacturing, distributors, and others. The role of public sector that we need to focus on as one of the largest buyers in the country with a diverse products and services. So how the public sector plays a proactive role in this?
To some extent, I would agree with what Mudassir said about things pertaining to banking sector. I've also had the opportunity of working in Africa, primarily in Kenya and Zambia. So, one of the big success factor of digital growth over there in those markets was primarily the fact that, banks were not involved. So it was a telco-led model. So bankers have a particular way of doing business, okay? So they can't, or, it takes a very long time for bankers to deviate from the fundamentals of banking. So बड़ा मुश्किल होता है bankers को change करना. So that said, अभी मुझे याद आ रहा था कि I used to work for Union Bank back in the day, आज से कुछ 20 साल पहले. So we came up with very branded products. ये supply chain finance की product हमने की Cash Today के नाम से. So now I think there are products which Cash Now और इस तरह के platforms हो गए. There was no digital element to that, but ये products exist करती हैं. सारा आपका international trade is based on these things. Challenge here is कि हमारे यहाँ पे I would think that I would like to believe that even corporates have a very myopic vision. शारिक साहब ने बात की कि एंकर को हम ढूंढ रहे होते हैं, वो बड़ा important role play करता है एंकर in this kind of a model. But here, when I say, even corporates have a very myopic vision, nobody would like to help in developing this ecosystem. वो मैं क्यों कह रहा हूँ, वो इसलिए कि we have a very myopic vision and we try to do everything that anyone else can do. So, corporates would like to do discounting themselves when it comes to receivable discounting, because they basically want to make a quick buck, and they don't look at the longer term benefits that by, becoming a part of ecosystem where they basically help small and medium enterprises avail in receivable discounting, they are contributing to financial inclusion. And in the long term, this is going to help them relieve their own cash flows. हम छोटे से profit के चक्कर में खुद discounting कर रहे हैं. This is exactly what we were confronted with. दूसरी जो important चीज़ है कि government का आपने कहा कि क्या role है. Government, public sector plays a very important role. In a country like Pakistan, government is still the largest procurer of goods. Around 19 to 20% of GDP, जो कि 50 से 60 बिलियन डॉलर्स के करीब बनता है. हमारे यहाँ पे फेडरल लेवल पे भी और प्रोविंशियल लेवल पे देयर आर वेरी complicated regulations, PEPRA rules हैं. और so if public sector can play some groundbreaking sort of a role and provide access to these SMEs, that is going to go a long way. अमेरिका की अगर आप बात करते हैं, SBA स्मॉल बिजनेस एडमिनिस्ट्रेशन है अमेरिका की, दे हैव डेवलप्ड स्पेसिफिक इनिशिएटिव्स फॉर SMEs. वहाँ पे उनका कोटा रिजर्व होता है SMEs के लिए, प्रोक्योरमेंट के लिए, टेंडरिंग के लिए. सो आई थिंक दिस इज़ समथिंग दैट द गवर्नमेंट कैन डू. और इससे ट्रांसपेरेंसी भी होगी गवर्नमेंट के बीच में. जो अभी स्पीड मनी और ये सारी चीज़ें एग्जिस्ट करती हैं, दैट इज़ गोइंग टू ट्रांसफॉर्म. और हम लोग जो ट्रांसपेरेंसी की बात करते हैं वो आगे जाके फैसिलिटेट करेगी और बेनिफिट करेगी SMEs को. So public sector can play a very important role. On the regulatory side, I think our regulator is very keen in developing the SME sector. आपने सुबह डिप्टी गवर्नर साहब की भी बात सुनी. 1,72,000 SMEs की फंडिंग की है बैंकों ने पिछले 70 साल में. So 1,72,000 को 500 अरब की फंडिंग दी है. So ये this is actually nothing. So given the fact that आप 5 मिलियन और 10 मिलियन की SMEs की बात करते हैं. So State Bank is very keen in developing the SME sector, and I think थोड़ा सा बैंकों को पार्टनरशिप्स के ऊपर भी काम करना पड़ेगा इस एरिया में, and developing partnerships with the fintechs. We at JS Banks have developed partnership with Adelphi, और हमने इनके साथ अपनी limited capacity में काम किया. We intend to go and explore this area of supply chain finance as well. But again, the toughest thing would be to identify the right kind of anchor who is willing to extend a helping hand in this area.
Thank you, Atif Saab. I think that both last gentlemen, Sharik Saab and Walter, touched based on the fintech as well. So my next question to Mr. Salman Akhtar. How is the fintech sector supporting digital supply chain financing in Pakistan?
Ji, thank you. So the first question you have to ask is, what is the fintech sector even doing here? Why does it even have to be here? And to my mind, there are two roles that it has to play. The first is business model innovation, and the second one is technology innovation. Okay? Now, out of the two, the one that is by far the less important one is technology innovation. I say that as a technologist, that technology is table stakes. If you don't have technology, you literally couldn't be a fintech. Why are you a fintech if you don't have technology? So that's a given. The real game is business model innovation. And the real game over there is for those fintechs to identify those gaps and opportunities that exist in the larger economy and to say, okay, here is an opportunity, I can help plug this opportunity to innovate in the business model itself. Banks do not have to innovate in business models. They have a very simple business model that's working really well for them. So that's why they don't need to innovate. Okay? That's where the fintechs come in. They need to do the hard work of innovating in terms of business models and say, you know what, here's a really interesting business model. Here's a market opportunity. This is going to be, instead of earning you K plus 2 or K plus 1, which the corporates give you, you'll get K plus 10, you'll get K plus 12. So you'll make more money as long as the model actually makes sense. Okay? So that's why fintechs should exist. Now, I do think that, unfortunately, over the last 2-3 years, a lot of the industry went down what were essentially dead ends, the fintech industry. Because in 2021, there was a huge amount of liquidity in terms of venture capital available, so a lot of people raised a lot of money, and everybody thought we will ourselves become lenders. Now, in retrospect, that was an absurd idea. I mean, there is no way a fintech is going to match the balance sheet of a bank, right? So everybody, and when they say, when fintech said we will become lenders, of course banks would say, why should we partner with you? You are our competitors, why should we partner with you? Fair point. So I think, unfortunately, the industry went a little bit of a sort of a blind alley. I think people have now realized that you really can't scale your balance sheet as a fintech. You need to partner with the bank and scale on the bank's balance sheet, which is the asset that the bank has. There's another huge asset that banks in Pakistan have, which is very different from the African situation. Pakistan is a much bigger country than pretty much every African country other than one or two. What that means is that banks are much bigger than African banks, which means they have many more customers than African banks. Because if you think about it, what have banks done in the last 50 years? They've done two things. They've built up a balance sheet, but they've also built up a customer base. Okay? Now, we all know this customer base is seriously underlent, whether it is the SME part of the customer base
or the consumer part of the customer base, the corporate side is lent into, but these two are not. There's a whole bunch of SME customers that all of you bankers already have in they're your existing customers, okay? You're just giving them liability accounts, that's it. You're actually spending money on them, that's a loss leader, the liability account is a loss leader. You're actually losing money on them when you could make money on them if you could actually create the asset side relationships, which is what digital supply chain finance is all about. So banks in Pakistan have two enormous advantages compared to, one is the balance sheet, the other one is the customers. So really, if you bring a fintech that can do the business innovation and say, you know what, we can serve SME customers this way, for example, then they can partner ideally with a bank and say, we'll use your balance sheet. And by the way, to get started, we'll just use your customers. You have SME customers. Why go finding new customers when you already have SME customers? Okay? And that is the last point I'd like to make, which is that, I mean, digital supply chain, finance, very good. We're all looking for anchors. By the way, every banker, you are yourself an anchor. Aapke bhi to suppliers hain. I'm a supplier to you. Techlogic's my other hat. We're a supplier to you. Why don't you all start DCSF programs with your own suppliers? Unko to de dena, please. Unko to lending kar de. Aap to unko bhi nahi kar rahe. Okay? So my point is, there's a huge amount of low-hanging fruit. Okay? But it does need some serious business model innovation, which is what the fintechs need to do. Think hard, really get into the depth of what's happening in the economy, and then identify ki kaun se wo areas hai where you can make an impact. Thank you.
Thank you, Salman. I think you raised a very valid point that we also have suppliers and customers. Can we start from them? Yes. So start from the home and then we can move forward. That can be a big I think, lesson for others. So we heard about fintech, we heard about bank. So, and let's see what FMCG thinks about it. So we are moving to Imtiaz Jalil, who is the CFO in Tapal. So Imtiaz, over to you. That what supply chain plays a major role in value creation for any company. In an integrated business environment, how finance function can partner with supply chain to create that value?
Yeah, okay. Thank you very much. So a bit of a different question where a lot of bankers are sitting. So I'll talk about more about from a manufacturing perspective and or a P&L of a company, how a finance function actually works and create value in integration with supply chain function of an organization. So as Noman, you pointed out earlier while you identified the key pillars of a supply chain operations like source, plan, make, deliver, and sometimes you also add returns to it. So this is a core function of a supply chain in any manufacturing organization. Yeah? And in recent times, all the good manufacturing organizations, they do have a finance function which actually directly partner with the supply chain organization, so that in an integrated manner, the supply chain colleagues will be able to deliver value for the company. And when I say value for the company, it is actually the value for the shareholders, and that can be created, of course, either through generation of profits and also through generation of free cash flow. So when we talk about finance, how finance is partnering with supply chain, so I would say finance actually partners in all these pillars. And how finance does it? Through cost optimization in collaboration with supply chain, so that we can have a better profitability for the organization as a whole. Then having integrated or aligned KPIs, so that both finance and supply chain will be able to deliver against certain goals for the organization. Then another important aspect is a strategic partnership, which is when you are having a discussion with relation to investments into the business, capex, and making other strategic calls. And of course, at the end of the day, finance has a collaborative mindset, so it collaborates with all functions across the company, other than supply chain as well. So when it partners with sales, with marketing, so that creates a 360-degree effect on the company where finance is partnering with all the functions. Now, if I talk about more on cost optimization, which was my first point, so cost optimization, if you deep dive into it, it has, of course, a material cost, which is one of the biggest cost component. Then you have non-material cost. So when we talk about material cost, of course, it has raw material, packaging material, when you are producing something, and when you are having this Non-material cost, it includes one big ticket item, which is logistics, warehousing, that is a big cost for a company. And one hidden element would be, Noman, as you know, is business waste. When you produce a lot and when you are unable to sell it, then you have to throw it away. So that is a cost that you have incurred into the business, and you are not getting any return out of that. So that is why it all starts from planning. You have to plan well. Whatever you are sourcing, whatever you are producing, you have in collaboration with your sales colleague, you have to sell it so that you don't waste it. Other than that, I think if we talk about like more into cost optimization, finance helps supply chain in negotiations with the suppliers, because when you talk about raw material, whether those are imported materials or local materials, from where you are sourcing, whether you are sourcing in bulk or there is some MOQ issue. So at what cost you are procuring those raw materials and bringing into your premises, either into your country or into your factory premises. Then in terms of packaging material, of course, it depends on a lot of feedstock, petrochemicals. So it is really important to understand how your packaging cost is comprised of, and how you can reduce it, and so on. And particularly also on logistics and warehousing, again, it depends how much you have to produce for that production, how much warehousing capacity you need. And then when you are shipping it to the customers or to the distributors, whether you are doing it in an optimized manner or not. And both of these elements, I think, all of these rather elements impact the profitability of the company, and also cash flow, which is you know, a big discussion these days. The companies who are here to make profits, they want to make profit, but also the shareholders, they want to have cash. So you have to convert that profit into cash. So first of all, you have to earn profit, and then you have to find out ways so that you can generate adequate amount of cash that can be utilized either, again, reinvestment into the business or in terms of like dividends to the shareholders. So when we talk about this cash flow, I think, as I said, it is important to improve the profitability of the company through all these cost optimization and other measures. But then after that, it is important to have a look on how much working capital is invested, how much stock you are carrying. And when I talk about stock, it means how much finished goods you are carrying in your books, how much raw material, packaging material you are carrying, because probably you have paid for it, and that investment, that cash outflow has been done. And now after some time you will be able to produce from that raw and packaging material, and then you will sell it. And only after that you will get your money back, and if you are selling on credit, that money will come after like 30, 60 or 90 days. So all in all, this working capital cycle is really, really important, apart from profitability of the companies, and from finance side, we generally work with supply chain to identify what is the optimum inventory period we should keep in terms of raw material, packaging material, and also finished goods, so that we can have a good and effective working capital cycle, and that can help an organization not only with profitability, but also with healthy generation of cash.
Thank you, Imtiaz. Now moving to Mr. Shahzad Khan. Shahzad, what technological advancement and adoption have taken place in recent times?
Thank you, Naman. I'm going to answer this question a little differently, because I think a lot of technology has been discussed today. So I think, especially in the case of Pakistan, the adoption of the current technology available to us is much more important than the new technology. The basic technology available to everyone is digital payments, right? And the uptake of the digital payments gives a platform for others to build on it. For example, nano loans, buy now, pay later, the e-commerce platform, they're all built on top of the data generated by the digital payments. So in Pakistan, I think EasyPaisa and JazzCash have done pretty well in terms of the consumer space, but we are far behind in the merchant space as far as our competition with our neighboring countries are concerned, and countries with similar demographics. So EasyPaisa and JazzCash contribute more than 10 trillion transactions in a year, but the P2M portion is less than 10%, right? But if you look at our neighboring country, which is India, so the UPI does 70 trillion transactions. And out of the 70 trillion, 52% are P2M transactions, right? So the scale is so different. They have such a big scale on the P2M network, so they can build on it, right? So this gives us an opportunity and a problem statement that our SME segment and our merchants and our retailers need financing. So I'll throw some boring numbers so that I can build on it. So Pakistan has around 2 million merchants. It does not include the nano merchants, which is a one-man shop. And out of the 2 million merchants, half of them are FMCG merchants. The access to credit is less than 8%. And 90% of the transactions are in cash. So this gives everyone an opportunity to, first of all, automate the overall value chain, and then do a financing line for the retailers. So this is what we have done, right? So all the platform players who bring the technology to automate all steps of the value chain will be successful, like Easy Paisa Karobar, right? So hats off to Monis for collaborating with Easy Paisa and bringing Easy Paisa Karobar to the ecosystem. So we launched 6 months ago. I think the results are remarkable. It has a front end for the customer to do the payments. It has a back end which is connected to the distributors to do the payments. It has an overall ecosystem in which retailers can buy from the distributors, and it has an embedded finance line based on the scorecard. I think we can all learn as an industry from the model that we have developed over time. We have been doing payments for a long time now. So we have around more than 100,000 retailers paying to distributors. But this is the time when we have started building on what we have as an asset, and that asset is really working out for us. And State Bank has really appreciated how we are doing this, and I think the new regulation from State Bank also regarding making supply chain a mandatory model is a step in the right direction. Apart from this, you asked about what technologies do you see in the future. So, I mean, technology is important, but the current adoption of the technology already available is also important. Yeah. I see that soft POS is going to be the next big thing, right? So all over the world, Aftab Sahab and we were at a conference with Visa, and they were pushing for the soft POS to be integrated with everyone. So all big players and small players are looking at soft POS because the cost of doing business goes down. Also, I think the cost of the transaction has really gone up because Nadra is the one eventually benefiting from all the transactions. So I think facial recognition is going to be the next big thing. We are also experimenting, and other companies are also experimenting to build their own database so that they can do their KYC in-house. They don't have to go to a third party and do the KYC. Last but not the least, I see RAST as a game changer, right? This is going to be a domino effect. And once the adoption of RAST has been established in the market, the retailer sees the benefit, the financing is included, then I think the flywheel will go. So one of my mentors sitting here said that the offline feeds online. So I think the offline ecosystem is being developed, and now is the time when the offline is going to feed online. A couple of years ago, I think all of us tried that the QR payments were established in all over the market. In even my team, we did a couple of 100,000 retailers, right? The traction was not coming. We had to incentivize. The customer was not bothered to do a QR payment. Now is the time when customers are asking for a digital payment because it's simply very easy. It's easy to carry cash. It's easy to not carry cash. And the digital wallet and all of the ecosystem is now coming together. So I think now is the time when I think financing of the merchant along with the distributor and the customer payments combined together will have a big platform, and everyone can contribute to the platform. That's it from my side.
I think, thank you, Shahzad, and I think very well said. I think, and the comparison between the neighboring country, I think gives a lot of to work has to be done in Pakistan. So, and moving to similar kind of industry, I just ask Ahmed Aftab that how is cellular industry providing support to digital supply chain finance?
Thank you very much, Naman. I would say in 3 ways. So it's connectivity, reach, and data. Connectivity is a given. I mean, every mobile app solution or digital solution needs a data connectivity, even in future, even in now. So that's a given. Reach is what a telco or a cellular network brings in terms of its large distribution and agent network. As an example, for example, in case of JazzCash and even Easy Paisa, the amount of consumers that we've been able to bring on board, and then specifically, for example, in Jazz Cash, we have more than 300,000 merchants or micro enterprises who are receiving digital payments now. This has been because of the vast reach of the agent network that the telco operator brings in. It actually helps to penetrate in tier 2 and tier 3 markets. Majority of our merchants, they are tier 2, they are tier 3, and they are receiving digital payments. The same network actually then helped us to bring on distributors on board. So we have, for example, more than 50 large distributors on board, to which the same merchants are now making supplier payments. Thirdly comes the data, the telco data that actually helps credit score these merchants or these micro enterprises. Most of them, for example, with Jazz Cash, are the ones who were unbanked. There's no credit history for them. So the telco data actually helped us credit score them better. And then now, in their supplier payment journey, we are introducing credit financing facilities. So this complete value chain, the telco reach, availability of data combined together, that creates the value. And I think this would continue to create the value because even now we see that for the conventional banks, it's still going to be very difficult to penetrate into the tier 2 and tier 3 markets. And this is where the partnership comes in. It doesn't mean that a fintech alone can work, or a telco alone can work, or their agent or distribution network alone can work. The digital banks alone can work. There needs to be a very good partnership together, hand in hand, and then work towards what we have in Jazz Cash, we call an ambition towards a cashless economy.
Okay, thank you. Ahmed. I think after the completion of the first round, the one thing which I can extract is a collaborative model which is required. And now nobody can do it alone. So I think a lot of collaborative work is required and somebody has to anchor that with the teams. So with moving to Imtiaz again. So Imtiaz, what are some of the main challenges in the cost of raw material infrastructure, inventory management, and the loss distribution in the companies right now?
Yeah, so before I touch upon the challenges, I think again, I just want to reiterate that why this cost is important. Yeah, so when we talk about profitability of any organization, if you want to increase the profit in these hard times, I think there could be three big elements. One, either you have to increase the volume so that you can have a better fixed cost absorption, or you have to increase the price of the product so that you can have a better margin. Otherwise, you have to decrease your cost so that you can have better profitability of the company. So in the current scenario, we know that because of high inflation, it is really difficult for the organizations to increase the pricing for the consumers because, because of various economic issues in the country, it is really difficult for the consumers to pay more for the same quality of goods. So while the companies are ensuring to provide the same consistent quality of goods to their consumers, it is really difficult at this point in time to increase pricing. Hence, there is a pressure on the profit. Therefore, it is really important to look at different cost parameters and the challenges in cost so that we can try and have some strategies to reduce cost and in order to have better profitability. So when I talk about cost challenges, I think inflation, as I mentioned, is one big challenge because, if you want to procure raw material, packaging material to have your finished goods. So this is one big element that not only consumers, individuals, but also corporates, those are struggling with the cost element because of high inflation prevailing not only in Pakistan, but also recently we have seen inflation in other parts of the world. So if you are importing something from Europe or Africa or any other country in the world, the cost is more. And also with the devaluation that happened last year, in terms of imported raw and packaging material, the costs have gone up. Other than inflation, I would say that last year, as we have all seen, the import restrictions that also added or contributed to the cost of the products because the things were not available. There was a discussion on whether you are importing an essential commodity or a non-essential good, so availability of that material or goods was a challenge which was triggering cost escalation as well. Then other than that, of course, when we talk about logistics and warehousing, it depends upon how much you have to store and then what infrastructure you have. If you have your own infrastructure, that will have a different cost challenge. If you are going for a third party, again, it could have a variable and fixed cost model, and that will increase over a period of time. So all in all, I would say that this is all 360 sort of a model whereby when you want to improve your profitability, you have to look towards your cost, and when you have to see the cost, you have to break those costs down into various elements, whether those are material costs or whether those are non-material costs, logistic, warehousing. And one more element is if I talk about P&L is depreciation, yeah, and depreciation comes from if you are investing into your own capex, and that also relates back to cash flow. That whatever you are earning as a profit and whatever cash you are generating, it's a big decision that you have to think about if you want to invest that back into your own company in terms of capex. So if you do the capex, because if you need it because of the production requirements, one, you will use your cash, and on the other hand, there will be a cost hit in the P&L in terms of depreciation. So from a finance angle or from supply chain angle, I think that is why we need a very collaborative sort of an effort from both the functions so that both can join hands and do a collaborative work and make a strategy which eventually help the company in terms of both profitability and free cash flow.
Thank you, Mumtaz. Let's move to Shahzad Khan again. Shahzad, what changes are needed in supply chain finance from regulatory perspective?
A good question. So first of all, I think the step recently taken by State Bank and making the supply chain finance overall mandatory for all banks is a step in the right direction. You know, there's enough room for everyone. So if you look at the market, the GMV is around $100 billion overall. And there are not many players who are using this data, or not many players in the market. So it's a step in the right direction. Secondly, for overall digital banking and the fintech industry to survive, the cost of cash-in is going up because the regulator has asked us to implement a biometric on all the transactions, right? So for millions of transactions, the cost of doing business is going up by 6 rupees, which the main beneficiary is Nadra. So we would request the regulator to speak to Nadra and reduce the cost and help us in this transition. And I think last but not the least, overall, the transaction of QR needs to be promoted, right? So there are many digital transactions which are being incentivized in small pockets. So you see on digital banking cards, there's a discount of 10% on the FPR tax. Also, that is limited to only few cities and few segments. So our request should be that in order to promote the QR and the RAS QR, it should be opened up for everyone, and it should be opened up in all the cities and all the segments so that we can promote the digital transactions, that the transactions become an engine, and then banks can benefit of it and they can lend to the customer segments. So there are actually two types of engines at work. One is the customer payments, the other one is the distributor payments, right? We alone cannot cover the distributor payments. We do a substantial amount, but the main engine, the main model followed across the world is customer payments. So we need to increase the digital payments from the customer side in order for this model to flourish. Thank you.
Thank you, Shahzad. I think a similar kind of question. One is just talking about the legal perspective, regulatory perspective. I'm moving to Amir Aftab. That what other supports are needed from the government to prosper us in this field?
I think not much different from what Shahzad has already talked about. So it is about incentivizing digital payments, but at the same point in time, penalizing cash. Until and unless we don't make cash expensive, digital payments will not actually happen. And extending them, so Shahzad gave an example. So we have, for example, in Punjab, in federal here, so there's a tax rebate on the restaurants. Extend that to, for example, grocery stores. Extend that to tier 2 and tier 3 markets. Have it done on the P2M RAS QRs. Because what we've seen is the consumer will then are actually forced to make digital payments. The micro enterprises or these tier 2, tier 3 grocery stores, they are forced to keep that digital payment system in place and make cash expensive. How can it be done? It's been done. The example is China. In China, there are 86 million merchants with QR. 86 million merchants with QR. There's actually no cash. I visited China a couple of weeks back. And we were having a discussion with with a few of the players, and we asked them that, how does cash in, cash out happens? They say, what cash in, cash out? There's no cash. So that is actually a cashless economy. So there were some mandates from the government where, you have to have a digital payment mechanism in place. So mandate incentivizing the digital payments, penalizing cash, and how it actually helps the ultimate mission of supply chain financing. We've seen through fact, as an experience, the merchants that we bring on board for digital payments, those merchants are more inclined to make payments to the supplier through the digital means. And then the same merchants are more inclined to adopt a digital finance supply chain solutions, because we are offering closed loop loans between the payments towards the distributor. So it starts from the first point. If there is an incentivization, at the same point in time, a penalization, so overall, this will have a positive impact. But then it's about reducing the tax. This is how it comes out to be, but not exactly, because you reduce a certain thing, the volume actually increases. This will have a certain benefit.
I think very well summarized by and I'm coming to Atif Salim sir. SMEs access to finance, challenges for customers and opportunities for banks.
I think it's a very challenging sort of a field for banks, and it can't be done without having a dedicated SME arm within the bank. So I think State Bank is basically taken a very tough stance now, and they're asking every bank to have a dedicated SME arm. So same goes for the other stakeholders within the system. So as far as every stakeholder needs to play its role. As Amir was mentioning that, they have to, the government has to penalize cash. I think it has more to do with penalties. I think we need to come up with the right kind of incentive structure to discourage cash. So that is going to go a long way. I don't know, have had the opportunity of working for various initiatives in various geographies, things which work perfectly well in some of the geographies. We can't actually make them work here in Pakistan. I don't know why is it so. I'll share an example. Although, there are a lot of similarities, as Mudassar mentioned, in Africa and Pakistan. So I was in Kenya, and we developed a platform for a dairy processor, new KCC. And this was a real-time online platform where they used to procure milk from the farmers, small farmers and mid-sized farmers. And we used to discount their receivables instantly. So it was basically a tripartite arrangement. We had the farmers, then we had the dairy processor, and the bank was the intermediary which was doing that financing. I think no bank has been able to do that in Pakistan, despite the fact that we produce around 62 billion liters of milk. Only 3% is processed. Even if you take that 3% into account, that would be around 300 to 400 billion rupees. So that is still an untapped sort of a market. So I think, every stakeholder needs to play its role within the ecosystem. Government has to come in with the right kind of regulatory framework. Then SPP is already, I think, we don't want too much of regulator intervening in everything. I think, they're doing their best. They've just provided a sort of level playing field, and that's what their job is, and they just keep on promoting the right areas. And then the banks have to rise to the occasion as well, because SME financing is totally a different sort of a ball game. It's different than investing in T-bills and PIBs. So we need to have a different mindset. Only with that kind of a mindset, we'll be able to develop the kind of underwriting skills which are needed to underwrite SMEs.
Thank you, Atif. I'm moving to Shariq Mubin. We hardly see any growth in SMEs. And if this situation prevails, what do you think it affects the digitalization process?
Well, the growth in SMEs, I think that's sort of irrelevant at the moment, because we already have a lot of untapped SMEs. As we discussed in the morning as well, that out of 5 million SMEs that we have in Pakistan, only 170,000 or so have access to finance through the formal sector. So I think what we need to do is simply we need to start to capture this market, and that will start with the first step is always going to be payments. And as we've all discussed that QR is coming around, right? And the QR will become the key source for these merchants to start accept the digital payments. Once you start to, do the payments, that will lead into the production of data, and that data will eventually be used for financing. So I think this is going to be a simple step-by-step process, and I'm very optimistic because, with the Rast P2M coming up, State Bank is also very supportive, and State Bank is not only supportive, but at the same time, State Bank is instructing banks actually to go out and expand this network of Rast P2M merchants. So far, we only had 5 acquirers in the market. Acquirers meaning those banks who could issue a POS machine to a merchant. But now with Rast P2M, we'll have around 40 acquirers in the market. So imagine the impact that these 40 acquirers can create in the ecosystem. So I'm hopeful that once, for example, right now if we have 150,000 merchants and it grows to, let's say, over 1 million merchants in a matter of 2 to 3 years, that will automatically create a big market for all of us. And hopefully, supply chain finance will also start to take off from there.
Thank you. I think what I learned from your answer is that despite SME low growth, still the potential is there. And we'll start tapping it. The last question from Salman Saab. Information sharing with banks utilization, is this a risk to the organization sometimes because they feel that why we have to show or share a lot of data with them? What's the fear factor in it and how can we address it amicably?
So to answer this question, I think we need to break out the kinds of data into 3 types. So the first type of data is what we talked about in the morning, which is the data that banks possess about your and my account. Now that's well understood now globally that this really belongs to the customer. That ultimately this belongs to the customer, and the customer should be free to utilize that data for other purposes, including, for example, using it for it to be used for lending purposes. Now, of course, to do that correctly, what you need is some kind of permissioning architecture which allows me as a customer to reliably instruct my bank to share this information with the third party. For example, India has done that in India Stack. So there are well-established models of doing it. It's a fairly simple technical problem. Okay, so that's one kind of data. The second kind of data is where data is generated and collected by a business in the course of doing business. So for example, let's say you have an e-commerce merchant. They generate data, sales data about their customers, right? So they own this data. They've generated this digital data. Same thing is true for the telcos. So they have customers, people use their phone, they're generating data. Now here it's actually not clear who owns this data. It's pretty clear that the data is in the possession of the service provider or the e-commerce seller or the telco. And generally, I think the idea has been that this data actually belongs to them, that this is really their data. This data should also be utilized for purposes like digital supply chain and lending. And this is where the collaboration has to come in, where the owners of this data, and it's not just the telcos. For example, TCS owns a lot of data. It delivers courier services for everybody in Pakistan. So it owns a lot of data, right? Every e-commerce service provider has data. So this kind of data, actually, we need to put in place collaboration mechanisms. I don't think here there is the need for a permission architecture. I don't think really it's reasonable for me to allow TCS to share the fact that I sent 7 packages in TCS in the last 2 years. Like, okay, really, do they need my permission for that? So I think that's the second part of it. This data, by the way, is extremely valuable for lending purposes, whether it's supply chain or anything else. Now, there's a third category of data also. This is data which is either survey data or self-reported data. Now, what's that? So survey data is, for example, somebody goes and does a survey, अच्छा जी इधर ये 50 दुकानें इस shopping area में इनके ये sizes हैं वगैरह, which sometimes are used as proxies for lending. Now that data is very problematic. Generally speaking, the people who do this low quality data, you really can't rely on it. So that's very problematic data. Another category like this is self-reported data, like for example, you see in these credit book apps, मेरी sales ये हो रही हैं. Well, you know what, तुम कह रहे हो तुम्हारी ये sales हो रही हैं, you know, I have no way of verifying this. So to my mind, for the finance lending function, the data that is useful must pass 3 tests. Number one, it must be third-party collected data. For example, my phone data is collected by Jazz. I'm a Jazz customer, okay? So it's third-party data. They have collected it. I'm not telling the bank that I use my phone this much. They can tell the bank that I use the phone this much. So it's third-party data. It's reliable, okay? Second, it must be digitally collected. Obviously, you know, you don't want hard to collected data. And the third, for lending purposes, it must be directly financially relevant. So for example, you know, if you use the fact that, I don't know, I live in a house which is X size big, that's not directly financially relevant to my well-being because I might have inherited that house and maybe I don't have any money, but I just live in that house. So as long as you can pass these 3 tests, and I think the first category, the data that the banks own, and the second category, third-party digitally collected data by people like telcos, courier companies, you know, e-commerce companies, what have you. There's a whole bunch of people who have data. These are really the goal that can be used to drive lending decisions by banks.
Okay. I think, thank you, Salman Sahab. I think what I learned from all of you in the 2 sessions of questions that there are a lot of things available. It just needs the government has to make some incentivization and from a cash to move to I think, digitalization. And a sort of collaboration is also required, so which basically take this up. So thank you very much again for all of you, and we are open for take questions from the. Yeah. Can you please put the mic to her?
With your permission, Noman sir, before the mic reaches
the
participant here, I would like to add something. Salman Sahab has made a very valid point regarding the data that banks have. When we were doing deliberations on these SME committee for banking sector, we figured out that, you know, banks have, on one side, the banks have only extended credit to 170,000 borrowers. On the other side, they have access to 2.3 million accounts, liability accounts. And banks have not even explored or scratched the surface to figure out what are those liability clients doing with them, what is their transaction behavior, what kind of businesses, what kind of sectors are they working into. The other bit that I think, you know, we need to explore collectively, that's basically logistics finance. What is currently happening, Salman Sahab made a very valid point regarding TCS. So during the COVID era, a lot of cash on delivery business basically, you know, that expanded very at a very fast pace. So that's basically the starting point for logistics finance business, because I don't think that, you know, any financial institution has effectively explored that area so far. Similarly, other areas like, you know, warehouse receipt financing. So in Pakistan, I was associated with one of the initiatives, but that was primarily targeting agri sector. But future is for logistics finance. Chinese are estimating that this sector, logistics finance, would be around over $5 trillion in the next couple of years. So this is the area where I think, you know, all the stakeholders within the you know, ecosystem need to work aggressively and explore these areas. Sorry for taking this extra.
I think it's a good addition.
Ji, Assalamualaikum. Thank you, everybody. I have just one observation, and any of the panelists can, you know, throw further light on that. I must say that one key takeaway for today's session is that we need a collaborative approach among different platform players, especially with regards to data. Just Salman Sahab ne bhi mentioned kiya, that data is available in different forms with different stakeholders, chahe TCS ki baat ho, telcos ki baat ho, banks ki baat ho. For example, KYC hota hai. KYC एक बैंक भी करता है, दूसरा बैंक उसी बैंक कस्टमर का दोबारा से KYC कर रहा है, तो why can't we develop some centralized depository of the data? And I would request the organizer to because ये मेरा ख्याल है एक ऐसा पॉइंट है जिसपे सारे स्टेक होल्डर का कंसेंसस है कि डाटा की ऑनरशिप और डाटा को एक सेंट्रलाइज तरीके से इकट्ठा किया जाए in order to leverage for different market players to take advantage unit costing के हिसाब से, unit economics के point of view से, risk assessment point of view से, and in order to enhance the credit the appetite in the market. So KYC है, सेंट्रलाइज KYC हो जाए. अगर एक बैंक ने कर लिया तो बाकी सारे बैंक्स को KYC करने की जरूरत नहीं है. फॉर एग्जांपल शारक मुबीन की, यात मलिक की, जनवीद मुश्ताक की, एंड सो ऑन. इसी तरह जैसे क्रेडिट ब्यूरो होता है, फॉर एग्जांपल ECIB है, ECIB के अंदर अगर कंज्यूमर ने डिफरेंट बैंक से फाइनेंशियल लोन्स लिए हुए हैं तो उसकी क्रेडिट हिस्ट्री अवेलेबल होती है और ये मालूम हो जाता है ECIB से कि किस बैंक से कितना लोन लिया, विदाउट नेमिंग द बैंक. सो वी कैन डू समथिंग लाइक दैट ऑन द सेम लेवल के किसी बैंक में एक अकाउंट खोला हुआ है कस्टमर ने तो पता चल जाए कि उसका वहाँ पे डिपॉजिट बैलेंस क्या है, उसका टर्नओवर क्या है, चाहे वो मल्टीपल अकाउंट्स हैं, विदाउट नेमिंग द बैंक. ऑब्वियसली दैट इज अ सीक्रेट इन्फॉर्मेशन फॉर अ पर्टिकुलर फाइनेंशियल इंस्टीट्यूशन. सो आई वुड से दैट ऑर्गेनाइजर्स कैन फॉर्मुलेट recommendations for the regulator, for the government and for the relevant authorities to take the ownership and formulate a central depository of the data where all the stakeholders can leverage that data in order to benefit the entire economy for the entire benefit of the entire ecosystem. So
okay.
that would be my suggestion.
Or you can choose.
नवीद, इसमें ऐसा है कि eKYC का एक प्रोजेक्ट स्टेट बैंक ने ऑलरेडी, अबांजा सॉल्यूशंस इज अ प्रोवाइडर, सो दे आर डेवलपिंग अ सॉल्यूशन ऑन ब्लॉकचेन एंड व्हिच इज गोइंग टू बी शेयर्ड eKYC platform for all of the banks. So it has been going on for some time. I don't know what is the current status, but this is a project which is already under process.
Thank you very much for the questions. Thank you very much to the panel. May I please request Hamza Hashmi to join me on stage, and also Adnan Rizvi Saab, who's the Managing Director of KPMG Pakistan, to help thank our panelists. Can I please have the shield for Mr. Atif Salim Malik, who is the Chief Operating Officer of JS Bank. Thank you very much, sir. This is a memento for Mr. Atif Salim Malik, who is the Chief Operating Officer of JS Bank. Thank you very much, sir, for your insights and for your feedback and comments. Next, we move on to Salman Akhtar, who's the CEO of TechLogix and Adolphi. Our third panelist who we'd like to thank is Mr. Shahzad Khan, who's the Group Executive Director of Telenor Microfinance Bank. Next panelist we'd like to thank is Mr. Sharik Mubin, who is the Chief Digital Officer at Mizan Bank. Amir Aftab, who's the Chief Product Officer of Jazz Cash. I'd like to present a token of our appreciation to Imtiaz Jalil, who is the Chief Financial Officer at Tapal Tea. And last but not least, I'd like to thank Mr. Noman A. Lutfi, who's the Chief Supply Chain Officer at Ismail Industries. If I could please request after the shield is presented to Numan Saab, if all the gentlemen can gather for a group photograph. And while they take the photograph, just wanted to remind you, there are feedback forms on your tables. Please do take a moment to give us your feedback so that it may be incorporated for future for the future conferences. Thank you very much. One of the things that we've tried to do is have a seamless integration from session to session, so there is no break in the middle, and we move directly into our next panel discussion, which is the future of digital SME lending with DCSF. I'll invite my panelists and our esteemed moderators to the stage. May I request Tughrul Amir Turab Ali, who's the Executive Vice President and Head of UBL Pay at UBL, Mr. Shahzad Ishaq, who's the Chief Digital Officer at MCB Bank. Ms. Gabriela Simeon will be joining us online. She is the General Manager and Head of Lending at Revolut. May I request Ms. Noreen Hayat, who's the CEO of Zood Pay and Zood Mall, Pakistan. May I request Mr. Taimur Ali, Group Head, DFS Projects, Karandaz, Pakistan. May I also request Muazzam Ahmed, who's the former Senior Country Officer of IFC World Bank Organization, to join me on stage. And of course, our two moderators, Mr. Mir Najib Rahman, who's the advisor to the Pakistan Bankers Association, and also Ms. Ariba Shahid from Thomson Reuters. If I could please request the panel to take their seats. We have about 40 minutes, and we also have one panelist from joining us online. So we'll take things. We will take things away. Najib Saab, the panel is over to you now.
Thank you so much. Are we missing anyone, or I think everyone is there? Of course. I think we are missing one person, I think. No, but she's online. Okay, so welcome, Ji. Assalamu alaikum and a very good afternoon to everyone. This is the final segment of today's session. So I'm sure everyone is looking forward to moving on very quickly and ending this. But this will be the most exciting one of the segments. So whoever is missing it, will miss out on some of the very key topics that we'll be discussing today. So we do have a very exciting lineup of guests and panelists today. They all come with decades of experience, and I think put together there's 100 years of experience right in front of you. So I will start with short introductions. And if anyone is interested to look into their background, you're more than welcome to go onto their LinkedIn profile and see their illustrious career. And I must tell you, it is very illustrious. A lot of, years under the belt, a lot of experience, a lot of knowledge and learning, which I think we'll all learn from today. So let me first start with, is our online? Who are you? She will just be joining. Okay, all right. Okay. All right, so as you know, we have one international guest. So until she joins us, I'll start, from here. I'll start with Mr. Muazzam Ahmed. He's the former senior country officer for IFC in Pakistan, and currently he serves as a CEO for and a co-founder for Cash Now, a pioneering supply chain finance platform. Next, Mr. Taimur Ali. He's the group head for Karandaz for digital financial services projects. And as you all know, Karandaz is in the business of promoting financial inclusion and finance the MSME space, and really serves as an implementation partner for the FCDO and the Bill and Melinda Gates Foundation. So I think most people are familiar with Karandaz and what they have achieved in this landscape over the last many years. Then we have Mr. Shahzad Ishaq. He's the Chief Digital Officer for MCB. I think it's now exactly 77 years. I think MCB celebrated its birthday, 77 years. So, mashallah, one of the oldest banks operating in Pakistan. And finally, Tughral Turabali. He's the Executive Vice President and Head of UBL Pay at United Bank Limited, which is also one of the largest commercial banks. I'm not sure, are they online yet or no? Not yet, okay. I'll introduce Gabriela until she joins us. So she's the General Manager and Head of Lending for Revolut, and she'll be joining us from Romania. And so she'll share about Revolut's journey and what they have accomplished over the last many years, and being one of the top global neobanks in the world. So we'll come to that. So let me just first start with maybe the Pakistan landscape and get some insights and perspective from Muazzam, because you've spent almost 17, 18 years. And I'm talking through the IFC lens because you've been senior country officer for IFC. And in their report, I think a couple of years ago, it was published that the potential for the supply chain finance in Pakistan is close to $18 to $20 billion. If we look at the current portfolio, it's around, of the banks, of the commercial banks, it's I think about close to $2 billion equivalent, 575 billion rupees. So where do you think why do you think there's, first of all, such a huge gap in the potential and what we have been able to achieve in 70 odd years? And what, model do you think can be successful, since you're also operating your, Cash Now platform? What model would be more suitable, in the Pakistan market based on your experience?
So I think, thank you very much, Najib. Good to be here. Having a session at 4 p.m. with so many people still sitting out there is a credit to Hamza and his team, so I must give you credit on that one. Look, IFC has been involved in supply chain finance for the last 14, 15 years. IFC has invested in a number of platforms like ours, Demica being one of the most famous ones, which does about $100 billion worth of business annually. IFC does supply chain finance on its own books also. And they're very keen to bring this product across the globe, primarily because it's a very structured product. It allows for lending to be dispensed to SMEs, which are, according to the last number, was $4 trillion gap in SME lending globally. So supply chain finance is a very easy segue into addressing the SME finance gap. A lot of times people, or IFC's view is that for bankers to address the risk profile, a structured product will always work out well. And hence, just to put perspective, IFC has been able to implement supply chain finance programs across the globe with a lot of success. Just in Vietnam, in 10 years, they were able to do about $7 trillion worth of supply chain finance transactions, domestically and internationally.
So that can tell you the magnitude that you are working with. And I think the other part from the IFC study in Pakistan in particular is very eye-opening of the potential that it shows up. And this potential of about 18 to 20 billion is only in the manufacturing space. If you go through the study, and the lending, SME lending in Pakistan, though $2 billion, but in the supply chain finance space, it's about $300 million. So the gap is enormous. And supply chain finance, also remember, in Pakistan has failed multiple times because banks have tried doing it, because it was paper-based, it was cumbersome, it did not get the traction that it got, it should get. But now with the digital world, I think we should be able to get moving in that space quite rapidly. So the opportunity in Pakistan, as you rightly pointed out, 18 to 20 billion is a very large number. Banks should be able to cater to that, and I think one word that resonated in this whole event was collaboration. You collaborate with the partners. And rightly, as Salman rightly mentioned, that, like cash now platforms like ours, we are financier agnostic. We'll partner with any bank, because all they are looking for is someone to be able to give them the third-party authentic data that verifies an invoice being correct, or there's a payment date to it. So I think, coming back to the IFC study, and I think there was an Asian Development Bank study also, they all show a very serious potential for supply chain finance in Pakistan. I think the State Bank has taken a very productive role in pushing banks to do that. I think banks have to understand that there's collaboration. They have to also understand it's a patient game. It took IFC in Pakistan 4 years to get their supply chain program up and running, just with 10 clients. And you had so much work to be done. So with fintechs working with banks, it becomes a collaborative effort. One more comment that I'd like to make. Globally, according to the McKinsey study, we've got over 50% of fintechs work with banks to create a success of supply chain finance. So it's all a collaborative effort. Thank you.
Thank you, Mozam. I think we have... she's available? Okay. So let me just, I think I've already introduced Gabi, but I'll still do a quick introduction. So Gabriela Simeon, she's the head of, he's a general manager and head of lending for Revolut, and she's joining us from Romania. So Gabi, can you hear us?
Yes, I can.
Okay.
Hello, everyone.
Thank you for joining and taking out the time. Let me just come to you, because we are kind of getting a global perspective, before we jumped into Pakistan. Just to understand, we all know that Revolut has shown some, exponential growth over the last, 7-8 years, and it has a, quite a formidable presence, as one of the leading neobanks or digital banks in the world. So can you just tell us about your business value proposition for our audience here? Thank you.
Okay. Yeah, first of all, thanks everyone. Thank you for the invitation. It's an honor to be here and to see good old friends, not only leading the panel, but also in the panel. I've seen that Shazad, who is a very old friend, is there. And I have special hi to him. So yes, just for everyone who is not very familiar with Revolut, we are a global fintech, or as we like to call it, a technology company with a banking license. Our strategy and our vision from the beginning is to change the way that people are managing their finances. And we just had the 9-year anniversary. And actually, in the last 9 years, we managed to acquire over 45 million customers across 38 countries, and to actually generate, according to our 2023 financial statement, 2.2 billion USD in revenues and over $500 million in profit before tax. So this is quite an achievement. And actually, we are continuing to disrupt the way that people are managing their finances across the globe. And while our biggest customer base is obviously on the retail side, there is a big focus that we have on the business side. And actually, our strategy is to become the primary bank and the one-stop shop for all the businesses up to 100 million USD all over the world. So we are bringing. So what we are building basically it's an ecosystem that brings together all the financial world, which actually exceeds a little bit the banking area. You know, like the traditional banking, as we know, like loans, deposit, payments, and cards. So we are trying to understand what are the needs of businesses of various sizes and the way that we can cater them. Right now, our main value proposition revolves around what we are the best at, and this is like global payments, global transfers, cards, virtual cards, the fact that like businesses can very easily manage their payments being locally international in one place. And also we offer key functionalities that are extremely important, and we believe that they add a lot of value of having them in the same, like on the phone, like expense management, accounts payable, being able to track, how you customize your level of access and permissions. And also very important, we do offer API integrations that allows businesses to integrate with various accounting softwares that they are using. So yeah, and while like this is a journey. So right now we are we are catering to these needs, and the next step, obviously, I mean, if we want to become a primary bank for this type of businesses, is to go into the lending area.
Okay, thank you, Gabby. I'll come back to you when we maybe go enter the scalability part of the discussion. But let me just move to Taimur, who's representing Karandaz here. So Karandaz's mission is, of course, to uplift the MSME sector as one of the verticals. And can you tell us how Karandaz is engaged in this sector, and how do you see the digital innovation part supporting the supply chain finance?
Thank you very much for the invitation and letting me speak about this topic, which is very dear to Karandaz. Supply chain financing eventually results into adoption of digital payments and financial inclusion on the consumer side. So we kind of bifurcated the value chain or the supply chain into two parts, the upstream part of it and the downstream part of it. The upstream is where the FMCGs and SMEs transact together. SMEs could be the suppliers or the distributors, and the demand side is where the consumer or the distributor or the retailer interacts. The demand, the financing demands of the two sides of the value chain are very different, and digitization enables the two parts very differently. So Karandaz exists for kind of addressing any gaps in the financial ecosystem, whether it be regulatory or infrastructural. And to this particular supply chain financing, I would call it value chain of retail. All through the value chain, there are interventions that we are making, right from the downstream where the P2M transaction at Rast is contributed by Karandaz. The theory of change is that if the consumer pay digitally, the retailers are able to pay digitally to their distributors. When they are able to pay digitally to their distributors, they get eligible to get digital financing, get better credit scores. So this P2M enablement is on the downstream part. Then we had seen, and we had also, we have discussed in this meeting that there has been a gap that was left or is left by the banks. So there was a special purpose vehicle created as an NBFC with the name Parvaz Financial Services, which is very much focused on SME financing and particularly digital financing as well on the SME side. On the upstream side, Karandas is, I mean, it's a little complicated. Things start getting complicated when you go, upstream. So currently we are working with the Federal Board of Revenue, which is the FBR Pakistan, by creating a digital strategy for them. We had discussed in the beginning of this conference the importance of the platforms like Creds in India and e-Fatura, e-invoicing platform in Turkey. So unless you have a verification authority of invoices and availability of digital data of those invoices, you are unable to get into invoice factoring on the upstream side. So there's this digital strategy along with policy being created with FPR through Karandas, where we are going to enable e-invoicing in Pakistan in future. In a position and shape, this is already there. Very recently, a platform has been, given a license to start operating as a invoice aggregator, but I think e-invoicing has to offer a lot more than that. There has to be a lot more, technical players that are going to enable e-invoicing in Pakistan. So this value chain needs to be bifurcated. There are different business models that can be created. Fintechs, banks, all types of entities can take part in it, and Karandas is viewing it as two very different sides of a value chain, and there are interventions that need to be created very differently in both the sides of the value chain.
Thank you for that insight. And since we are talking about innovation, so let me just pivot to Toghrul, because UBL is also at the forefront of innovation and introducing various digital platforms in this particular segment also, apart from others. So building on what just Taimur said, obviously UBL, of course, with millions of customer accounts, there's been a lot of focus on merchant accounts. Can you just walk us through your experience in terms of onboarding merchant accounts and offering them maybe some lending products? How is that particular segment operating, and what have been some success stories that you would like to share, or maybe even some challenges?
Sure. Thank you very much. So I'll very quickly introduce UBL Pay and what we are offering the market right now. UBL Pay essentially is a combination of two business lines. One is digital acquiring, so merchant acquiring, and the other is our branchless banking business, which was known by the name of Omni. And so we've kind of merged these two, and we've brought banking as a service into the industry, and we're looking at partners, and we're saying, work with us. Let us be your trust bank, your settlement bank, but we want to enable you, be it fintechs, other partners, to go and do what they're good at, which is figuring out how to solve these challenges on the ground in terms of SME and merchant onboarding. So I've got two verticals that we are focusing on. One is the merchant acquiring part, and the other is where we are sort of pivoting that branchless banking team towards an SME play. And what we are starting to figure out are that, so the potential is huge. There's a big number sitting out there. And some of the challenges that I think that we need to solve as an industry, one is visibility. So when we say, certain X number of merchants available in the Pakistan ecosystem, this is what Shahzad Saab and I were just discussing, that number seems too small for a country the size of Pakistan. So is there even a fair idea of what the potential size of the market is? The second challenge that we have is, when we go into this space and we are talking about considering lending over here. So UBL's philosophy is to look at lending as part of a relationship that we have with the merchant. And so here's where we enter into the chicken and egg situation, which is when you're getting into that relationship with the merchant, you need to bring something to the merchant so that he gets into the relationship with you. But to bring something to the merchant as an offering, you need to know the merchant well enough. So here's where we need to solve this, this challenge where do we have the right sort of value proposition to pitch to this merchant. Lending is a big one, But for the bank, then it needs to take a step back and say, how do I mitigate my risk over here? If I'm fronting the capital, who's fronting the risk? Are we ready to park that risk with us? Or should we find third-party partnerships in the market that can do this for us? And then, of course, there's the regulatory question mark that we also have to solve, which is if we want to onboard these merchants in mass, then we need to figure out how digital onboarding can be enabled. And can we come to smart accounts for merchants, which should be treated as full KYC accounts and not just wallets? Or is there a journey where we enter through wallets and graduate towards full KYC accounts? These are some of the things that we are working on today, and we are trying to solve these challenges. But I do think that in terms of, if we use the acquiring framework, I think there's a pyramid approach that we can take where the Rast QR, which we are about to go live with, inshallah, that becomes the entry point for a small merchant. But the idea then should be to graduate. We've also launched soft POS, graduate towards soft POS, and then you are coming towards a full POS solution and IPG, et cetera. But these are where the risk profile of the merchant is also changing, and you need to then maybe go through a staged KYC approach. So these are some of the things we are trying to solve. The last point I just want to add around data is that credit scoring has been around for a little while. The potential for credit scoring to solve the lending issue, especially digitally, is there. But we also need to keep in mind that data, our behavioral data, only exists in a context. And when that context changes, the behavior also changes. So when you're lending based on ancient data, or historical data, I should say, historical data, that behavior is what you've observed in a certain context, in a certain industry. When you were lending to a merchant and the interest rate was at 6%, is the behavior going to be the same when the interest rate is 20%? What happens when taxation comes in? What happens when other metrics in the macroeconomy change? So we have to treat data, but treat it with a certain degree of skepticism that data will only tell you the quality of the question that you've asked. And so if you're asking a dumb question, the data is just going to give you a very beautiful, dumb answer. So we just need to be aware of that.
No, I appreciate that, but just a quick follow-up before I move to Shahzad. Because obviously now, as of effective July 1st, there's a big drive on the tax, inclusion of the merchant and the retailers, basically. And has there been any pushback on, onboarding them in your recent experience? Because it's been, a few weeks since it came into play.
Well, look, so the opinion I give you is an unqualified one at this point because I don't have research to back it up. But yes, our sales teams would say that, especially when you're going to this new segment, this merchant who maybe isn't even appearing on your radar right now. One of the big concerns is what's going to happen when I become visible to the authorities in terms of my income being taxed, the sort of documentations then I'll need to start providing. So there are question marks around there. And I think we should really think of this in the longer term. And this segment is the one where we should go in with a zero tax approach. Bring merchants on board because the value proposition we want to create for them is connectivity to a larger ecosystem, financing becomes possible, but don't tax them at this stage. Delay that till this merchant is part of your ecosystem, has benefited from it, and wants to stay part of this ecosystem.
Yeah, give them the opportunity to, oops, gives them the opportunity to at least, start the process, and then later on, as they get their, feet, solid in the ground, they can at least, and as the revenue starts rolling in. No, I understand that. So Shahzad, obviously, MCB is also, playing a huge role, obviously being one of the largest banks in the country. And you are also big in working capital finance, with the supply chain side, as well. So can you just walk us through what the MCB has been up to in terms of the migrating it to the digital part of the equation, and if it's in progress. Thank you.
So, Najib, thank you for having me, and Hamza Saab, thank you for getting me in. It's a pleasure to see Gabriela. We rubbed shoulders back in 2012, I guess, when we worked for Citibank in Romania. So, yeah, I mean, who says elephants can't dance? So, I heard earlier that digital banks will have a role to play. So I also want to tell you that we are also changing at a kind of fast pace, and some of these things we've been already doing. So what have we been doing? Invoice discounting, factoring. Invoice discounting is when you have an anchor and the value chain, in this case textiles or sugar mills or a value chain of rice. We also know that agriculture has been termed as one of the best performing economic sectors in the economic survey of Pakistan. So that helps us. We've been doing it on paper, manually. It's a great call to action by central banks, so MCB has also responded to it. We are already working on solutions on how we'll take it further. Salman Akhtar Saab was here from Adalfai, and Monas is sitting here. So we're talking to some of the key players in the market. It will all be about ecosystem. I'm a great believer that fintechs, and I've said this earlier as well, and financial institutions, or be it digital banks, we'll all have to come together to play a role. So MCB specifically, the entry point for us is invoice discounting for some of the anchor businesses that we mentioned. I also hesitate to say that there is lack of receptiveness. There's some anchors who are very willing to play the game, give us their information, their key vendors, suppliers, and the vendor suppliers, on the other hand, seem to be receptive. So we'll get it going from there. And yes, I agree, not everything will be invented inside. So we'll work with market players out there who are willing to platform with us. And but the larger ecosystem also has to come to play. Earlier in the day, I heard some of the bank CEOs talking things like the role of government, the role of the judicial services, banking courts, and all other services, because you have to see this digitization of supply chain financing in that greater context. Ladies and gentlemen, I'll echo back what you heard earlier in the day. The whole ecological system has to come to play. The leading financial institutions will play our role. We'll step into it. We'll respond to the call, and some great call to action by a central bank. But the whole ecosystem will have to come together to. I also saw some data that Pakistan only has 12% of GDP as commercial lending. And somebody else said, I think Atif said it, 6% of it is commercial financing, which is very low. And for countries like Bangladesh, Sri Lanka, can easily the commercial lending as percent of GDP can be in north of late 30s or 40s. And for countries like US, it's plus 100% of GDP. So those are staggering numbers. We've got a lot of ground to cover, huge opportunity, and I think Tugral would also agree that there is a willingness and there is a receptiveness to play the game. So get into the game. I think we'll have to learn the game theory a little more, and we'll have to get into it, see how the value chains respond to it. So we are all set to go out and do our bit.
Great, thank you. Mozam, let me just kind of ask you, because obviously in supply chain finance, you have the big boys, the big players, and I think everyone is going after the big game. That said, but there aren't that many, right? So, I mean, the bulk is the micro and the small. So what is the, I mean, the process or the building blocks that we, pick up the entire sector and not just the big names?
I wish I had a better answer, but we are at point zero in my view, and I think to get the banks to get comfortable If you go to a different segment, it'll be challenging. So you have to start up with the top companies and get them to get comfortable with a structured product that does not require any collateral. Because, you know, one of the things that, you know, was just mentioned out here, you know, Shahzad just mentioned, you know, an agreement with the anchor. It doesn't happen anywhere else in the world, right? You just take an approved invoice and finance it. Invoice is your collateral. So I think going down the totem pole, we are about 5 years away from that. But from an opportunity perspective, I think if you start off the banks with the top clients, who they are comfortable with on the cash flow risk perspective, they will start moving down the totem pole. Because once they get hooked to getting money, because right now a corporate customer does not make them any money. When they go down and take the same corporate risk or cash flow risk from that customer, but give it to an SME, their margins start increasing. It's all about the money. And I'm sorry, it's all about the money at the end of the day. New products that are going to be coming into play, the State Bank Governor, Deputy Governor just mentioned, first loss product that the EC has approved. Temur just talked about the e-invoicing. We've started e-invoicing with one of the large corporates, 2,000 invoices being generated on a monthly basis. So that tokenization that is going to happen. I mean, you mentioned Turkey. Turkey did it in 2014. India did it in 2022. The invoice, the life starts with an invoice. As long as Salman said, as long as you can authenticate that product, you're done with it. So you have insurance products. So these gaps will not be done at the bottom level. It will have to cascade down from top to bottom. Banks have to change their attitudes, and they're willing to work in it. But the apprehensiveness is, it's a lot of work. SME lending, I would rather lend to, I'm sorry, the government of Pakistan, it's easy. But that's what the reality is, and that's what we are dealing with. So I think it will take time. And we need to all understand, we need to have patience. And I think, you know, Dukaan is working on the distributor side. That's even a riskier product. But data is where it will help banks get comfortable. So,
just as a quick follow-up, since you deal with obviously in this space with the banks also, and also maybe the lower end of the SMEs, what are your insights that you've developed in terms of the skill base of the bank people or the bank employees who are dealing with supply chain finance, and also at the customer level? I mean, do they understand what products are there in the market? What is it that they need to do? Because sometimes we feel that that is also perhaps a gap in a market where the correct skills of the financial institutions, maybe at the higher level, but I'm just generalizing. Is that at play as well? Is there a gap in our market?
So my smile should say something on that account. I think banks are manageable. If you give them a structured process, they're very good at understanding. I think the biggest challenge is getting that SME to get on board. I'll give you a small example. We just onboarded a small customer, 10 million rupees worth of transactions every month with a large corporate. It took about 4 months for that company to get onboarded by the bank. Nothing to do with the bank, because they didn't have any audited numbers. They didn't have information, so we kept on helping each. It's a very, very tedious process. But once you get them on board, it becomes a smooth process. So I think getting banks, you can manage them. I mean, you can go down the totem pole. They have a risk team, which is a lot more difficult to manage because you're asking them to change the profile. No master agreement, no fixed collateral out there. So that's a mindset. That is still manageable. But the SME, the real SME that you want to hit, There it will take time because you need to educate them. You need to do a lot more hand-holding that the bank is willing to give. So that's why fintechs like us work out very well for them. We keep a tab, day one, day two, what's happening, how can we help? So that is where our value prop comes in a lot more. But you've nailed it. It's getting the SME onboarded is a difficult task because they do not have the information or lack the data.
I don't know if Gabby is online or not. Gabby, are you there? Oh, okay, all right. So let me just move to Taimur. You talked about the upstream and downstream, part of the supply chain financing, which are the crucial tools. But perhaps, provide, perspective from Karanda's perspective that how do you make it more seamless and efficient? I mean, obviously there are a lot of, it's not as simple as it seems.
Yeah. So, I start with the downstream, and you see onboarding a retailer, onboarding somebody who's directly, working with the consumer, interacting with the consumer, and risk profiling. Turkal, like you mentioned, that somebody has to take the risk. Mass market brands, mass market operators might not be able to map consumers, which are retailers in this case, unless it is their consumers, which means wallet operators working with retailers as their consumers, they have the financial data, they can do the risk profiling, but there's so much that they can do. The market is a lot bigger than that. The MSME is around, I heard 6 million in the morning. We worked on 5.2 million number, but anyway, it is more than 5 million. It's a big number. So coming back to the point, I think it's important for the fintechs to take up that role gap in the digital acquiring of the retailers. I think that is very important. There are platforms like Cash Now. We also saw DigiKhata here, which are kind of transforming that bit. Now, Karandas believes that it is the financing opportunity for the operators which is going to off-burden the price on MDR for the retailer. This is all downstream stuff, which means that if the fintechs are able to gather the right data, collaborate with the right operators in order to kind of analyze and score the right data, they are going to offload the risks from the balance sheet partners. And once they are going to offload or at least make the risk visible to the balance sheet partners, only then they are able to crack those partnerships. Let's take some names. Some fintech partnering with a bank or an NBFC in order to create a proposition for the retailer. Dukaan is doing that. Cash Now is doing that. Investmate is doing that. There's so many others as well, Hubble. And this is where the digital transformation is going to really help the ecosystem in getting those partnerships effective. We also believe that the price on the MDR for P2M has to come down. Currently, it is left to the market because the ecosystem is not established. Once the ecosystem is established, the earning has to come from the lending. The transactional payment-based revenue streams needs to be cut down. This is where the adoption will come from the consumers and the retailers. Only it is when they are going to collect digital payments from the consumer, they are going to pay back loans embedded in the systems on an auto debit system in order to have a better profile, a risk profile where they are eligible for more book. I'll take the discussion from downstream to upstream. And when I talk about upstream, where I believe your business is trying to impact, and it's absolutely a difficult place to operate. I can relate to that. Creating an e-invoicing system on your own is primarily not your job, but you're doing it, and it's very difficult to sustain in this market. So that is where the innovation has to happen, where the availability of data and the digital form of it is very important. So merely scanning an invoice is not digitization of it. Enabling digital data points on digitally verifying an invoice is something that is going to enable the segment on which the risk profiles can be built. And this is the alternative data to financial data that the banks can leverage in order to score the value chain partners or the value chain nodes. So this innovation, now all this conversation has nothing to do with government policy. While I do realize there are certain policy decisions that needs to be taken, our own research says that retailers are comfortable doing digital business, digital transactions. They might not get carried away with getting into tax net when it comes to small consumer payments. So I think we need to get away from that myth. Our research, for a matter of fact, knows that most of the retailers use either EasyPass or JazzCash accounts. There is a reason that they are using it. They are not a deterrent. And they are using it, doing digital informal transaction to their distributors. And now they have formalized it under the M4D transaction type. So the innovation has to come from private sector, fintechs, and banks partnerships. And the last point that I would want to emphasize over here is the role of Karandas and the philanthropic capital, where Karandas can be leveraged by the private sector in order to do some of those assessments and needs that needs to be filled. So for instance, if a bank is uncomfortable with the risk profile of a retailer because they don't have a financial data, this philanthropic capital can be used in partnering with Karandas to unfold the right delinquencies which are there in the system with the limitation of financial data, which means if we have the ordering data of a retailer and we need to build our credit scoring models, I am willing to chip in my money for risk provisioning. If there is any default, I'll take the first loss, just for you to go and experiment and unfold the real delinquencies of the model. So this is an offer on the table, and this is why we exist. This is why we want to really work with private sector in order to kind of disrupt the value chain.
No, this is great, but I mean, are banks coming to you? Do they know
Yes,
that this option exists?
So banks, FMCGs are really excited about that because it is their sales that is eventually going to get positively impacted when there's liquidity injection in the value chain. So we do see things changing, mindsets changing, but of course it takes a lot of experimentation. It takes experimentation to the nth level where the companies stop surviving, but I believe that we need to run faster. And we as the Center of Excellence for the financial ecosystem would want to play our bit in enabling or taking down some of the risks for the banks to kind of unfold the information that is currently oblivious to them.
Nee, thank you. This is very insightful. Earlier we were talking about your millions of customers, especially whether it's MCB or HBL, the big five, big six. One thing I see some of the banks lacking is in the cross-selling. So how are you taking advantage of the the digital platform and the analytics part? And because of course, I mean, everyone is interested in new to bank customers, but the existing to bank customers, they get ignored sometimes. So I'm sure there's wealth of data and customers who are SME maybe customers or who are basic merchants, whatever. So how are you doing on that front, on the cross-selling part?
So the last couple of years, we've spent a lot of time building up a significant, base of SMEs. And this includes the really small guys, the sole proprietors as well, who are sitting out there. And we've done this, it's feet on the street, it's one account at a time, it's direct selling, it's been done by my team spread across Pakistan. And like you're saying, now that we've built up this entire base, we've started sifting through the data and started getting a sizable chunk out of this, which we feel is primed for cross-selling. And so what we're looking now at is the entire asset base of the bank and figuring out what is it that we could be pitching to this, this little guy sitting out there somewhere in one of the smaller markets. And of course, it doesn't mean that you pick up a consumer product as it is and then you just shrink it down and you hand it over. We take the concept of the product and then we, like for example, let's say it's a credit card. You take the concept of the credit card and then you try to fit it into the context of this little guy. So that it's a product that can be delivered at mass scale, because we are talking about tens of thousands of accounts over here. It can be delivered at mass scale, but also at the same time protects the interests of the bank. And we want to make sure that there is no point at which we sort of run into problems with regulators or compliance, etc. So this is an area that we are very actively exploring today, and I think it's one of the KPIs I've given my team for next year, that we need to have some products identified which we can now start cross-selling in this very segment.
No, good to know, because there's wealth of data and wealth of information which sometimes gets totally neglected. So which is good to know. And just coming to the last question, because I think we are just run over our time. So Shehzad, obviously we've talked about scale, we've talked about cross-selling within this context. How do you, at MCB see that? I mean, what are the key components do you feel that, how do we scale up the, this part of the business?
Thank you for asking this, Najib. I think it's a very important topic to address. And the key thing is capacity building. And I think Taimur has and Mozam Saab have touched about it a little bit. The market needs to be educated, more, outreach through interventions by entities like Karan Das and financial institutions working together, government working together. There have been interventions here or there. There was a national financial inclusion strategy under which there were some interventions to build SME. Earlier in the day, we also heard about SMIDA being rather ineffective, Small and Medium Enterprises Development Authority, on the model of what you have in US Small Business Council and stuff. So the market forces all need to come together, because I would sort of hesitate to say that, financial institutions and large ones are solely responsible. We humans follow a path of least resistance. So we know what we know, but, to make things work, it has to be economically viable, and it has to be workable for all parties involved. So it's a lot of collaboration that needs to be done. I'm also a great believer that innovation, Mudassir talked about it, business model innovation is key, and that actually sadly takes place more at fintech's level than would ever take place at large financial institutions. Therefore, the partnership model. So the whole ecosystem will have to come together. That's how I view it.
Okay, good. Oh, she's back. Okay, so I can ask Gabby the last question. Sorry, Gabby, we lost you in between.
I'm back.
Okay, so we were just talking about scalability, and I'm just going to ask you the last question. That, it is one of the challenges, I think, not only in Pakistan, but I think globally also. So what is your perspective, I mean, in terms of how Revolut has built and scaled its lending business?
While I was trying to reconnect, I was following the discussion on my mobile, and I've seen that, the panelists were touching upon and they are like very, very valid topics across the world. Like the onboarding for both retail and business customers, and as well as like financial education. Obviously, like our success, and this is a question that we are getting, most of the times, is like how did we manage to acquire so many customers? And I think and actually I think that this combines my perspective on both topics, is that we made it simple for the customers, because there may be some geographies where people are very financially educated, but where I come from, we are facing the same challenges that you are facing in Pakistan, meaning that the financial literacy is not at its peak. Yeah, so we are still struggling with the financial inclusion. And there are a lot of efforts to that the government payments organization banks are doing for over 20 years to improve the financial education, but still it seems that it's not going so well. The reason is, and I think that, you know, maybe this is not valid for Pakistan, but definitely valid for Romania, it's that, you know, as bankers, and, you know, I spent my last 25 years in banking, we sometimes tend to do the financial education tends to be a little arrogant, if I may say, you know. So how Revolut solved this problem is that actually they or we demystified, you know, the financial services, and we put them at the disposal of the customer in a simple, easy, and very, you know, like on easy to understand, irrespective of your level of financial education, you know. So we didn't use banking jargon, you know. So you can be compliant, because obviously this is the most important thing, and but you have to speak to people in their own, you know, language, a language they can understand, and in a way that they don't need you every step of the way in order to be able to consume your products and services. You know, I think that this is where the big difference happened, you know. So, you know, simplicity is the ultimate sophistication. And sometimes we forget that actually to make it simple, you know, so there are two parts. It's the whatever financial provider and the customer. And somewhere it has to be, you know, like complicated. So we took this complication in order to make it simple for the customer. Obviously, this requires more work, more, you know, better evaluation and deep analysis. Typically, all the decisions that we make, they tend to be data driven, you know, so we don't take qualitative. And despite, you know, there may be a lot of experience that we are bringing on the table, we are always trying to cater to a specific need of the customer, and to, you know, make sure that that's catered in a way that in a simpler way that has been done before by any financial provider. You know, so I think that simplicity and frictionless are, you know, the keywords that are, you know, will be able to improve the financial education of the piece. So probably it's not necessarily on what you are offering as a financial provider, but more on how you are doing this. I think that this is like how, this is the key, you know, like the magic word that will make the difference.
No, I think it's very insightful, and I think in this market also we are trying to achieve that, you know, be as frictionless and as seamless as possible. But we still have a long way to go, especially in the various segments, you know, that we operate. And but it's been a great, you know, learning from Revolut's perspective also. And I take this opportunity to thank each and every one of our panelists and yourself, Gabby. And before we wrap up, I don't know if you have time for maybe one or two questions from the audience, if anyone wants to have a go. I guess. Oh, okay.
Hearing throughout the day about the resistance of retailers coming onto a digital platform because they'll have to join the tax net, and I think each of you covered it to an extent, but I'd just like to get clarity. What are your opinions? Is that a real obstacle? Is it a myth? I think as we spoke about, I have opinions on it, but I'd love to get the expert views of the panel.
Mona, since I spoke about it very openly and wanted to bust the myth, so yeah, my or our stance is that there are multiple tiers of cities here in Pakistan and multiple tiers of merchants here in Pakistan. There are large-scale merchants which have thin margins. There are small-scale merchants which have bigger margins. So it totally depends on the sort of business they're into. MSME is more than 5 million. Yeah. Experiment not even done on 300,000. I think we have a long way to judge before we say that there is a clear-cut problem on getting into the tax net. Maybe your company can.
thing you are talking about is limited to small merchants, because if you construct a house, I recently did, so whenever I go to a tile manufacturer or tile shop, sentry shop, etc., these are the large ticket items, and they are very hesitant even to get transfer through into their accounts as well. They just want cash, and that is the only way they want. Keep aside the digital payment or card payment.
Yeah.
So is it your observation, what you're talking about is primarily towards small merchants, or you have researched some data on large merchants as well?
So it's primarily logic-based analysis where small merchants having thin margins or small merchants having larger margins. So categories can exist. So for instance, if you go to a merchant and they are doing 100 million sales a month, fridge वगैरह बेचते हैं, electronic accessories, and there's so many others, bigger ones, housing accessories. So I mean, they would want to shy away from taxes, so you can't drag them to digital payments. वो तो MDR भी आपको as a consumer shift कर देंगे. But then there are smaller merchants who are doing consumer to merchant transactions through IBFT or a P2P transaction through Rast. So at least the payment is landing into an account, whether it be a consumer account and might not be a business account, but they know that they are comfortable. Let's say payments less than ₹1 million a month is something that anyway doesn't get into the radar, and there is no need of even mentioning the radar. If you are providing convenience to the merchant, I think that should be the key. So when I said we don't have enough empirical evidence, I mean 300,000 merchants on QR payments, maybe if we include the POS devices as well, maybe 400 merchants. We don't have the data to kind of judge if they really don't want to go there. Had it been the problem, the 400,000 would have not been already enrolled, and micropayment merchants more so.
I would add that as far as we have been talking about incentivizing the digital payments and cash, card payments, we will have to, as a government, incentivize the merchants as well. Like we will have to give them tax credits and tax breaks, so that merchants are also inclined towards acceptance of digital and card payments.
जी बिल्कुल आपका point ठीक है, and Shahzad Sahab did touch upon it by mentioning that there has to be an ecosystem activity, which also includes the policy side, policymakers as well. I specifically took the stance that there is so much other than policy that could be done in innovation and disruption through private sector partnerships that is still not tested, not experimented in Pakistan. However, it doesn't take away the impact of policy changes. I am not a policy expert, so I really don't want to speak about that, but certainly policy is going to enable the segment and the ecosystem as well.
So Monis, I just want to add my comment. In words of Viktor Frankl, it's Victor Hugo, sorry, it's an idea whose time has come. So I think it's just that we've got to scale it up. We've got to experiment a lot. From a very, very dated experience, I remember once in my life, in a given 2 years' time, I met 5,000 people and asked them to buy something, and I had a conversion rate of 7%. So I mean, at a certain level of abstraction, you've got to try hard to make a market out. So I think we are out to make that market. So we should just go out and create this market. Let's take it offline.
I think
Togrul,
there is going to be tea right after this, so tea and refreshments.
Togrul, if you can make your last comment.
Okay, very quickly. No, I think the question you asked, Monis, is a brilliant one, and I'd just like to refer back to what Gabby said, and I think that's the answer: simplicity and frictionless. So the more friction we introduce into the process of onboarding these merchants, the tougher job that we are making our own lives more difficult. And I think there are only a few things, really, if you pick it out. They have concerns, especially merchants who are sitting outside the formal economy, have concerns about becoming a part of the formal economy simply because they don't know what else it will entail. And I think getting them to try this system and showing a net benefit for them, that's really important. And I think the taxation part is something that could really create an incentive over here. We've already seen a shift when in restaurants we dropped, from 15% to 5%, and we saw how the volume started picking up. So I think we have to take that same approach if the government really thinks a little long-term about this. Bring people in first before we start taxing them. And then the second thing that we've really got to work on is that MDR issue. And I really think that this is where banks need to start thinking about the possibility of a zero MDR future. Because we need to take, especially for Rast QR, we need to start taking the MDR out of the equation. That's not where banks will make money. Where we will make money is when, the value add services start coming on top, which includes lending as one of the propositions. Yeah. And that's really when we do these two things, we take them away, we stop talking about the MDR with the merchant, we stop scaring them with documents and what will happen in the future. And then we show a net benefit, that this is the benefit we'll give you today, not 6 months down the road, not 1 year down the road, but today. That's where really the conversion is going to happen.
Great. All right, so thank you once again, all the panelists, for taking out the time and giving us your incredible insights. I also take this opportunity to thank Hamza and his team for organizing this wonderful event. So thank you, Hamza, and thank you, everyone.
Thank you. So we have Hamza and Monis to help us give away the mementos. May I request the memento for Tughril Amir Turabali, who's the Executive Vice President of Head of UBL Pay at UBL. As a panel, it's really tough, and as a speaker, it's really tough to survive and sustain yourself throughout the course of the day, but equally tough, equally more challenging is the audience that sits through it. And for those of you who are here, hats off to you. So this is where the knowledge share comes in, and this is where the reward comes in. May I request the memento for Mr. Shahzad Isaaq, who's the Chief Digital Officer of MCB Bank. Modis, you have to stay on stage. May I request the memento for Taimur Ali, who's Group Head DFS Projects at Karandaz, Pakistan. And while we present this memento, I'd also like to take the opportunity to thank Gabriela Simeon, who's the General Manager and Head of Lending at Revolut. She joined us online, had some technical issues, but we finally made it through. I'd like to present a token of appreciation to Muazzam Ahmed, who's the former Senior Country Officer at the IFC World Bank Organization. Thank you for your insights and for your commentary. And of course, our brilliant moderator, Mr. Mir Najib Rahman, who's the advisor to the Pakistan Bankers Association. Najib Saab, I've seldom seen moderators who make it look so easy.
So this would not be a justice if I just present the shield to Mir Najib Rahman. I must, acknowledge from the bottom of my heart all the help that he extended to me, not only for this conference, but various previous ventures as well. So he is a, thought leader in his own right, an authority, someone who I look up to. And this was only incidental that he, at that time, was also advising Pakistan Bank Association on this very particular topic. So that was a good fortune to us. But otherwise, also on a personal level, he is like an elder brother and always available to us. So with this, I would like to present him this memento. Thank you.
And if I could request all the gentlemen to form a group for a group photograph.
Thank you very much, everyone, for your patience and for being a wonderful audience. With this concluding session, we have now come to a close. Till next time, goodbye and Assalamu alaikum.